Okay, let's start. Okay, just a minute. Just give me a minute. Can any one of you guys check and let me know on YouTube whether it's streaming now?
Yes, sir.
It is, huh? Okay. Okay. Cool then. Sorry, I ghosted in between. Okay. Just a minute. Right, guys. Let's start. Okay. What happened? Yes, Praveen? There's a time lag. In YouTube, there will be a time lag for sure. Please don't watch on both the platforms at the same time. So in YouTube, definitely there will be a time lag. That's how YouTube works. So we can't do much about it because YouTube is not a, it's not a video call kind of a setup, whereas Google Meet is such. So there will be slight, some 5 seconds or something like that will be there. That's why it's a one-way communication platform. It's not like a two-way communication platform. That's the reason. All such platforms are like that only. Okay, guys, is everyone ready? Shall we start? Let me just see the count here. Wow, great. Okay, hi everyone. Yes, if I start saying hi to each and every one of you personally, I think by the time the revision batch itself will get over. Or fine, let's start. Okay. By the way, guys, even the ones who are watching this on YouTube live right now, so the recordings will be available. You need not have to worry about it. Don't take the pain. Don't think that, sir, if I missed out something, how am I going to do this? Do not worry. The recordings will be there. Like, I will edit and I will put it there. You need not have to worry about it. Right now, just stay focused on, the best that we are going to do right now. Whatever it is, the time is limited. Make the best use of it right now. That should be your only focus. Take running notes and do all of that. Once I officially start, I will anyways give all these things, and this recordings will be available forever on YouTube. You need not have to worry about it. Clear? For some reason, if you are not able to watch it right now, for your friends or someone has told you that they are not able to watch it, do not worry. This will be there on my channel forever, so do not have to worry about it. Okay? Yes, let's start. Hey folks, welcome you all to a new session. This is CA Ganesh Bharadwaj. So now, let us get started with this beautiful costing revision, right? And as per the latest syllabus introduced in 2023. So now, guys, before we get into, directly into this particular revision, first, let me give you an introduction regarding the chapters that we are going to cover, right? And also regarding the coverage in terms of marks and what you should be doing at the time when you are watching the lectures, be it a YouTube live or a Google Meet live, or even later on a recorded mode on YouTube, anything. But there are certain disciplines that you need to maintain from your side so that, the learning experience will be massive. Right, guys? Fine. So now, before that, first, this is our material exclusively prepared for our revision, costing revision. I hope you all have got a copy of that. Copy as in, I mean the soft copy only, right? So please use this book because we'll be following this book only throughout our revision. And this book has been carefully designed in such a way that all the major concepts are getting recapitulated throughout our entire revision marathon, right? That is number one. And a few limited numerical problems will also be done. So don't think that I'm just going to say, these are the concepts here. So I'm not going to give you, I'm not introducing you to the CA curriculum. So here we are here to revise. So obviously I will also be doing numerical problems. Nothing need to be worried about it. Okay, fine. And yes, as I've already told you guys before, this is going to be the coverage of our, our revision batch. So now here, if you see cost sheet, overheads, ABC, these three chapters will be covered in part 1, right? For those who are watching it right now on live, will be covered in day 1, right? Then marginal costing and process costing. So this will be covered in day 2, right? These are big chapters, and that too, marginal costing is the biggest chapter of all, right? If you have watched our regular lectures, marginal costing alone, I think it came up to about 25 to 30 hours. We did about 31 numerical problems. Extremely exhaustive, a big chapter, but yes, we will be revising. Almost all the concepts will be revised here. Nothing needs to be worried. Then yes, the next 3 chapters, service costing, cost accounting systems, and material cost, this will be covered in part 3. And finally, you will have standard costing, budgetary control, unit batch, and job costing. Technically speaking, unit batch is 1 chapter, job costing is another chapter. So the 12 chapters we are going to cover, and these 3 chapters will be coming in part 4. So this is going to be the agenda. And apart from this, we are going to do 150 plus MCQs and all the theory questions from all the chapters pertaining to our CA Inter costing syllabus. Clear with this? And these 150 plus MCQs and theories are basically, I'm going to take it from our regular recordings itself. I'm going to give it to you. So this is going to be the overall coverage of this particular revision batch. Are you clear with this, guys? All right. Now, one more thing. Please have the habit of catching up running notes, because as you know, this is going to be a revision batch. If you have attended my regular batch, you will be knowing much more the importance of the running notes that I keep telling you guys. So running notes is very, very important. So your ears should hear, your mind should process, and your hand should write. That's how it works. That multitasking ability will pay you off definitely in your exam hall, because an exam hall is going to be a very, very pressurized environment. Right, guys? So please catch up running notes, because not everything might be mentioned in the material itself, right? That is one thing. And number 2, I know there would be a lot of questions regarding, sir, I have not at all touched costing. So is this revision batch sufficient for me? This is a very common question that I keep getting. Now let me make it very clear. Our regular batch is for 160 hours, and right now we are doing a revision, as the name suggests. So obviously, if you're watching this revision, of course, the ones who are watching it live, you're just a couple of weeks away from, or not even, less than a couple of weeks away from your main exam. But even if you're watching it later on, right, obviously the revision batch is generally done. So you revise it only after preparing it once. So the prerequisite here is that you should have at least learned the subject once. I mean, not necessarily from me, self-study, or from another faculty or anywhere, but at least you need to know what the subject says. But definitely, irrespective of your level of preparation, one thing I can assure you is that, yes, this is definitely going to be worth your while. That is, whatever is the limited time available, in that limited time, I will make sure that we are going to give our level best and make sure that we will be learning the maximum possible. Clear with this, guys? And these chapters put together will be coming up for a coverage of 90 marks out of the 120 mark component in your exam. By the way, your exam paper gets prepared, it gets printed for 120 marks, out of which you need to write for 100 marks. And of course, the coverage that we're going to do here is going to be for about 90 marks. Clear with this, guys? So these are certain things that I wanted to tell you well in hand before we get into this particular revision lectures. And guys, if you are, which many of us generally do before the exams, we keep trembling with fear, we don't know what to do. Let me tell you one very, very eye-opening fact. CA exams are not difficult to pass. Trust me, honestly, I'm telling you, because I have experienced both failures and I've also made it to the top in my intermediate level, and of course I've literally failed multiple times in my final as well. So I know what exactly this student mentality would be, because I myself have been through that. Let me tell you, I'm telling this with my personal experience, both from my side as well as with the students that I've interacted till now. It's quite difficult to get a rank in CA. At the same time, it is difficult to fail also. I am again telling you, it's difficult to fail, meaning what? It's relatively easier to pass. The problem is not with the syllabus, or the problem is not with the subjects. The problem is here with the mind game. So we are being constantly wired in such a way that no, CA exams are difficult. It's it's difficult to pass. Guys, you all have spent so much time with spending along with your books and sacrificing so many other things. At the end of the day, what is there a question? Should we even ask a question? The question is not for passing. It may be for exemption. So please throw out all these kind of what do I say? The rumors that you are made to believe. If you have worked for it, you will get it. That's about it. Clear? And of course, one more thing is the strategy part. That's why there is a logic for the sequencing of these chapters, because this is not the sequence that I follow in my regular lectures. In the regular lectures, the sequence will be a logical flow of understanding the subject, whereas here the sequence is based on the importance. The first 5 chapters itself is going to contribute more than 50-60% of the entire syllabus in terms of marks. That is the importance of the first 5 chapters that we are going to do. Clear with this, guys? Any doubts? Anything here? Any issues here? Shall we get started with the first chapter? Guys, yes, you guys can unmute and participate. The ones who are on Google Meet and the ones who are watching this on YouTube live, you guys can comment. Hello? Yes? Come on, guys. Yeah, let's start. Shall we? Yes. Okay, guys, fine. So now let's get started with the first chapter, cost sheet. So now, please take your the revision handbook that I've given you. So that's about the first chapter, cost sheet. So now, first, every time we start a chapter, I will be giving you guys a background so that it helps you to recollect whatever you would have learned till now, and we will enter into the core of the particular chapter, and apart from that we will also be doing the numerical problems. So this is going to be the manner in which I will take you forward with this particular revision batch. Now first, this is about cost sheet chapter. Now generally this chapter gets tested for about 10 marks, right? Every attempt. This has been the case for the last 8 or 10 plus attempts. Every attempt they generally test this particular chapter for about 10 marks. Now before we get into this particular cost sheet chapter, now there are a few backgrounds that you need to understand before entering into this particular area. Now our subject, cost and management accounting, broadly has three objectives. We have learned it. What are the 3 objectives? Guys, unmute and participate. Come on. And the ones attending this on YouTube live, please post your use the chat box to write it. Come on, guys. Come on, unmute. I don't have a problem. Come on, tell me, what are the 3 objectives of a subject? Yes, stock valuation and profit computation. Yes, guys, come on. Decision making and control, right? Now from the perspective of stock valuation and profit computation, the costs can be classified into expired cost and unexpired cost, right? Now to understand what cost will expire, what cost will not expire, for this you need to know what is a product cost and what is a period cost, right? And to know what forms part of a product cost and what forms part of a period cost, you need to know what you mean by manufacturing, administrative and selling and distribution expenses. Clear with this? Now do not worry, I will once again give a background of each of these things, and then we will enter into the the format of cost sheet. Now guys, imagine in a company there are three locations. There are three locations. One is a factory shop. One is a factory shop. Then you have a corporate office. A corporate office where the board of directors will be sitting. And then you have a sales depot. You have a sales depot, right? Now, what happens in a factory? In a factory, the manufacturing activity will happen. That is, you purchase the raw material, right? You incur your labor and some other factory related cost, and the raw material gets converted into FG. This activity is called as manufacturing activity, correct? Now, in a corporate office, what activity will be happening? Your administrative activity will be happening. By administration, you mean what the major decisions will be taken, right? So what should be the selling price that I need to fix? Should I open so many new factories in which area? So these are basically something that the board of directors will be doing. And now what happens in a sales depot? The selling and distribution activity will be happening. That is, they will pack the products and they will be dispatching it to the customer place and all. So the sales activity will be happening. Are you clear with this? Now, the factory related cost can be broadly classified into direct material, direct labor, direct expense, and production overheads. Now, in your factory, broadly, these are the four expenses that you incur. Your direct material, direct labor, direct expenses, and your production overheads. What do you mean by a production overhead? A production overhead refers to all the indirect costs that are incurred inside a factory. So the first three costs, direct material, direct labor, and direct expenses, these are called as prime cost. Because these are directly traceable on a per unit level of every single product. So if I am producing one product, I know one unit of a product, I know how much amount of material is required for it, how much amount of labor is required for it, how much direct expenses is required for it. For example, let us say I am a car manufacturing company, right? An example of direct material would be engine, right? So for every car that I manufacture, I need one engine. I can establish a direct relationship between this. Correct, guys? Yes. Now, the example for direct labor would be your assembly line worker. That is, to manufacture every car, I need to necessarily fit how many doors? 6 doors. That is 4 doors on 2 doors on 2 sides and 1 dicky and bonnet. Correct? Now every door fitting activity, right, needs to be done by one particular worker, and he takes 1 hour to fit 1 door, which means to manufacture one car, I can clearly come up with a relationship saying that I need 6 labor hours, and every labor hour I am paying at the rate of 100. So for one car to be manufactured, I need 600 rupees of labor. Like this, on a per unit level, I will be in a position to trace my costs. That is why this also forms part of my prime cost. An example of direct expense would be royalty payments. For example, in our regular batch also, I would have given this example. What example I gave? Can anyone tell me if you guys remember? Anyone here from the regular batch who's attended? Guys, anyone? Okay, fine. So so here, for example, Maruti Suzuki. Yes, you guys know Maruti Suzuki, right? So now in Maruti Suzuki, what they do is actually, this is a joint venture agreement between Maruti Udyog Limited, an Indian company, and Suzuki Incorporation, which is a Japan-based company. So every time Maruti manufactures a car, they need to pay, let us say, 50,000 rupees of royalty to Suzuki Incorporation. Now, is this a direct material cost? No. Is this a direct labor cost? No. But it is some direct cost only, but neither material nor labor. Hence, we classify it under direct expenses. Are you clear with this? So, a direct cost which neither fits into the category of direct material and direct labor comes under the category of direct expense. Sir, how are you calling this a direct cost? Because every time I manufacture one car, I need to pay Suzuki Incorporation 50,000 rupees. Sir, is this related to production? Of course. Why are you paying him? Are you donating him some charity? No. He has given you the technical know-how as to how to produce this car. Hence, you are paying it as a remuneration for him. So, it is a direct expense. Are you clear with this, guys? So, these three are the components of prime cost which are readily traceable on a per unit level, right? Now, inside a factory, will you be only incurring direct costs which are readily traceable on a per unit level? Not necessary. Not necessary. For example, in a factory, you might be having your supervisor salary. Who is a supervisor? He is not a worker. He is the worker's boss. What will he be doing? He will just tie his hands like this and see whether the work is happening or not. Correct? Now you tell me, can I establish a relationship by saying, for every 1 hour, this guy ties his hands and oversees his workers, 1 unit of car will be produced. Can I establish a relationship like this? No. Hence, it is an indirect labor cost. Correct? So, indirect labor will also form part of production overheads. Any kind of indirect costs incurred inside a factory will be fitting into the category of production overheads. Are you clear with this? Another example, factory rent. Factory rent. Is it incurred in the factory? Yes. So, it is a manufacturing activity related cost, but it is not directly traceable on a per unit level of a product. So, let's say every month I am paying 1 lakh rupees to my landlord. Clear with this, right? Now, this 1 lakh rupees, anyways, I'm going to pay him whether I produce 10,000 units that month or I produce only 100 units that month. Correct? So, I can't establish a direct relationship between the rent payments and my output. In this case, this is also an example of production overheads. So, guys, nothing to be complicated here. Very simple. Any costs incurred inside a factory, it can come only under these 4 categories. Are you clear with this? What are the 4 categories? Direct material, direct labor, and direct expenses. These 3 put together are called as what? Prime cost. Prime cost means your direct cost, right? And then you have something called as production overheads. What do you mean by production overheads? All the indirect manufacturing costs incurred inside the factory. Be very clear. That's why they are using the word production overheads. Clear with this? Overheads as a general name means what? Any indirect cost. Correct? But those indirect costs incurred in the corporate office sales depot, they are different. They will be treated as administrative overheads, selling overheads. They are different. Whereas the indirect cost incurred inside the factory alone will be called as production overheads. Are you clear with this, guys? Are you clear with this? Now, moving on to the next location in a company, which is a corporate office, right? So, in a corporate office, typically what happens? The board meeting happens, your director's remuneration, your auditor's fee, your accountant's salary, correct? So your factory buildings your office buildings depreciation, or if that office place is taken on rent, the rent payments, all these form part of your administrative overheads. In this case of administration cost, you don't have further classification as direct, indirect and all, nothing doing. Clear with this? All the costs incurred inside a corporate office are taken as administration overheads. Clear with this, guys? Similarly, on the other side, any costs incurred with respect to the sales and distribution activity are classified under selling and distribution overheads. Are you all clear with this, guys? Are you all clear with this? Right? So now, sir, why do we need this classification? Why do we need this classification? Because now, for the purpose of stock valuation, right? What do you mean by a stock valuation? Every time I produce and keep 1 unit, right? That stock needs to be valued, right? Stock is always valued at full manufacturing cost. Are you clear with this, guys? Stock is always valued at what? Full manufacturing cost. Clear with this? When I say full manufacturing cost, your direct material, direct labor, direct expenses and POH put together, every time you do a stock valuation, it gets valued at manufacturing cost. This is the reason why when you are preparing traditionally your trading P&L account, if you see here in your trading, you will be having all your factory related expense here, and your closing stock will be coming here. Correct? No? Then what will you do? You will arrive at the gross profit, right? Now, what happens here is this gross profit is being carried forward here, and from here you knock off all your other expenses called as SOH and AOH, all the other expenses, finally to arrive at your profit. Or in other words, have you ever wondered why stock gets valued in the trading account and not in the P&L account? It is because of this logic that stock should always be valued at manufacturing cost. For the purpose of stock valuation, you should not consider your administration overheads and selling overheads. Are you clear with this, guys? This is a very, very important understanding. That is the reason why most of the complications happen with respect to the manufacturing cost areas. Right, with respect to AOH and SOH, these costs are very simple because they are anyways P&L items. They get knocked off against my revenue in bulk to arrive at the profit. Whereas what happens with respect to manufacturing cost? So whatever is the manufacturing cost is here, a portion of it escapes to the next year or remains unexpired and gets carried forward to the next year by way of stocks. So the stock valuation issue comes only with respect to the manufacturing cost. That is the reason why. So only with respect to the manufacturing cost related components, we have a lot of calculations in this entire subject. Are you clear with this? And the costs that are considered for the purpose of stock valuation are called as product cost, and the stocks and the costs that are not considered for the purpose of stock valuation are called as period cost. Are you clear with this? In our case, the product cost is nothing but manufacturing cost. The period cost is nothing but your administration overheads and selling overheads. Are you clear with this? So here the product cost, when I call it, the product cost is what? Manufacturing cost. Guys, what is the manufacturing cost? It has 4 components in total, right? 3 components that form part of your prime cost, and 1 is your production overheads. Clear with this? And then you have something called as period cost. Period costs are not considered for the purpose of stock valuation, right? And this period cost basically is nothing but AOH plus SOH. Are you clear with this, guys? Are you clear with this? Right? This is a basic understanding that you need to have before you enter into the subject. Are you clear with this, guys? Right? Now, one more thing. This period cost is there, no? AOH and SOH, it expires fully. What do you mean by expiring? That is, it dies fully in the current period itself. So this entire amount hits my P&L in the current year itself. Correct? Is there any amount of AOH or SOH I carry forward to the next year? No. Whereas with respect to the manufacturing cost, a portion of the manufacturing cost remains unexpired. What portion is that? To the extent of closing stock. Are you clear with this? Are you clear with this, guys? Are you clear with this? So here, can I come to a conclusion by saying period cost will expire fully. Period cost will expire fully. Whereas the manufacturing cost, what happens? It expires only to the extent of cost of goods sold, and it remains unexpired to the extent of closing stock. Are you clear with this, guys? Are you clear with this? My manufacturing cost remains unexpired to the extent of closing stock, and it expires only to the extent of cost of goods sold, and hence we started off with this concept of expired cost and unexpired cost. To sum up whatever I have discussed till now, expired cost means what? The cost that gets fully dies in the current year, that gets fully knocked off against the current year sale to arrive at my profit. Whereas an unexpired cost is the cost that escapes from the current year and gets carried forward to the next year. The only unexpired cost is what? The manufacturing cost to the extent of closing stock. Are you clear with this? Or in other words, what expires is what? What expires is product cost expires to the extent of cost of goods sold. My period cost expires fully. What is a product cost? All the manufacturing cost, that is my prime cost components plus my production overheads. What is my period cost? My period cost is going to be my administration overheads and selling overheads. Are you clear with this, guys? This is a very important introduction you need to know before even you enter into the subject, right? So basically This is something that I discussed for about 1.5 to 2 hours in a regular batch. So I've tried to condense it even for the benefit of everyone, right? Even if you have not attended the regular batch, I just wanted to set the context right, so that this will act as a launching pad to enter into the subject. Are you clear with this, guys? Right? Now, one more thing that I want to tell you. Now, I just told you right now, as of now, what are the costs that we have considered? The costs incurred inside the factory, guys, yes. The costs incurred inside a corporate office and the cost incurred in a sales depot, right? Now, what about interest? What about dividend expense? These are also costs for me, no? What about taxes, income tax, right? Now, always remember, our subject costing considers only the costs that are incurred in these three areas. Are you clear with this? Interest, finance related costs, dividend, income tax, they are not at all considered in our subject. Sir, what is this, sir? Then our subject is incomplete. No, the profit reported by our subject is called as operating profit. Are you clear with this? It is called as operating profit, not my net profit. So here from the sales, I adjust for all the costs that are related to my operations. I arrive at my operating profit. Operating profit is also known as EBIT. Are you clear with this? Right? From EBIT only, the finance related costs will be subtracted, which is a subject matter of discussion in your financial management. Are you clear with this, guys? So here the ground rules are set, right? So they have clearly identified whose area is what. So your FM starts from the point where costing ends. Are you clear with this? So in costing, we do not consider any kind of non-operating expenses or non-operating income. The only income we consider here is a sales revenue, right? So rental income, dividend income and all, we will not take it into consideration, because our objective itself is not with respect to reporting the final profit and all. That reporting of profit to the shareholders is actually the objective of financial accounting, not our cost and management accounting. Are you clear with this, guys? Are you clear with this? And one more thing I wanted to tell you. I told you that our subject has three objectives. The three objectives are stock valuation, profit computation, decision making, and control. Our subject doesn't have one objective. Our subject has three objectives, right? Whereas in your financial accounting, if you see, the objective is what? Prepare your financial statements, correct? Your balance sheet, P&L, your cash flow statement, and present it to the outsiders, that is the end users of the financial statement. There, the objective is different, right? Here, our objective is completely different. We are not going to report or show our results to any outsiders. The entire subject of cost and management accounting is purely for internal purposes. Clear with this? We are not going to report this. In fact, we should not report it, because these are all some confidential data. Just imagine you go to a nearby shop and buy a pack of milk bikis, and they are saying the MRP is 10 rupees. Suppose Britannia has released their cost sheet, you will be shocked to know that per packet they are making a profit of 6 rupees. Who knows? I mean, I'm just giving you a random example. If they have disclosed that per unit of a product they are making, the cost is only 4 rupees, but they are selling it at a selling price of 10 rupees. Now, what will you do? You will start a protest, right? First thing you will do is you will block all the roads, and we will all sit together, protest, ask Britannia to reduce the price. Obviously, the reason why I'm saying this is, yes, costing is always a confidential information. It is meant only for internal purposes. That's why even if you go for statutory audits, they will not entertain. At the end of the day, even auditors are outsiders only. They will not entertain the auditors to get to know about the internal costing and all in depth. No, to the extent that is required for the audit, they will give. That's about it, because that's a purely internal matter. That's a business secret. If they let it out, then obviously it is not going to, it's only going to pull down their business. Are you clear with this, guys? Now, as I told you, our subject has three objectives. Certain chapters of our subject are going on to achieve the objective of stock valuation, profit computation. Certain chapters are towards the objective of decision making. Certain chapters are towards the objective of control. Clear with this, guys? For example, the chapters of cost sheet, overheads, ABC and all, they fit into category 1, that is stock valuation and profit computation. Clear with this? Chapters like marginal costing, right, budgetary control, these chapters fit into the category of decision making. Chapters like your standard costing and even one part of budgets and budgetary control, these chapters fit into the category of the control objective segment. So the main reason why many students find costing difficult is they don't know how to approach the subject first, because you cannot see all the chapters from the same perspective, right? If a particular chapter helps you achieve the objective of stock valuation profit computation, then cost needs to be looked at from the perspective of manufacturing, administrative, selling, right? The moment you move to marginal costing, there, we will be looking at the subject from the perspective of fixed cost and variable cost. Why? This is the perspective from which the cost needs to be looked at for the purpose of decision making. Are you clear with this? There, we are not bothered about the location where the cost is incurred. There, we are more bothered about the cost behavior, that is your fixed or variable in nature. Clear with this, guys? So, based on the objective a particular chapter is going to achieve, you need to know from which perspective cost needs to be looked at. Are you clear with this? Are you clear with this? Right? Just to give you an example, have you guys been to an airport? Have you all been to an airport? Right? Airport. Yeah. If you see in airport, basically, right, this example I've already given it also in our regular batch. But anyways, let me just give this example once again to appreciate this particular whatever statement that I just made right now. Now, in an airport, basically it's meant for transporting human beings, right? Yes, of course, animals are also transported, that's different, but predominantly human beings, correct? So exceptions are not examples. So predominantly human beings. Now what happens, let's say you want to go abroad, let's say to the US or somewhere abroad. Now you can't directly board this flight like how we catch our trains and all. So there is actually a process they follow, right? So what happens is initially when you enter, they do something called as, a security check, correct? So in the security check area, what they do is the same human beings only enter, but the human beings are classified into male and female, correct? Yes, guys, right? Both male and female are human beings, but here they classify it into male and female, correct? For the purpose of security check. After the security check is done, right? Everyone comes together. Then there is a place called immigration, right? If you're traveling abroad, there, the immigration in that counter, if you see, they are not bothered about your gender. What they are bothered about is actually whether you are an Indian citizen or a foreigner, right? Because the procedures for an Indian citizen and a foreigner are different. Here it makes sense to classify the very same human beings as Indian citizens and foreigners. Clear with this, right? Now after the immigration is over, finally you go to the boarding gate, right? Boarding gate, that is the place from where you actually enter into the aircraft, right? There, the airline company staff will be there, like beautiful staff will be there, right? So what they do is, they are not bothered whether you are a male or a female. They are not bothered about whether you are an Indian citizen or a foreigner. There, the very same set of human beings will be classified as economy class, business class, and first class. Why? First class means they will give you one red carpet. Yes, they will assist you and all, right? And business class means the carpet will still be there, but no assistance. Economy class, you get in, that's all, right? Based on the money you pay, the respect will be, you will be treated accordingly. Basically, guys, right, I'm just dramatizing it so that I can drive home the point. Basically, what I'm trying to say is, sir, human beings are human beings, sir. What is it you are saying in one place? You want to classify cost as manufacturing, your administration, selling. In another objective, you are saying, look at the same cost from the perspective of your fixed cost, variable cost. Look, here also, they were all human beings. Based on the purpose you want to achieve, right, the classification becomes different. That is what I want to tell you here, because for the purpose of stock valuation and profit computation, the same cost needs to be looked at from the perspective of manufacturing, administrative, selling. Clear? Whereas if you are in a decision making area, if you're using the concepts of costing for the purpose of decision making, Now look at the very same cost as fixed and variable in nature. Are you clear with this, guys? Are you clear with this? Then for the purpose of control, theoretically there is one classification called as controllable, uncontrollable, right? There is not much of relevance for numerical solving of the particular subject. That anyways we'll be seeing it at the time when we are doing standard costing. Clear with this, guys? But this entire subject revolves around the two types of cost classification. One is your manufacturing, admin and selling. The other one is your variable and fixed. Are you clear with this, guys? You should know when the cost needs to be looked at from which perspective. Clear with this, guys, right? That is about the introduction. That is about the introduction. So now let us get started into this particular cost sheet format. Now I don't know how many of you guys would have mugged up the format of cost sheet. Guys, let me tell you one thing. Mugging up anything in subjects like costing and financial management is not even a sin. It is a crime, because this entire statement that we had here, right? Mark my words, in the next few minutes, you yourself will be able to tell this entire format by yourself. No need to mug up even a single line item. That's my commitment. Why do you think we have spent the last 30 minutes? This is not something to just give you a background alone. Now if you enter into this area, you will be able to appreciate it in a much better manner, and of course you will be able to tell the format all by yourself. Are you clear with this, guys? There is a beautiful saying of Abraham Lincoln: give me 6 hours to chop down a tree, I will spend the first 4 hours sharpening the axe. So if you have some time, someone is giving you a time to perform a particular task, don't directly jump into the task. He says, I will spend the 4 hours in sharpening the axe. I will do the preparation in such a manner that the execution will just take 2 hours out of the entire 6 hours. Clear? That should always be your approach. Right now, we saw this introduction. Now you yourself will see how easy this format of cost sheet is going to be. Clear with this, guys? So now let us get started into this format of cost sheet. Now, what is this format of cost sheet? Basically, this cost sheet is nothing but your P&L account in an inverted format. It's a P&L account in a statement format. That's all. Clear with this, guys? So what they are saying, the first line item is called as direct material consumed. So how do you arrive at direct material consumed? Opening stock of raw material plus purchases minus closing stock. Fine. You get the direct material consumed. Add your direct labor. Add your direct expense. I told you material, direct material plus direct labor plus direct expense is called as prime cost, right? To this, add your production overheads. You get your gross works cost. Add opening, closing, WIP and all these things are there. Sir, what is this? Why have they given so many line items? Now, look at this. Look at this. Now, guys, for you to understand the format of cost sheet, there is something called as flow of cost that you need to know. There is something called as flow of cost that you need to know. If you know this, automatically it's going to be a cakewalk. You need not even take efforts in remembering it. Clear with this, guys, right? Now, I told you in a company, there are broadly 3 locations. There is a factory, there is a corporate office, and there is a sales depot. Correct, guys? Now, let us zoom into the factory. Let us enter into the factory. Inside the factory itself, there are further 3 locations. There are further 3 locations. What are the 3 locations in a factory? One is called as stores. Stores is a place where raw material is getting stored, right? Then you have a place called as a factory shop. Factory shop is a place where the machines are there. The raw material is getting fed into the machine. The processing happens and raw material gets converted into an FG, or in other words, here is where the work is in progress. Are you clear with this? And once raw material gets converted into FG, now I will keep it in a warehouse. Are you clear with this? I will keep it in a warehouse. This is the place where my FG stock is stored. So broadly, when I say stock, there are 3 different types of stock itself. Correct, guys? Yes. Are you able to understand this? I have RM, I have WIP, and I have FG. Clear with this, guys? Right? Are you all able to follow this? Now, look at this. What are we trying to do? First, we are trying to calculate the total cost that we are incurring with respect to the production, right? So your total cost that you are incurring, right? To that add your profit, you will be arriving at the sales value. Correct, guys? That is what your format of cost sheet says. Arrive at the total cost, add profit, arrive at the sales. Clear with this? Now, how do I arrive at the cost? Now, simple. Now, this is your raw material area, right? This is your raw material area. Now, what happens? At the beginning of this particular year, I must be having some opening stock of raw material. Agreeing with me on this? Guys, yes, right? Now, during this year, I would have purchased some raw material also. Guys, yes, right? I would have made some purchases, right? So basically, if I add the two, this is the total raw material available with me. Correct? No? Guys, yes. Hello? Yes, guys. Right? You guys can feel free to unmute yourself and participate, right? Because it feels as if I'm still in a recorded mode. So maybe you guys have come out of the recording mode, but I have not yet come out. Please, guys, unmute and participate. I don't have a problem as long as your background is, I'm absolutely fine. So you guys can unmute and participate. Do not worry about it. Do I look like a very strict person and all? You guys are hesitating a lot. Come on, guys. You can just unmute yourself and participate. Okay. Now, opening stock of raw material plus purchases is going to be the total stock available with you of raw material, right? Out of this, at the end of the period, I have some closing stock of raw material which is remaining unconsumed. Correct? No? So can I say the opening stock of material plus whatever I purchased, this is the total available, minus whatever I didn't consume, right? This balancing figure is nothing but my raw material consumed. Correct? So the total raw material available minus what I didn't consume is equal to the raw material consumed. Correct, guys? Hello? Guys, yes, you guys are clear with this. Right? Right? Fine. Now, raw material consumed means what? From the stores area, it will be fed into my machine. Correct? No? Right? Or in other words, this raw material consumed will go here only to my WIP area. Guys, correct? Hello? Right? Fine. Right? So, raw material consumed will enter here. Now, raw material, by magic, it will not get converted into an FG. On top of this raw material, I need to spend direct labor. I need to spend direct expense. And I also need to spend production overheads. Correct, guys? Right? In a factory, whatever other manufacturing costs are also incurred. Correct? No? Right? All these things put together. All these things put together are the costs that I have incurred right now in this particular period. Guys, correct? Right? But wait, even in the WIP area, what happens? There could be an opening WIP. What do you mean by opening WIP? What do you mean by opening WIP? That is, some goods, some particular products, right? They were processed in the previous period, but the moment the previous period got over, still they were lying as a semi-finished product in the machine only. The balance processing will get completed in the current period. Correct or not? Right? This is called as opening WIP. So here also I can be having an opening WIP. Similarly, I can also have a closing WIP. What do you mean by a closing WIP? I started the production, right? But at the end of the current period, it didn't get fully completed. It got semi-completed and it is still lying in inside my machine. Correct? No, that is also possible. Right, guys? Yes. Or in other words, can I say, so these are the costs that I'm incurring in the current period, right? Plus opening WIP minus opening WIP. Can I say this is nothing but the total value of the completed production? Correct or not? Guys, yes, this is the total value of my completed production. Correct? So I call this as the cost of production. Cost of production means what? The value of goods that got produced in the current period. Are you clear with this? Are you clear with this? Now, where will this enter into? This completed units are FGs now. They will enter into my FG area. Guys, clear with this, guys? Clear with this? So they will enter into my FG area, right? So here is where they will come in, right? In the FG area also, there could be an opening stock of FG, correct? So current year I have produced so many units, right? Already, one second, what happened? Nandini, please mute your background. Okay, who's that? Okay, right, coming back here, guys. So here, cost of production is there. This is the current period units produced, right? So now, over and above this, as at the beginning of the year also, there could be some units that I am still having as an FG. So opening FG plus the current year units produced is going to be the total FG available for sale. Guys, correct? Yes, Out of this, if I remove my closing FG, which means what? Unsold units, the balancing figure is nothing but my cost of goods sold. Correct, guys? Are you clear with this? Are you clear with this? Guys, are you all able to understand this? So here, my opening stock of FG plus my current year production is going to be my total goods available for sale. From that, you remove the goods unsold, you will get the cost incurred in respect of goods sold. Are you clear with this, guys? Are you clear with this? Right? Yes, guys. Now, this cost of goods sold, right? This cost of goods sold is nothing but the expired portion of my manufacturing cost. That's what I told you right now. My manufacturing cost will expire only to the extent of COGS. Correct, guys? To this, I will be adding my AOH and SOH. If I do that, I will be getting my total cost of sales. Are you clear with this? Now, I know for some students who have already seen the format, you might think that I have missed out a few line items. I will come to that. Please wait. Clear with this? This is exactly what the format says. Now you look at the format, you will understand. Now, direct material consumed is how did you calculate? Opening stock of raw material plus purchases minus closing stock. This is exactly what we saw here. Guys, yes, right? You got your raw material consumed figure here. Yes, guys, done. Now, what do you have here further? To this, add your direct labor and add your direct expense. That's what we did here, direct labor and direct expense. These three components are all direct costs incurred inside a factory. So you subtotal it and give it a name called as prime cost. Clear with this, guys, right? To this prime cost, you add what? You add your POH also. Clear with this? It is called as gross works cost. Works means what? Works means factory, right? So you can use the word gross factory cost or gross works cost, anything works. Clear with this? Sir, why is it called as gross? Because you are yet to adjust for opening and closing WIP, right? So add your opening WIP, subtract your closing WIP. So add your opening WIP and subtract your closing WIP. You have something called as net works cost, or it is also known as factory cost. Are you clear with this, guys? Are you clear with this? Right? Are you all clear with this? Right? Now I know you must be having a question. Sir, what are these line items? What are these line items? You just now told us that if at all there can be any costs incurred inside a factory, they could only be categorized under the four categories: direct material, direct labor, direct expense, and production overheads. Now, what are these line items that are separately mentioned? Now, guys, what I told you is any indirect costs incurred inside a factory is called as what? Production overheads. Correct? Right? I still stand by it. It is production overheads. However, Institute actually came up with this new format about 8 years back, I think 6 or 8 years back. Before that, you know, when I did my intermediate, all these things were not there, because cost sheet as such, it is not guided by like something like schedule 3 and all. It is something that people can prepare based on, you know, what they feel is relevant. So what Institute did was, from this production overheads, they separately took a few line items alone and they wanted to display them on the face of the cost sheet. Are you clear with this? That's all it is. Don't think it is something else and all. Look at what they have given. Quality control cost. What do you mean by quality control cost? The cost that you are incurring to check your quality of the product, your inspection related cost. Clear with this? Research and development cost. Basically, your research and development cost is nothing but your R&D expenditure, right? Why do you do R&D? So that you can produce it in a much better manner. You can either end up reducing your overall cost in the future, or maybe with the same cost you can increase your quality and all. So R&D is also related to production, right? Ideally, all these are indirect costs. Can these be traced on a per unit level? No, they cannot be traced on a per unit level. However, what they have, that's why I said this is ideally a part of your production overhead. But Institute has, what they have done is they have taken these few line items separately, parked it on the face of the cost sheet. They wanted to display it on the face of the cost sheet. So one is quality control cost, then comes your R&D cost. Then the third one is administrative overheads related to production. Many students make a mistake here. This is not your corporate office expense. This is not your corporate office expense. Your corporate office expenses, administrative overheads, that is further that is kept here separately. Clear with this? This is related to production. Sir, can you give an example? Can you give an example? Let me tell you, in a factory, right, there could be different categories of worker. One guy is an assembly worker. What does he do? He fits the doors of a car, right? The any labor, any wages that I pay him will fit into the category of direct wages. It's a prime cost component. Clear with this? Now, this assembly worker has one boss. What is his name? Supervisor. His name is supervisor. What does this guy do? He keeps his hand like this and he just oversees the work of his subordinates. Correct? Now, he also stands in the factory, but he doesn't work hands-on, right? He just does overall supervision. Now, this guy, whatever amount I pay, is it a manufacturing related cost? Yes, because it's incurred inside a factory, but I cannot call it a direct cost. It is an indirect cost, but incurred inside a factory. I classify it as POH. Correct, guys? Now, this guy also has one boss, right? That boss is not sitting in corporate office. That boss is also sitting in the plant only, in the factory only. He could be a plant head. He will not even come out of his AC room. In this particular plant or factory itself, there will be one AC room where he will be sitting. That plant's decision he will be taking. The factory related decisions he will be taking. Are you clear with this? So, this is also indirect. Yes. This is also incurred inside a factory. Yes. But still, institute wants you to categorize this separately. They want to give it a name called as administration overheads related to production. Are you clear with this, guys? We will do a sum, you will understand, right? Administrative overheads related to production means what? This is not your general admin expense, not your board of directors expense, that plant heads or that production manager's salary. Are you clear with this, guys? Are you clear with this? AC room in a factory, you remember like that. Are you clear with this, guys? That's why I started off with the locations that are there inside a company. Guys, are you all able to follow this? Yes, you guys are able to get it, right? That one. And finally, you have something called as a packing cost also. Remember, packing cost is a primary cost. Only the primary packing cost needs to come here. What do you mean by a packing cost? Right? The cost that I incur to pack my products. But what do you mean by a primary packing? Now, guys, packing cost can be of two types. One is a primary packing. The other one is a secondary packing. Wait, I will give you an example. Now, let us say you want to go and buy a bottle of Coke. Coke means Coca-Cola. Don't think anything else. I'm talking about Coca-Cola only, right? So when you want to buy a bottle of Coca-Cola, now you tell me, guys, from the perspective of the company that manufactures Coca-Cola. Now, definitely that bottle that they give you, that PET bottle or plastic bottle, right? That comes under the category of primary packing. Meaning what? Without this primary packing, the product can never reach the customer. It can never be sold. Are you clear with this? What, can you go to their Coca-Cola factory and say, you pour, I will drink like this and all? No, it's not going to happen, right? Obviously, they need to pack it and give it in a bottle. Correct, guys? That's called as a primary packing. Primary packing forms part of your production cost. Whereas, now, like this, there will be thousands of bottles, right? That needs to be transported to many of their distributors. What they will do is they will have cartons. These cartons are also packing cost only, but they are not essential for the product to be sold. They are used only to facilitate my distribution. Hence, the secondary packing cost will come under SOH, selling and distribution overheads. Are you clear with this, guys? Are you clear with this? So, technically speaking, the primary packing cost also forms part of production overheads, but our institute wants it to be mentioned as a separate line item on the face of cost sheet. So, there are 4 line items that ICAI wants us to establish on the face of cost sheet. All these 4 line items are a part of production overheads only, but taken from there and mentioned on the face of cost sheet. Are you clear with this? What are the 4 line items? Come on, tell me, guys. One is QC cost, quality control cost. Then comes your R&D cost, research and development. Then administration overheads related to production. When I say related to production, remember that AC room in a factory. And then your primary packing cost. Remember that. Clear with this Coca-Cola example, right guys? Clear with this 4 additions and there is 1 deletion. What is that 1 deletion? Credit for recoveries and scrap. Credit for recoveries and scrap. Basically, when you are doing a production, there will be some wastage and all, no? Guys, correct? Small wastage will be there. Now, this wastage, if you're scrapping it off to an old dealer, right? If you're receiving some scrap income, now the cost incurred in respect of the unit scrapped has also been included here. So if you receive any benefit out of that, that should go on to reduce your cost. Logical. That's why we are reducing it here. Are you clear with this, guys? Are you clear with this? For example, you purchase a newspaper, right? Fine. At the end of the month, what you will do, you accumulate the newspaper. Whether you read it or not, it will definitely go to this old dealer shop, correct? You will get some money out of it. So technically speaking, your newspaper cost is going to be the cost that you pay to the newspaper guy minus whatever is the scrap income that you will generating out of it. The net amount is only your cost, you know. Guys, clear with this? That similar logic you can follow here. Are you all able to understand? Are you all able to understand? Technically speaking, all these line items are very much a part of your POH, but for presentation purpose, Institute wants us to present it on the face of cost sheet. Are you clear with this, guys? Are you clear with this? Now, if you add all these things, you get what? Hello? You get cost of production, right? You get your cost of production. That's the figure we got here. Guys, clear with this, right? Cost of production. To this, add your opening FG, subtract your closing FG. So add your opening FG, subtract your opening closing FG. You get what? COGS, your cost of goods sold. Correct, guys? Right? And now your goods have moved out of the factory. Directly, the 2 other costs are waiting. What are they? AOH and SOH. Add them both, AOH and SOH. You will get the total cost. It's called as cost of sales. Are you clear with this? From the cost of sales, you add your profit, you will arrive at the sales value. Guys, are you clear with this, guys? Are you clear with this? Now, when you are telling when you want to remember the format of cost sheet, don't remember it as a format. Remember it as a flow of cost. Are you clear with this? Right? So now, looking at this flow of cost, now tell me, guys, tell me the format of cost sheet once. Come on, tell me. Yes, you guys can unmute and participate if you want. Yes, the YouTube live students, come on. Yes, use the chat box. Come on, guys, make it interactive. First, your direct, yes, opening stock of raw materials plus purchases minus closing stock of raw material gives you direct materials consumed. Correct, guys? Yes, visualize that. Direct materials consumed. So direct material plus direct labor plus direct expense gives you what? Prime cost. Clear with this? Gives you what? Prime cost. Now, from the prime cost, add your production overheads. You get what? You get your gross works cost. Why are we calling it as gross? Because we are yet to adjust for the WAP stocks. Right? Now, gross works cost, add your opening WAP, subtract your closing WAP. Wait, you don't get your cost of production because Institute has done some drama here. 4 addition, 1 deletion. Clear with this? So they are just calling it as factory cost or net factory cost or just factory cost. Clear with this? Now you adjust for 4 addition, 1 deletion, which was originally a part of your POH. What are the 4 addition, 1 deletion? First, quality control cost. Then comes your R&D, research and development cost. Then your administration overheads related to production activity, AC room in a factory, and then your Coca-Cola example, primary packing cost and all, 4 addition and less 1 deletion, your credit for recoveries, you do that. Now you get your cost of production. From your cost of production, now it enters into your warehouse area, add opening FG minus closing FG, you get your COGS. From your COGS, add your AOH and SOH, you get your total cost of sales. Your cost of sales is nothing but your total expired cost. Are you clear with this? Total expired cost. That is, I told you, your period cost expires fully, no? Right? AOH, SOH, correct? Your product cost expires to the extent of cost of goods sold, I told you. You remember? Guys, yes. Your manufacturing cost expires to the extent of cost of goods sold, whereas your non-manufacturing cost expires fully. So technically speaking, my cost of goods sold plus AOH plus SOH, whatever I'm doing, that is nothing but my total expired cost that can be knocked off against my sales to arrive at my profit. That's why the cost of sales is nothing but my expired cost only. Clear with this, guys? So from my cost of sales, you add a profit, you will get your sales. Guys, are you clear with this? Are you clear with this? Is it required to be mugged up, guys? Is this required to be mugged up? Absolutely not. Absolutely not. You just see a span of 1 hour, right, with the right introduction to the subject, we have also completed this particular format of cost sheet. Now, any kind of sum that comes in here, you will be in a position to tackle it. Are you clear with this, guys? Yes, there are certain other adjustments also. As we enter into this particular area, we will be finishing it off. Clear with this, guys? Any problem? Any problem here? No. Fine. Now, one more thing. If in the exam they are asking you, so prepare a cost sheet clearly mentioning the cost heads. Nothing, don't worry. Cost head stands for prime cost, cost of production, cost of goods sold, and your cost of sales. Clear with this? These four subtotals are called as cost heads. So why have I separately mentioned it? Some students felt that, sir, cost heads you didn't teach us at all. That is nothing but the subtotal only. Clear with this? In the exam, if they ask you for a cost head, it means these four items: your prime cost, right? Your cost of production, your cost of goods sold, and your cost of sales. Clear with this, guys? Right? Then let's move on to the next one. This is regarding direct expenses. Now, look at this. Direct expense. Actually, what do you mean by a direct expense? Any cost that is directly traceable on a per unit level, but it does not form part of your direct material and direct labor. This is your direct expense, right? Now what happens is, this we follow only in India because globally there is no concept of direct expense at all. Globally, prime cost refers to direct material plus direct labor. There is no concept of direct expense and all. Everything else incurred in a factory, they've only put it under production overhead. But in India, we follow this concept of direct expense. There is a separate cost accounting standard that talks about direct expense and all. Anyways, that cost accounting standard is not required for CA intermediate. Now, what they have done is, they have given a list of line items that fit into the category of direct expense. Now, this is where, again, many students commit a mistake. Generally, if they see a line item in a question, they get confused as to whether this particular line item should be classified as a direct expense or should it be classified under production overheads. This is the biggest issue that many students face. Example, power and fuel. Power and fuel, right? You have power costs. Now, power costs. Now, one school of thought says that power cost is a direct cost. If I produce more, obviously proportionately my power cost is also going to increase. Correct? Another school of thought says no, power cost should be treated as a production overhead. It is not a direct expense, which is correct. It's not about correct or not. First of all, this particular direct expense itself is something that is unique only to India. Generally, globally, they don't follow the concept of direct expense. But anyways, for the purpose of examination, there are certain things that we need to follow. That is the reason why I have given this particular segment. Are you clear with this, guys? Right? Now, do not worry. We will be doing one or two comprehensive questions. You need not have to worry that all these applications will kick in. Clear with this, guys? So the expenses other than the direct material and direct employee costs, which are incurred to manufacture a product or for a provision of service, can be directly traced in an economically feasible manner to a cost object. Now, they have given the list of line items that definitely needs to be considered as direct expense. First, royalty paid or payable for production of or provision of service. I just gave you an example of Maruti Suzuki, right? The royalty payments should be classified under what? It should be classified under direct expense. Then, higher charges paid for hiring specific equipment. The word here is specific. Now, you might be wondering, sir, higher charges means what? I am taking an equipment on rent. If I pay a rent on that particular equipment, how can you say that it is a direct expense? If I own that particular machine, I would have provided for depreciation, right? Instead, I am renting it from a person. I am paying him rent, higher charges. How will you say it's a direct expense? It is only an indirect expense. That's the word here is specific. Meaning what? Let us say I am taking up a particular job, right? For me to do that job, I am hiring a particular equipment. Once the job is over, I will give back the equipment. So now, whatever higher charges I pay for this equipment should be exclusively charged only to that job. Hence, in this case, it's a direct expense. Are you clear with this, guys? Basically, this holds good only in a job costing setup. Are you clear with this? Right? Are you clear with this? Similarly, if they use the word higher specific charge, your higher charges for specific equipment, please make sure that you put it under the category of direct expense. Then, once again here, the cost for a product or service specific design and drawing. Design and drawing means what? Suppose for example, my customer comes, I'm Casa Grande, that is the, they are into real estate business, right? So now first, before they start, before they construct a house, there will be a drawing and all that needs to be done. So for a specific house, if I'm having a particular drawing for a particular job, in that case, now it's clearly a direct cost attributable to that particular job. So I will only classify it as what? I will only classify it as a direct expense. Are you clear with this, guys? Are you clear with this? Right? Then you have what? Again, another thing, service specific software. See, anywhere you find the word specific, make sure that it fits into the category of direct expense, right? And any other expense which are directly related to the production of goods and provision of services. So they have just given a broad terminology here, but yes, this is what it is. So please make sure that royalty payments will come here, and anywhere if they use the word specific and all of that, then it fits into the category of direct expenses. Are you clear with this, guys? Right? Now, next one, in this chapter, another issue is there, which is with respect to valuation of closing FG. Valuation of closing FG. Now, what is this? What is this concept of valuation? Now, guys, now let us say I have an FG, right? Let's say I have an opening stock of FG of, let us say 1000 units at the rate of rupees 10. In the current year, I have produced, current year cost of production, I have produced, let us say, 10,000 units at the rate of 11. Right, guys? I have produced 10,000 units at the rate of 11. Now, totally in terms of units, how many units is available for sale? I have a total of 11,000 units available for sale. Correct, guys? Right? What I have done is, I have sold out of this 11,000, I have sold 9,000 units, and I have a closing FG of 2,000 units with me. Are you clear with this? Right? I have a closing FG means what? I've not sold 2,000 units here. Now, first you tell me, this 9,000 units, now will I value it at 10 rupees or will I value it at 11 rupees? Because see, the total units available with me is how much? 11,000. From this 11,000 units, I have taken 9,000 units and I've sold it. Now, when I'm selling it, now am I taking it from the first lot, or am I taking it from the second lot, or have I mixed everything together and taken it, I have not retained the identity? How will I know this? Are you clear with this? Or in other words, this is a clear-cut situation where your stock valuation issue comes into the picture. Are you clear with this? Now, to put it in simple terms, the concept of stock valuation comes when two cumulative conditions are satisfied. What are the two cumulative conditions? Condition number one, there should be multiple lots of receipts. And condition number two, each of the lot is valued at different rates. Are you clear with this? Right? So, multiple lots of receipts, each of the lot valued at different rates. In that case, your stock valuation issue comes into picture. Now, this is the point where you can go for a valuation method called as FIFO or weighted average. Are you clear with this, guys? Generally, we won't enter into FIFO or weighted average just like that. Suppose in this case, both were valued at 10 rupees. Even the current year production was also done at 10 rupees. Now, I will not be, I need not go and refer the valuation methods, because whether I take it from the first lot or from the second lot, everything is valued at 10 rupees only, no? So the problem itself will not be there. But here I have two lots and each of the lots are valued separately, are valued differently. Multiple lots of receipts, each valued differently. In this case, the concept of issues valuation or stock valuation comes into picture. So now the two broadly accepted methods are FIFO and weighted average. What do you mean by FIFO? FIFO refers to first in, first out. Now, if I am following FIFO method, how will I value this 9,000 units? I will say this 9,000, first I touched my first lot, 1,000 units at the rate of 10, correct? Then what will I do? The balance out of this 9,000 minus 1,000, the balance 8,000 came from the second lot at the rate of 10. Are you clear with this? And finally, this 2,000, anyways, it is coming from the second lot only. This will be valued at the rate of 10. Are you clear with this? So, this is how FIFO is being done. Guys, are you all able to understand? So, I have handpicked all the major issues in this particular chapter and I've compiled it so that it will be easier for us to discuss those most important adjustments happening in this particular chapter. Look at this. This is what they have given. The same example, only they have given a different example here. That's about it. If suppose they are following a LIFO method, suppose LIFO method is being followed, what will happen? 9,000 will completely come from the second lot, last in, first out. Are you clear with this? Suppose the company is following a LIFO method. So now in this case, what I will do is, so this 9,000 units that I'm selling, I will say that it entirely comes from a second lot because it's a last in, first out. Whatever came in last will go out first. So I will value this entire 9,000 at the rate of 11, right? So this is the rate of 11. Second, guys. Yes, this is at the rate of 11 only. Yes, I'm sorry. Here also it was at the rate of 11. Yes, and here the closing stock of 2,000 units. That's where I will make a bifurcation and I will say, look, the first 1,000 is valued at the rate of 11 from the second lot, and the remaining 1,000 is valued at the rate of 10 coming from the first lot. It completely goes from the reverse side. Guys, clear with this? These are some CA foundation level things that you would have already seen. Hello? Yes? You guys are clear with this? You guys are clear with this? Right? Fine. Then how about your weighted average method? In case of weighted average method, I don't retain the identity of any of the lots. So what I do here is, okay, so I've got 1,000 units at the rate of 10 and I've got another 10,000 units at the rate of 11, right? So now what's the value for this? 1,000 into 10, it's going to be 10,000, and here it's going to be 1,10,000, 1,10,000. Right? So now what is the total value? The total value is going to be 1,20,000, right? 1,20,000 is the value for how many units? 11,000 units, right? So per unit, what will be the value? Come on, can anyone tell me this? Per unit, what's going to be the value? Come on. 8.909, is it? Okay, so 1,20,000 divided by 11,000, that gives you 10.909. Okay, so 10.909 is going to be the per unit value. So what I will do is, I will value both this 9,000 units as well as this 2,000 units uniformly at the weighted average rate of 10.909. Are you clear with this, guys? Are you clear with this? So first of all, understand when the concept of issues valuation or stock valuation will come. When will it come? Two cumulative conditions, multiple lots of receipts, each valued at different rates. This is when the concept of your stock valuation issues will kick in. Clear with this, guys? So here I have given some different example, but it is all, the concept is all one and the same. Fine, guys, right? So now let's go to one illustration. This is one popular question that I've seen in the past exam. I think this was once tested for about 10 marks, I guess. So let us just quickly run through it. Now, guys, one more thing. I've given all the solution. That is for, that is in order to save the time for our discussion, but please don't peep into the solution first. Try to attempt it. Take a notebook, try to scribble something and try to participate. That is when you will get the best learning experience. You don't audit the solution by ticking it. No, it doesn't work like that, right? Take a notebook and start doing it. Start doing it. The moment I read the question, you start doing it. The thinking process should kick in. Clear with this, guys, right? Now, what have they given? Direct material is 50% of the total cost. The direct wages is 30% of the total cost. The direct expense and overheads is going to be 20% of the total cost. And the selling price is given as 2,000 rupees. Now, what have they given? Selling price 2,000 rupees. Material, wages, your expense and overheads, all the expense components are expressed as a percentage of total cost. Clear with this? Then the next year, the direct material cost will increase by 15%. The direct wage cost will increase by 10%. The profit will reduce by 20% as compared to the previous period if the same selling price is maintained. Prepare a cost sheet for the current and the next year. Now, guys, I'm not doing some vanilla questions, easy questions. I'm not doing. I'm picking up some really good questions so that, it's worth your time, right? Please do it. Please try to crack this. Please try to crack this. I'll just give you about 30 seconds time. Just try to crack it. Try to crack it, guys. Do something by yourself. And then anyways, I'm going to discuss. Come on, let's do it. Hey. Okay, good to see the participants on YouTube as well participating. Good, guys. Good. I'm so happy. Look, guys, whatever you do, make sure that you're giving your best, making the best use of it. That's all. That's all. Do not waste even a single second of your time, especially given the fact that you are just before your exams. Make the best use of your time. Now, guys, what have they given here? The selling price is given as 2000 rupees. All the components of cost are expressed as a percentage of cost. So now what they are saying is, in the current year, so direct material is going to be 50%. So let the total cost be X. Direct material 0.5x, direct wages 0.3x, your direct expense and overheads put together is going to be 0.2x, right? And then they have given that the selling price is going to be 2000. So obviously my profit is going to be how much? 2000 minus x. Are you clear with this? Right? Any issues here? Any problem here? No. Next, what happens? They are saying in the next year, the direct material cost will increase by 15%. Means what? As compared to the previous year's material cost, the next year's material cost will increase by 15%. Or in other words, in the next year, it's going to be 115% of 0.5x. Are you clear with this? Are you clear with this? Right? Are you guys clear with this? Please nod or do something like that. You guys, whoever has turned on the camera. Yes. Yeah, guys. Fine. So it's going to be 0.575x. Similarly, for direct wages, they have said the wage cost is going to increase by 10%. When they say increase by 10%, it means as compared to the previous year. The previous year it was 0.3x. The next year it's going to be 110% of 0.3x. It's going to be 0.33x. Nothing has been mentioned with respect to your direct expense and overhead. Continues to be your 0.2x. Are you clear with this? And then if you add up the entire these three things, you get a total cost of 1.105x. Are you clear with this? Now what they are saying, if the same selling price is maintained, right, my profit will be reduced by 20%. My profit will be reduced by 20%. Now you tell me here how much will be the profit? Can I say this is nothing but 2000 minus 1.105x. This 1.105x is nothing but the revised cost for the next year. Guys, correct? Right? Now they have said this next year's profit 2000 minus 1.105x is nothing but 80% of the previous year profit. That is why they say the profit will reduce by 20%. Are you clear with this? This is equal to 80% of the previous year profit, 2000 minus x. Guys, clear with this, guys? Clear with this? Look, this is basically, they have given you hints to frame two equations and solve it. Clear with this, guys? Now once you do this and solve, you will get the x value, and once you get the x value, the current year figures and the next year figures can be populated and you can complete the answer. Are you clear with this, guys? Are you clear with this? The most important part is understanding the question, framing these two equations, arriving at the x value. Once you do that, the remaining part is just what? They have just plugged the figures and they have just put it up here. That's about it. Are you clear with this, guys? Are you clear with this? Here the crux is regarding framing the two equations and calculating the x values. Done, guys? Right? Done? Clear with this? Fine. So now let's move on to the next question. Look at the quality of questions they are asking. Now, honestly, the standard at which the institute is testing is now beautifully increased. Beautifully increased. So conceptual learning is the way forward. Are you clear with this? So please pay more focus on that. Next, yes, one more small illustration. This was actually kept as an adjustment in one exam question. They had kept this as an adjustment in one big question. So the remaining part of the question was simple. Just this part was alone. Many students found it difficult. So I just picked it here. Now look at this. Production overheads is given as 40% of conversion cost. What do you mean by conversion cost? What do you mean by conversion cost? Now guys, conversion cost means all the costs incurred inside the factory except my material cost. Are you clear with this? All the costs incurred inside the factory except my material costs. That is the costs incurred to convert my RM into FG, right? So when I'm taking the conversion cost, only the costs incurred to convert the RM into FG should be considered. Don't take the raw material cost also. Clear with this? Basically in a factory, what are all the costs that I incur? I told you, direct material, direct labor, direct expense, production overheads. These four are the expense that you incur inside a factory, right? The sum total of these three is called as conversion cost. Are you clear with this? Are you clear with this? Now, I also told you that globally direct expense is not considered, right? But in India alone we consider. If direct expense is given in the question, you can also consider that. If it is not given in the question, you just ignore it. Are you clear with this? That's why here they have mentioned conversion cost is direct wages plus POH. Just the labor and POH they have added. If direct expense is that also needs to be added. Are you clear with this, guys? Guys, are you all able to understand? If they have given you the conversion cost, it means what? All the manufacturing costs incurred inside a factory except what? Except your direct material. Are you clear with this, guys? So now what have they given? So the POH is 40% of conversion cost, and they have given that the direct wages is going to be 2 lakh rupees. Calculate the POH. Now that's pretty much simple. If you know what conversion cost stands for, now you can do it. So POH is equal to 40% of the conversion cost is nothing but your direct wages plus POH. If a direct expense is not given, you can ignore it, right? So 2 lakh plus POH. So in this equation, if you see, POH is the only variable that is missing out. So with this, you can find out the POH value. Guys, clear with this, guys? Any problem here? Any problem here? Guys, are you all able to understand this? Right? Shall we proceed forward? Yes. Now, a few more things. The treatment of special items. Now, guys, please participate on your chat box or by unmuting yourself. Now, look at this. Look at this. You tell me. I will give you a line item and tell me where these costs, where it should appear in the cost sheet. I will give you line items. You please tell me in which category will this form part in your cost sheet. Where will it fit into? Clear. First one, audit fees. Guys, don't look at the solution. Audit fee. Logically think, visualize. So the 3 locations of a company I told you, visualize. Audit fee. This is a management related expense. Don't think it's a non-operating. No, without an audit, a company cannot run, right? It's a mandatory phenomenon, right? So you can't run a business without all these things. So audit fee comes under AOH. Scrap sales, separate line item, 4 addition, 1 deletion. Clear with this? Now there is one more way of treating it. Suppose, guys, what happened? I purchased some materials, raw material. I'm saying I purchased raw material. Now, some raw material got destroyed or it got, obsolete, and I had to chuck it away. I just scrapped it off. Now, if it is a direct, just raw material, as such raw material without processing, the raw material scrap can alternatively be adjusted here while calculating my direct material consumed. Here, you can also reduce. That is, while calculating the direct material consumed, here also you can reduce the direct materials scrapped off. Are you clear with this? Alternative only I'm saying. It is not mandatory. Clear with this, guys, right? So they have given one line item. So in some sums, the institute study material, direct material scrapped off, they have added one more line item here, and the scrap sales of direct materials has been inserted here, reduced to arrive at the direct material cost, which is correct. Nothing as such, nothing like that. You can do any of the method. Ultimately, your answer will not change. Guys, clear with this, guys? Clear with this? You guys are clear with this? Fine. Next. Right. Quality control expense. Yes. QC cost, 4 line item, 4 addition, 1 deletion, separate line item. Royalty payments is going to come under what? Your direct expenses. Then lab testing costs. It's basically your R&D expense. Again, a separate line item. Abnormal losses. So abnormal losses are not considered. What are they? At the time when you're doing process costing, you will understand. Fine. Ideally, you should be knowing by now because you are in a revision batch. But anyways, right? So I will be talking about the treatment of losses when we do our, the process costing area. Do not worry. Director's fee. Come on, guys. Director's fee. Where will it come? Director's fee. Where is it going to come? Yes. Administration overheads. Yes. AOH. Then amortization of jigs and fixtures. Basically, jigs and fixtures are nothing but they are also some type of fixed asset. As a jig is a small machine with a relatively lesser life. Clear with this, right? So it's like a depreciation treatment, POH. But remember, if they are using the word, if it is being used for a specific job or if it is being used for a specific assignment, in that case, it will fit under the category of direct expenses. Are you clear with this, guys? Are you clear with this? So please be careful here. Please be careful. Look at this. Special frame for manufacturing. Clear with this. right? It's coming under direct expenses. R&D expense, separate line item. Now here comes the beauty. Material handling costs. Material handling cost. Many of you will be thinking that material handling cost should come under the material cost. No, this comes under what? This comes under production overheads. Why, sir? Why, sir? I told you the 3 locations inside a factory. No, not the company. In the factory itself, there are 3 places. Your stores, factory shop, and your FG warehouse area. I told you, no? Guys, yes. Now look at this. From the stores, the raw material will have to be transported inside the factory itself. It needs to be transported fed into the machine. Guys, correct? That is called as material handling, right? That is nowhere related to material cost. It is a material handling cost that fits into the category of POH only. Are you clear with this, guys? Are you all able to understand this? Are you all able to follow? That's pretty much important for you to know, right? So that's what comes here as material handling cost. The next one, bad debts, income tax, dividend and interest expenses. These are non-operating expenses, never considered in our subject. Are you clear with this, guys? Are you clear with this? Now, income tax, dividend, interest and all, you know. Sir, bad debts, sir. Some students feel bad debts is a part of SOH, selling overheads. Absolutely not. Absolutely not. What do you mean by selling overheads? The costs that you incur to sell your product. Correct? Now, if I know that, bad debts means what? It shows my inefficiency to recover the money post sale. Correct? I have made the sale and I'm not able to recover the money. If I know that I'm not going to recover the money, I wouldn't have made the sale itself at the first place. So it is something that happens post sale, and it talks about your inefficiency. It has nothing to do with the sales activity. It is a post sale expenditure, nowhere relating to our subject. It is not at all operating. Clear with this, guys? Are you all clear with this? Now here, income tax, you all know income tax is not ideally an operating activity. Yes. One student asked me on brilliant doubt. I don't remember the name of the student. Sir, in our, accounting AS3, accounting standard 3, there you have this, cash flow statement being categorized into 3 aspects: your operating activity, financial activity, and your investment activity. There, sir, your income tax form part of our operating activity. But here you are not saying this. Look here, the objective itself is different. We are strictly talking about the expenditures, the expenses that are relating to manufacturing and selling my product. Whereas income tax is a charge on your profit. It's a charge on your profit. It has now direct correlation with your operations. Are you clear with this? That is the reason. That is the reason why income tax is not an operating activity. It is not considered here. Dividends, interest and all. So all your finance charges will never form part of our subject. I told you that will come under your financial management. Are you clear with this, guys? Yes, very good. Sanjay, someone has said after sales. That's very good. Right. Now, one more thing I will ask you. One more question. So now tell me, guys, bank has charged some interest on loan taken. So will it be considered or not in our subject? Will it be considered or not in our subject? Guys, yes or no? Bank has charged an interest, right? Will it be considered? No. Perfect. Next, bank charges. Will they be considered? Bank charges. Will they be considered? Bank charges. Will they be considered, guys? Bank charges. Will they be considered? Hello? Bank charges. Can someone answer? Right? On YouTube or on Google Meet, someone can answer this. Bank charges. No, sir. Bank charges will not be considered. No. Bank charges form part of AOH. Look at the last minute twist. So bank charges will be part of AOH. Why, sir? Are you deviating from your own logic? No. I will tell you your thought process. You would have thought, okay, a bank, why do I go to a bank? Because I want to take a loan. So for that loan, they would have charged some money. So for that reason, I'm paying something. It's a finance cost. No, not at all. Not at all. Banks don't just do this lending activity. First of all, guys, for any business to function, you need a bank account for sure. Correct? Now, to maintain this bank account, every year the bank charges some AMC and all. You know that. Your debit card expense, your debit card annual charges. You have this, if you have exceeded your number of transactions per day, they will give one charges, SMS charges, right? Net banking charges. Correct, guys? Yes. Checks, the number of cash withdrawal, if it exceeds, for that they will charge. Now you tell me, are these finance related? No, they are related to your day-to-day administration, hence they form part of AOH. Don't think that if at all the word bank comes, it's related to finance. No, basic operating of a bank account, operating a bank account itself is actually something related to my my day-to-day routine administrative activity. So for that purpose they are charging something. That's why I'm calling it as a bank charge. I didn't say processing fee for loan, right? Processing fee for loan, maybe you take it as a finance charge. Clear with this? This was once tested in exam. That's why I'm doing all these things in a revision batch. Else we don't have the time to waste here right now. Are you clear with this, guys? This is for, yes, business account maintenance. Correct. Clear with this, guys? Yes. Next, the cost of website maintenance for online sales. Look at this. This adjustment came in RTP November 2022, long back, right? Website maintenance pertaining to sales activity. Yes, you take it as your selling and distribution overheads. Clear with this, guys? Then your canteen expenses. Now, guys, wait. It depends on where the canteen is present. If the canteen is present in a factory, I will put it under POH. If it is present in a corporate office, it is AOH. If it is present in my, in the sales depot, that's going to be my SOH. Clear with this, guys? Depends on the location, right? Primary packing costs, yes, it's going to be a separate line item, right? Fringe benefits means what? Some employee related benefits you are giving. Wait, again, it depends on to which employee you are giving. If he is a direct worker, the fringe benefits for direct worker will form part of direct wages, right? If he's going to be an indirect worker, that supervisor guy who is standing like this and all, then it's going to be a POH. Guys, it's a very simple. It's a very simple thing. Please understand it logically. That's about it. Clear with this, guys, right? Do not think that there are so many things to remember. If you know the underlying logic, any kind of situation can be handled. Clear with this, guys? The most important that I felt was, one is this material handling. The other one is the special, the word, whenever the word special comes, put it under your direct expense. Then this bank charges, that was something else actually, because generally students miss that, right? Clear with this, guys? Clear with this? Fine. Now, we'll be doing a couple of numerical problems here, right? Anyways, the solutions are given, but nevertheless, let us do these numerical problems. Good sums I have handpicked in such a way that it predominantly covers all the major part of this particular chapter. Clear with this, guys? Now, let us get started. What have they asked? Impact Limited provides you the following details of its expenditure for the year ended 31st of March 2021. Now, guys, basically this sum, what they have done, they have given so many line items, and asked you to prepare a statement of cost. Basically, they have asked you to prepare what? Your cost sheet. This is all they have asked you to prepare. Clear with this, guys? Now, what we need to do is, now, nothing is there in the sum in terms of valuation, stock valuation, nothing. You need to take a particular line item and properly park it in the correct category. That is all you need to do. Clear with this, guys? Clear with this, right? Now, what I will do is, line item wise, I will be reading, right? I will be giving a 2-3 second pause, right? You guys answer and then I will give my answer. Clear with this, guys? Shall we do it like this? Shall we do it like this? Yes? Done? Fine. Right. Okay, fine. Now, first, raw materials purchased. Where does this come into? Raw materials purchased. Okay, guys, but before this, 1 second. One last time, let me just put up the format of cost sheet. Now, this time you guys are going to tell me. I will put it here. So now, first, how does your format of cost sheet comes, guys? One last time. Again, I'm going to do this. So first, your raw material, opening stock of raw material plus purchases. Come on, tell along with me. Plus purchases minus closing stock of raw material gives you what? Direct material consumed, or this is nothing but your direct material cost. From this, add your direct labor, add your direct expense. That gives you what? The prime cost. From your prime cost, add your POH, right? You get what? Your gross works cost. Why is it called gross? Now I'm going to adjust for WIP. add opening WIP, WIP, less closing WIP. Now I call this as just works cost or my factory cost. Technically speaking, this is my cost of production, but what happened in this POH, what they have done, they have just taken a few line items and they have parked it separately. So I just call this as works cost or factory cost. Clear with this? From here, what I do, 4 addition, 1 deletion. What are the 4 addition? Number 1, quality control cost. Number 2, research and development cost. Number 3, administration cost related to production. Correct, guys? Right? And then number 4, you have a primary packing cost. Remember, Coca-Cola. Guys, clear with this. Now, if you do all these things, of course, minus what? Minus your credit for recoveries. Minus credit for recoveries. Now you get what, guys? You get your cost of production. Clear with this, guys? Now, from this cost of production, now I'm entering into the warehouse area. Right? Visualize. Put yourself in that position. Now, what happens? Now, to this add opening FG. Right? So now opening FG plus cost of production is the total available for sale minus closing FG. Now I'll be getting my COGS. This is my cost of goods sold. Now it moves out of my factory itself. Now the other 2 period cost line items are waiting for me. What are they? Add your AOH, general AOH, corporate office. Add your SOH. You get something called as, come on, what is the name? Cost of sales. Very good. You get your cost of sales. To this, add your profit. You get your sales. Now tell me, guys, you guys only told me this format. Clear with this? Now remember this, remember this, remember this. Now let us get going with this numerical problem, right? You tell me where these line items should come. We will be doing it along together. Fine. So first, raw material purchase. Raw material purchased. Where will it come? Raw material purchased. Of course, this is a separate line item. This comes under what? The direct material component, direct materials purchased. Now, GST paid under composition scheme. Where will it come? Where will it come? It will not come. Huh? Okay, it will not come. Why will it not come? It will not. Guys, okay. Now, look at this. Look at this. Now, you need to know a little bit of GST, right? Don't say that, sir, I am appearing for group 2. So GST is there in group 1. So I don't know. Definitely not acceptable. Not by me, by the institute. They are not accepting it. Now, look at this. In GST, again, I am just going to give you a bird's eye view. We cannot enter into that because that's a full discussion asset. In GST, you have a concept called as input tax credit. Most of you must be ideally knowing it. For the benefit of those who do not know it, let me make it very clear. There is a concept called as input tax credit, which means what? Which means what? Now, whatever GST that you are paying to your supplier, right? It is ideally not a cost. It is like a cashback benefit. To put it in very simple terms, when you are selling, whatever GST you collect from your customer, from that you adjust whatever GST that you pay to your supplier, the net amount alone you pay. Or in other words, if the GST paid by you to your supplier is eligible for ITC, it is not at all a cost. It is actually an asset. It is a current asset. It is similar to a prepaid expense, right? We don't call it a prepaid expense. It is a current asset basically, because you have paid your money right now, and it can be adjusted at the time you are paying to the government. Clear with this, guys? Now, in this case, they have mentioned GST is paid under composition scheme. There is something called as composition scheme in the GST law, which says that, to put in short, it says that if GST is paid under composition scheme, then it is not eligible for any input tax credit. Which means if you have paid the GST under composition scheme, it forms part of your cost only. And because in this case GST is paid under composition scheme, this 10 lakh rupees should form part of your material cost. Are you clear with this, guys? Are you clear with this? Are you clear with this? I'm repeating, this 10 lakh rupees was a GST paid under the composition scheme. And in this case, if you see, this 10 lakh rupees is not eligible for ITC. Only if it is eligible for ITC, I will call it as a current asset and all. I told you that cashback benefit or the adjustment is available. There is no ITC concept at all in composition scheme. Hence, whatever you pay right? It is like a hundi only. It will just go off, right? You can't get it back and all. So basically it's a cost. What cost is it? Your material related cost only added to your material cost. Clear with this, guys? One very important adjustment. The same question had they given GST paid and just stopped it there, or they had given ITC allowed, in that case only you should have ignored it. Are you clear with this? So don't say GST means ignore or GST means consider. You should know that if ITC is eligible, then consider it. I mean, if ICC is eligible, then ignore it. It is not a cost at all for me, right? It's like a cashback benefit. Now, if your GST is not eligible for your ITC, or in other words, in this case of composition scheme and all, it is very much a part of your cost and it needs to be added up to your material cost. Classify this only under material cost category. Clear with this, guys? Clear with this, right? Next one, freight inwards. Where will it come? Freight inwards, where will it come? Guys, where will it come? Freight inwards. Where will it come? Freight inwards. What do you mean by freight inwards? The transportation cost that I incur to bring my raw material from my supplier's location to our location, to the stores. Now, this is a cost that you are incurring to bring your raw material to the present location. This will also form part of your direct material cost. Are you clear with this? Another important adjustment. Guys, clear with this? Know the meaning. Yes, very good, Murthy. Very good, Priya. Yes, very good. Aarti, yes, everyone. Yes, Harija. Yes, very good. Right. So now this also forms part of your, what? This also forms part of your direct material cost, for a simple reason that any cost that is incurred to bring your raw material to the present location and condition should form part of your material cost. Clear with this, guys? Clear with this? Next, trade discounts received. What will you do with this trade discount received? Guys, answer, come on, think and answer. Exactly, very good, Bharat. Reduce it from the cost. Reduce it from what cost? Reduce it from direct material cost. This needs to be adjusted. Why? Because it's a trade discount. Trade discount basically is what? Because you're purchasing in bulk, because of the volume, they are actually giving you a discount. Are you clear with this, guys? Now 1 minute. The same question, instead of trade discount, had they used the word cash discount, what will you do? Guys, instead of trade discount, had they given cash discount, what will you do? If they had given cash discount, what will you do? Come on, tell me. Can anyone tell me? If it is a cash discount, what will you do? Will you reduce it from the cost? Right? Will you reduce it from the cost, or will you do something else? Can anyone tell me this? Okay, direct material deduct. No. If it is a cash discount, it needs to be ignored. It is not at all something, whether cash discount given or cash discount received, whatever it is, it should never be considered, because cash discounts are non-operating items. They are non-operating items. Very good, Bhavani. Very good, Money. Yes, very good. Aarti, everyone. Yes. So now the reason I will tell you. What do you mean by a cash discount? I will be willing to give you a cash discount if you make the payment within a stipulated time. Correct? No? Ideally, in your working capital management and all, there's a separate segment called receivables management that talks about cash discount component, right? Cash discount is ideally a compensation for early payment. That is the time value of money difference. It's a finance related item. Not many know this. Ideally speaking, cash discount, why I'm giving it, I will not give anyone. If let's say you are giving someone a discount, a trade discount is given for the business volume. A cash discount has nothing to do with the volume. The cash discount is purely based on the timing at which you're going to receive the money from. You will say, if you pay within 10 days, then I will give you a discount, extra discount of 1%. Why? Because generally you can take 30 days time, but if you are paying me 20 days earlier, if you are just making the payment in the 10th day itself, now I'm getting my money 20 days early. Now for this 20 days, I can put it in a bank account and enjoy my interest. So now for me to motivate the person to make the payment early, I am passing on that little benefit to him. It is ideally a non-operating item only. It has nothing to do with your operations. Clear with this, guys? Always remember, add this item also somewhere here. Your cash discount should be ignored. Cash discount, whether received or given, should be ignored. Are you clear with this? Because it's a finance item. It is 100% a finance item. Clear with this, guys? But yes, definitely you can consider trade discounts. Next, wages paid to factory workers. We all know it's going to form part of your direct labor. Then contribution made towards employees PF and ESIS. Now again, employees provident fund, it depends on which employee we are talking about. If it is a PF pertaining to a direct worker, then classify it under direct wages. If it is pertaining to your supervisor, put it under POH. Now in this case, institute has taken a stand that this also forms part of direct labor, because this line item comes immediately after the factory workers. They have taken a stand that this contribution made to PF and ESI is for the factory workers, and hence they have considered it under the direct labor category itself. Are you clear with this? So in this case, since this is also your direct wages related item, so you put it under direct labor. Next, production bonus paid to factory workers. To whom you are paying? Factory worker. Any amount that you pay him is basically a direct labor only. Yes. Next, an interesting adjustment, fee for technical assistance. Fee for technical assistance. Can anyone tell me where this fits into? Can anyone tell me where this fits into? Huh? Yes, very good. This fits under direct expense. This fits under direct expense. Now, this technical assistance part, basically, again, institute has taken a stand that this technical assistance, generally you take it only for a specific job. Generally, you don't take a technical assistance. If you want a technical assistance, then every time, then you would rather have your own staff. Are you clear with this? So, whenever they're talking about technical assistance, it means it is pertaining to a particular job. It is exclusively charged the job and directly traceable per job. Are you clear with this? And because of that, institute has classified this under direct expense. It's once again one important part. So I would rate this as very important, because this is a place where I've seen many students go wrong. Right, in our regular batch also many students committed a mistake in this area only. Yes, that is quite confusing. Next, amount paid for power and fuel. Amount paid for power and fuel, right? It could either be a direct expense or you can put it under POH, but here again institute has classified it under direct expenses. Let us also follow that. Then job charges paid to job workers. What do you mean by a job charge? What do you mean by a job charge? Let us say I have a factory and I'm in the business of converting raw material into FG. But what happens? I'm running at full capacity. My entire workers are fully occupied. What happens is that now I take the help of my next door neighbor, right? That is the next shop or the next factory. If you see, they are also into a similar business. So what I tell them, look, currently I am not able to, I'm not able to use my staff. But at the same time, I cannot turn down the order that I've got. What I do is, I will supply the material to you. You use your labor, right? Convert this raw material into FG and give me the FG. Are you clear with this? Now, for this work, right, per unit, whatever is the cost, you tell me. So, I am taking the services of another person to convert the raw material into FG using his factory, using his labor. Are you clear with this? I will only provide the material. Now, this conversion activity is being done without using my own staff and my own resources. This is called as a job charge. Are you clear with this? So now clearly this job charge is a direct line item, but I can't call it as a material and a labor. So I classify this under the category of direct expense. Are you clear with this, guys? Know the reason and do it. Yes, Sanjay, Gokila, Vaishnavi. Yes, very good. Very good. Yes, Madheshwaran, everyone. Yes, Murthy. Okay, many people have answered this. Very good. Very good. Fine, guys. Then stores and spares. Stores and spares. Where does this come into picture? This clearly comes under production overheads. Stores and spares are basically the components that you use along with your machines. Clear? No, stores and spares is not direct expense. It's not direct expense. It is going to be, stores and spares are going to be your this one. They are your production overheads, because these are actually your spares for your machines. Clear with this, guys? Then depreciation on factory building will come under POH. On office building will come under AOH. on plant and machinery. Where is plant and machinery located? Don't say depends on the location. Plant and machinery will be located only in a factory. Clear with this? This comes under POH. Are you clear with this, guys? Guys, based on the location, you just need to classify. Any problem here? Hello? Hello? Guys, you guys are clear with this? Yes, yes, yes. Done. Next. Yes, correct. It's all POH. Then salary paid to supervisors. Salary paid to supervisors. Where does this fit into? Come on. Yes, it comes under what? It comes under production overheads. Right. Salary paid to supervisor comes under production overheads. Then repairs and maintenance. If it is paid for plant and machinery, it's going to be POH. If it's for sales office building, where will this coming to? Guys, come on, participate. Where will this coming to? Huh? Yes, yes, come on, guys. Answer, please answer. It's going to be SOH. Right? And repairs and maintenance paid for vehicles used by directors. Where will this come? Where will this come? Huh? This comes under AOH. Now, I have seen students tell me, sir, vehicle used by directors, sir, it comes under drawings, sir, personal use and all. No, you consider this as an official use, obviously, else why else will the company pay? Clear with this? So it's obviously official use of the directors. The directors are located in the corporate office. Clear with this, guys? Done. Next, similarly, insurance premium. If it is paid for plant and machinery, it's going to be POH. If it's for the factory building, again it's POH. Now, expenses paid for quality control check activities. Where will this coming to? Hello? Come on, guys, answer. Where will this coming to? No, not production overheads. We have a separate line item for this. Yes, 4 addition, 1 deletion, separate line item. QC cost, we have quality control. Guys, clear with this? Yes, separate item. Correct. No, Sanjay, it's not POH. It comes under quality control. Guys, remember the format of cost sheet. This is the reason why we spend so much time on that. Clear with this? 10. Research and development cost paid for improvement of production process. Once again, we have a separate line item. R&D. Clear. Expenses paid for administration of factory work. Where will this come into? Where will this come into? Administration cost related to production. Clear with this? Once again, a separate line item. Are you clear with this, guys? Are you clear with this? Next, salaries paid to functional managers. First, production control. Where will this come into? Where will this come into? Your salary paid to functional managers. Under that, they have given finance and accounts, sales and marketing, production control. First, production control. Where will this come into? Huh? Where? It will come as administration overheads. They have given production control, no? Guys, where will this come in? This will come as a separate line item where administration costs related to production. This guy is sitting in an AC room in the factory. Production control manager. Are you clear with this? Are you clear with this? It is not POH. It is not POH. Yes, I think very few students got this right. This is a very confusing adjustment. I do agree, but yes, beautiful adjustment. It comes under administration cost related to production. Mark this as important. Mark this as important. I think only one got it right. Yes, I think Priyanka Kanagaraj. Okay, very good, very good. Okay, so this comes under administration overheads related to production. Administration cost related to production. Clear? It neither comes in your POH nor does it come under AOH. It is administration cost related to production. Then the others are easy. Functional manager, salary, finance and accounts. Where is this guy sitting at? Where is this guy sitting at? This comes under AOH, right? Sales and marketing. This comes under SOH because it's a sales related cost. Then salary paid to general manager. General manager comes under AOH. Clear? Packing cost paid for primary packing necessary to maintain the quality. Where does this come into picture? Separate line item. Very good. Separate line item. Similarly, for redistribution of finished goods, packing cost, where will this come into? Very good. SOH. This comes under SOH. Remember the Coca-Cola example I gave you guys. Now you are able to understand why I'm giving all these examples. The reason is only for this. Next, interest and finance charges paid for usage of non-equity funds. Where will this come into picture? Huh? Where will this come into picture? Yes, yes, come on. Tell me, Ramya. So it should not be considered. It should not be considered ideally. But in an earlier version of our study material, they have taken it as a separate line item. But strictly speaking, no, it should not come. It should not be included. Sir, what should I do in exam? Ignore it, write a note. If you are ignoring it, don't blindly ignore and leave it there. If you are ignoring something, you should write a note clearly saying, look, this is a non-operating item and hence I'm ignoring it. Clear with this? Yes, very good, very good. Yes, it is to be ignored. Fee paid to auditors, AOH, legal advisors, independent directors, all these are AOH. Clear with this? Right, guys, visualize which place the cost is incurred, put it in that bucket. That's all, guys. Right, then payment for maintenance of website for online sales. Yes, I think we've already seen this. SOH. Yes, then performance bonus paid to sales staff. Once again, it is SOH, right? They are sales staff. Then the value of stocks. Okay, these are separate line items. Opening stocks and closing stocks we've got here. Clear with this, guys? 10 marks. 10 marks. That's all. And look at this. Amount realized by selling of waste generated during manufacturing process. What should you do? Separate line item, deletion. In that 4 addition, 1 deletion component of 66,000. Clear with this. Now from this, you need to prepare a statement of cost and clearly showing all the cost heads like prime cost, factory cost, cost of production, COGS, and your cost of sales. Clear with this, guys. 10 marks. 10 marks. Can't you get it? Very, very simple. Provided you know the logic and then you know this particular, the format of cost sheet. That's about it. That's about it. Guys, clear with this? Do you need to mug this up, guys? Please tell me, do you need to mug this up? Absolutely not. Absolutely not. You just see, in less than 2 hours, we got introduced to the subject, right? The revision, and the entire chapter is almost getting over, right? And I have one more sum here. I think one more sum is left up, right? So we'll do that sum right now. We'll do that sum and then we will proceed forward to the next chapter. That's about this. Fine. Now, let's go to the second question here. Now, Easy Shoe Feed Company. Again, guys, I am discussing the sums that give you a comprehensive coverage. Number 1. Number 2, also the ones that are important from an examination perspective. I have handpicked these sums for exclusively for discussion because in the regular batch, that's comprehensive. All the sums are discussed, but in a revision batch, I need to definitely make sure that for the time that we spent, whatever is the best value possible that needs to be given. Clear with this, guys? Right. Now, let's get started here. Easy Feed Shoe Company manufactures two types of shoes, A and B. The production costs for the year ended 31st March were as follows. So, the production cost they have given, material, wages, POH, the total figures have been given. There was no work in progress at the beginning or at the end of the period. So, forget the WIP part. It is given that direct material in type A shoes consists twice as much as that in type B shoes. The direct wages for type B were 60% of those of type A. The production overheads was same per pair of A and B types. Administration overheads for each type was 150% of direct wages. The selling cost was 1.5 per pair, and the production during the year was type A 40,000 pairs, of which 36,000 were sold, and type B 1,20,000 pairs, of which 1 lakh units were sold. The selling price was 44 rupees for type A and 28 rupees per type B. Prepare a statement of cost and profit for each pair of each type. This is what they have asked as a question. Now, guys, what you need to do is, we need to prepare a cost sheet, but the only difference here is you have 2 products. It's a multi-product scenario. What are the 2 products that we've got? A and B. Simple. You need to prepare a cost sheet, same format, direct material, labor, production overheads and all that. Now, guys, don't think that, sir, in this question, those 4 addition, 1 deletion are not given. If they are not given, then it is not there. That's all. Clear with this? Then in that case, your gross work. So here, if you see, your direct material plus direct labor plus direct expense gives you prime cost, plus POH gives you gross works cost. Now, you don't have opening and closing WIP. So your gross works cost itself is equal to your net works cost or your works cost, then you don't have 4 line addition, 1 deletion. So your works cost itself will be equal to your cost of production, all bypass only, like a bus route, all bypass, right? So cost of production, there you have an opening stock minus closing stock, that adjustments you do, you will get your cost of goods sold, and it goes on. But the issue here is I need to prepare the cost sheet for 2 products. But the problem is what? They have given us the costs in a consolidated manner. That is, for example, direct material is how much? 15 lakh rupees. 15 lakh rupees is the direct material cost for material A or for material B. No, it is for A plus B put together. I need to bifurcate and find out what is the direct material for A and what is the direct material for B. And how will I do that? Using the hints given below. Clear with this? This is the issue in this particular question. Are you all clear with this? Are you all clear with this? Now, how are we going to do this? This is where many students commit a mistake. Committing a mistake at least is not a problem. They come out of the exam hall with full confidence that they have done this question right, and 2 students will be arguing that their answers will be correct. My answer is only correct. Like this, 2 students will be arguing among themselves without knowing that both of them are actually arguing for wrong answers, right? 2 different wrong answers, for that they are arguing. Now the beauty of this sum, institute loves this sum a lot, right? In fact, in one of the attempts, I exactly predicted that this question is going to come, and it actually came, and that was something that I felt very happy, because this question is something else. Institute keeps testing this once a while. Now, what is the problem here in this question? So the general mistake that students do here is, what they do is, first, let me talk about the material component. What have they said? The material in type A shoes consists twice as much as that in type B shoes. Or in other words, if you look at this A and B with respect to the material consumption, so if B consumes 1 unit of material, A will consume how much? 2 times of what B consumes. 2. Correct, guys? Yes. Are you clear with this? So now the material consumption ratio will be, right? So 2:1. Correct or not? Yes. Yes. Which means every time I lift 1 kg of raw material to produce product B, I need to take 2 kgs of raw material to produce the same 1 kg or 1 unit of product A. Are you clear with this? So to produce 1 unit of A, it requires 2 times the material that is required for product B. Are you clear with this, guys? Are you clear with this, guys? Yes, Priyanka, this is super pensum. Yes, Kaju Katri. Yes. Wait, I'm coming. Wait. Okay. Now, what happens here is, we think that, okay, fine. So what you need to do, this 15 lakh rupees need to be apportioned in the ratio of 2:1, right? So this is like that Vadivel comedy that comes in, no? Says, Aluk or Vadaya pichita Annan Thambi rendu per, something like that only. Now, the problem here is you are missing out on a huge fact. So what generally students do? 15 lakhs, 2:1. So 15 lakh into 2 by 3. How much is it? 10 lakh rupees, give it to A. 5 lakh rupees is the share of B. So material cost you are given totally 15 lakh. I have bifurcated A and B, right? Like this, for each and every component they have given some hint. With that I will find out, and I will prepare the product wise cost sheet. What is the problem? What is the problem here? Now, let me tell you this, the famous Kaju Katli example. Now, what happens is, right, let me just give you an example. Now, there is a sweet called Kaju Katli. Many of you guys will be knowing this, right? It's in the diamond shape and all. Now, I like this sweet so much, really. The problem is my brother also likes the sweet. So what happens? There will be a fight whenever a new box of Kaju Katli is being purchased. Now what happened? One day my mom bought a box of Kaju Katli, right? So what she did was, she silently bought it, kept it in the kitchen. She wanted to surprise us. So what she did was, in the late evening, she bought a box of Kaju Katli, kept it in the kitchen. She wanted to make the surprise the next morning. She wanted to tell us that, look, I purchased Kaju Katli and all. So the next morning, When she went into the kitchen, she got surprised. Why? Because the box was empty. So now the problem is, she wanted to know the culprit. She wanted to know the culprit. Now she called me. I said, so I of course I had, but just like how Vijay says, pasi போனதுக்கு அப்புறம் சாப்பிட்ற இட்லி ஒந்தில்ல. So something like that. So I only had my share. I didn't take anyone else's share. My brother also said the same thing. No, I only had my share, so he only ate extra. So now all these problems were there. Now what happened? Now my mom couldn't resolve this issue. The next day, she once again purchased this box of Kaju Katli, but this time on her way back, she went to a nearby electronic shop, purchased one CCTV camera, placed it in one corner of the kitchen, right? Just to know who is going to be the culprit. So now this is like catching the rat only. So now we got to know that another box has come inside. So what we did? So first I took 2 pieces of Kaju Katli, I ate and I went off, right? Now my brother came, he went into the kitchen and he took 4 pieces of Kaju Katli. Now tell me guys, who is the culprit? Who is the culprit? Right? That is, you can have your share, but you should not have too much and all, right? Relatively, who is the culprit? Both are culprits only. Relatively, who is the culprit? My brother. Correct? Now what I did was, I forgot telling you one more part. Yes, both are culprits. That's why I said both are partners in crime, but relatively is what I'm asking. But I forgot to tell you one part. What was it? I visited the kitchen 10 times. My brother visited the kitchen only 2 times. Now you tell me, overnight fully, I have taken how many Kaju Katlis? 20 pieces Kaju Katli, right? But my brother has taken only 8 pieces of Kaju Katli. Now you tell me who is the real culprit. This you will say. Idella solluvenga theriyunda. Yes. Okay, right. So I'm the culprit. Okay, fine. Now guys, coming back to the discussion here. The problem here is you guys were focused so much on the material consumption per unit, but you forgot to consider how many units of A and B were produced, right? In this case, if you see, every unit of B requires only 1 kg of raw material, let us say, and every unit of A requires 2 kgs of raw material. No doubt, I do agree. But what has happened? I have produced only 40,000 units of A, whereas I have produced 1,20,000 units of B. So technically speaking, not just the material consumption ratio alone should be considered. I should also include the production. I should also take that into factor and use the weighted ratio as a reasonable base to apportion my cost. Are you clear with this? Here, what I did was, you guys were misled when I said I took only 2, my brother took only 4. That is consumption per visit to the kitchen. What I didn't tell you was the number of visits to the kitchen. That also plays a role. So finally, now to look at the culprit, what we need to do is we need to consider both the consumption per visit along with the number of visits. In this case, both the consumption ratio and the production ratio put together, the weighted ratio should be the reasonable base for apportioning a common cost. Are you clear with this, guys? Are you clear with this? And hence, in this case, don't jump to a conclusion by saying 2:1. No, 2:1 is only per unit consumption pattern. Like that, the number of units of A and the number of units of B produced are completely different. That also needs to be considered. So technically speaking, I'll multiply the 2 here. It's going to be 8,000. Here it's going to be 1,20,000. Sorry, is this 8,000? Sorry, 80,000 and 1,20,000. So technically speaking, here both are divisible by 4, no? So it's going to be in the ratio of 2:3. The answer will fully change. You would have done it based on 2:1, but ideally speaking, it should have been done on the basis of 2:3. Guys, are you clear with this, guys? Are you clear with this? The Kaju Katli example, the reason why I gave, by the way, my brother hates Kaju Katli, so don't worry. I mean, I gave this example to dramatize so that you at least don't forget this in the exam hall. That's the main reason why I did that. Are you clear with this guy? Is this a real story? Yes, ma. Okay, that's the concern now. No, it's not a real story. Don't worry, it's not a real story. Obviously not. The way I was dramatizing, you guys believed, huh? Okay. I made it a point that it looks very dramatic so that you at least it stands out on top of your memory. Like, how can it be real and not? It's not like that. Okay, real stories I will not tell only. Okay, guys, fine. Are you clear with this? Are you clear with this, guys? Okay, so this is how it works for each and every component of cost. So now the solution, this is how I have prepared and I've given you. Look at this. Look at this. Now the apportionment of direct material cost. Look at this. The consumption ratio is what? 2:1. The production is how much? 40,000 is to 1,20,000. Marry the two figures, multiply the two figures, it's going to be 80,000 is to 120,000. So now it should be apportioned on the basis of what? 2:3. So now if you have here the line item is there on the top, it should be in the ratio of 2:3, right? So what is the total material cost? It's going to be 15 lakhs. So 15 lakhs apportioned in the ratio of 2:3. So how much is this? Into 2/5 and into 3/5, right? Yes, into 2/5 and into 3/5. So how much you get here? It's going to be, yes, 6 lakhs and 9 lakhs. Is that what? Is the calculation correct? Hope it is. Just a minute, guys. 1 second. Yes, right. Right, guys. Clear with this? So it's 6 lakhs and 9 lakhs. Are you clear with this, guys? Are you clear with this? Yes. Similarly for direct wages, what has happened? They have given here, read the question carefully. The direct wages for type B were 60% of those of type A. Means what? If so A and B are there, right? If I take 1 hour to produce 1 unit of B, I will be taking only 60% of that, 0.6 hours to produce 1 unit of A. So here the consumption ratio is going to be 0.6:1. Clear with this, guys? Clear with this, guys? Right. Look at this. It's going to be 0.6:1, or have I mentioned it the other way around? The direct wages for type B is 60% of A. Okay, so I'm sorry here. It's going to be, if A consumes 1 hour per unit, B is going to take only 60% of that. It's going to be 1:0.6, or you can say 100:60. Whatever it is going to be the same. It's only a proportion. Clear with this, guys? So look at this. It is going to be 100:60. But consumption ratio alone should not be taken. It should be multiplied with the production ratio. How much is the production? 40,000, 1,20,000. So you multiply the two, you get 40:72 as the overall weighted ratio that has been reduced down to how much? 5:9. So I have a total direct wages of 8,40,000. So 8,40,000 divided by, so 9 plus 5 is going to be 14, right? So divided by 14, that's going to be 60,000 into 5 is equal to, yes, you get 3 lakh and 5,40,000 respectively. Guys, clear with this? Calculation also has been mentioned here, but the main important crux here is with respect to finding out how to operate these kind of questions. Are you clear with this? Any problem here? Any problem here, guys? You guys are able to follow this? Yes? Reciprocate, guys. Right? Done. Next. Moving on to the next one. The production overhead was same per pair of A and B. Means what? Don't apportion the cost equally. Consumption ratio alone is 1:1. Once again, this needs to be multiplied with my production ratio as well, right? So look at this here. Production for POH, consumption ratio is 1:1. Right? That is only on a per unit level. The number of units should also be considered. So the production ratio is being considered here. Multiply the two, you get what? 4:12. That's nothing but 1:3. And the POH is apportioned between A and B in the ratio of 1:3. Are you clear with this? So it's 90,000, 2,70,000. The figures have been populated here as well. So it's going to be 90,000 and 2,70,000. This is basically a subtotal, right? That's about this. So now if you do it, you get what? You get your gross works cost. Correct, guys? Now opening WAP, closing WAP is not there. So this is also your net works cost. 4 addition, 1 deletion is also not there. Hence this is also equal to your COP. Are you clear with this? Hello, guys? Clear with this, guys? Yes. Next. So now add opening FG. Opening FG is not there. Then do you have a closing FG? Yes, in this question you have a closing FG. How? I have produced 40,000, out of which I've sold only 36, which means the remaining 4,000 pairs of A is remaining unsold. That's a closing FG. Similarly for B, 1,20,000 is what I have produced, out of which 1 lakh I've sold, which means 20,000 pairs or 20,000 units of B is remaining unsold. Guys, correct or not? Yes, you guys are clear with this. So it's 40,000 and 20,000 respectively. So now that needs to be valued at what? The full manufacturing cost. The full manufacturing cost per unit, we already have it with us. Clear with this, because we have unitized all these things here. So we have the cost of production per unit. We have the cost of production per unit here, and with that we'll just multiply with the closing stock. So now look at this. For that, I've given a separate working note here. Look, the total production minus sales, that gives you what? The closing FG, right? So multiply that units of FG with your cost of production per unit, you will arrive at what? Your closing FG. Are you clear with this? This closing FG value has been mentioned here as well. This closing FG value has been mentioned here as well. So it needs to be a deduction, and if you do that, you get your final cost of goods sold. The cost of goods sold is 8,91,000 and 14,25,000 respectively. Clear with this, guys? Right now, ideally speaking, you can further continue and say add AOH, add SOH, you will arrive at your cost of sales, right? From that add profit, you will arrive the sale. Or there is another way of doing. You break it into a two statement approach. That is, ideally speaking, this is the right way of doing. But anyways, in the institute, they had asked for a format of cost sheet. So in that format, they had made it as a single format of cost sheet. But technically speaking, it should have been a two statement approach. So this is another way of presenting. What we do is we come from the reverse. Sales, right, minus cost of goods sold gives you gross profit. You remember your trading and P&L account. Sales minus cost of goods sold gives you your gross profit. This gross profit goes here. From that, you reduce your AOH and SOH. You get your operating profit. That format has been used here. If you want, you can also use a single statement format. Not a problem. But let me tell you the reason why I have used this. Now, in your income statement, now, what are the units sold? They have sold 36,000 units of product A and 1 lakh units of product B, right? Now, the selling prices have been mentioned in the question. The selling prices have been mentioned in the question. Yes, the selling prices are, where is it? Is it being given here? Yes, look at this. 44 and 28. The selling prices are given here as 44 and 28. So, first you arrive at the sales value. So 44 and 28 multiply with the respective units, you will get the sales value minus your cost of goods sold, which we just calculated. You reduce the two, you will get your gross profit. Correct, guys? Now what have they mentioned? So AOH has been mentioned. So AOH, for each type of overhead, it is going to be how much? 150% of the direct wages. So the direct wages anyways is readily available on a product wise level, right? 3 lakh and 5 lakh 40,000. So put 1.5 times the respective products direct wages. So you get this AOH. For example, here it is 3 lakh rupees. 3 lakh into 1.5, that gives you how much? 4,50,000. That is the AOH for product A. Similarly, for product B, it's going to be how much? 5,40,000 into 1.5. That's going to give you how much? 8,10,000. Clear with this? Then you have SOH as well. So the selling cost was how much? 1.5 rupees per pair. Now always remember, the selling cost and administration cost, the period cost, are always linked to the units sold. So 1.5 rupees per pair sold, not per pair produced. Are you clear with this? Right? That's why I have clearly mentioned the units sold here on the top. So now if you see, this 1.5 into 36,000 gives you 54,000. 1.5 into 1 lakh gives you 1,50,000. So that you do. So now sales minus cost of goods sold, you get gross profit minus AOH minus SOH. You finally arrive at your operating profit. Are you clear with this? Now remember one thing. In your cost sheet, you need to present the cost sheet in a total level as well as on a per unit level. It needs to be presented in total as well as on a per unit level. But how do you unitize it? Sir, simple, sir. Take the total column, divide it by the number of units. Now the question is, will you divide it by the number of units produced or by number of units sold? Now look at this. Up to the cost of production, right? These components are tied to units produced. Are you clear with this? Right? Whereas from COGS till the end, right, all these costs are tied to units sold. So, or in other words, your product costs are tied to units produced, your period costs are tied to units sold. So that is the reason why I have given this big flower bracket and all. To arrive at the cost per unit, these components should be divided by units produced, and from here onwards it needs to be divided with units sold to arrive at the per unit level. Are you clear with this? This is the reason why I generally prefer preparing a two statement approach where I say that the cost sheet stops at COGS. Your cost sheet stops at cost of goods sold, right? It stops here at cost of goods sold, and here on the top itself I will mention the units produced, because your cost sheet components will be tied with the units produced, whereas your income statement, I call the second statement as income statement, right? These income statement components are tied to your units sold for the purpose of calculating the per unit cost. Are you clear with this? So to unitize it, clearly remember up to the cost of production, so you can unitize it based on your units produced, and from your COGS it needs to be unitized on the basis of units sold. Are you clear with this, guys? Are you clear with this? This is all about this particular chapter, and in this chapter we have almost touched upon all the major aspects of this particular chapter. Clear with this, guys? So of course this is not a substitute for a regular batch, because a regular batch obviously it's going to be comprehensive. About 10 hours we are going to do the entire single chapter itself. So this is going to be a last minute revision, is going to help you to recapitulate all the important concepts that were covered originally in our regular batch. Clear with this, guys, right? With this, one very important chapter is being done and dusted. Okay, someone has a doubt here. Sir, for AOH, nothing is mentioned. We have to classify as product or production or general. Okay, so if AOH, if they have just mentioned it as administration overheads, it needs to be classified as AOH general only, because AOH specific, that is related to production, needs to be specifically mentioned as such. Or in that particular previous question they had given us that production control manager's salary and all. So their scenario was clearly, it was very clear and evident that it is administration cost related to production. If they have just mentioned it as admin, take it as an income statement item, that is treat it as this particular general administration expense only, right? Should we follow the two statement format? Okay, for sums that involve stock valuation, yes, you can do. But for questions like the previous questions, definitely not do, because the previous question was fully a test on the format of cost sheet. If a question comes like this, definitely don't go for the two statement approach. So two statement approach, when I can do, for this question it is accepted. It is accepted by the institute. Generally, wherever stock valuation comes in this question we had to value your FG and all, no, right? The FG valuation and all was done. So whenever the stock valuation comes in, you are free to use a two statement approach. If the question tests you more specifically on those 4 line items, 4 addition, 1 deletion, scrap and all these things, in that case then definitely follow only the main the single statement approach. Clear with this, guys, right? So this is the conclusion that I can give you with respect to the usage of a single statement approach or a double statement approach. Are you clear with this, guys? So with this, we have completely covered and revised this particular chapter called as cost sheet. So now, guys, we'll take a break now. Can we break for lunch? Because I think if we take a small break and then come back again, that's going to be quite a disturbance. So we'll have to move to the next chapter of overheads. So can we just take 1 hour break? Lunchtime. So let's take 1 hour break. Yeah, guys, respond. Tell me something, only then I'll know. I'm happily giving you breaks, guys. You don't want, huh? Yes, sir. Okay. Yes, sir. Okay. Fine. Okay. Second, someone's asking me, sir, if salary paid to supervisor for POH isn't for POH, why they gave in AOH? I don't understand, Murli. What is it? If salary paid to supervisor for production overheads isn't for production overheads, why they given AOH? I didn't understand the question. I'm sorry. Okay, so okay, guys, so we'll break now. And we will meet back at 1:30, right? we'll be starting off with the next chapter called as production, your overheads, right? So the detailed discussion for overheads chapter will be done. Okay, so I will see you all at 1:30 sharp, 1 hour. Okay, guys, thank you so much. Thank you. So this, by the way, guys, the streaming will be on. As in, I will just, the camera might be off. That's about it. But the streaming will be on. Do not worry. It will be on. It will be on. Okay. So you need not, no separate links and all. So for the entire day, the entire session, it's going to be the same link only. Okay. You can just come back and you can continue watching it. That's about it. Okay. Right, guys. And one more request, please be more participative, especially the ones who are attending on Google Meet. I think the ones attending on YouTube are participating much more, right? They are participating much more. Please, guys, even I want you guys to participate much better. And I told you guys to turn on your cameras. I think 1 or 2 have only done that. Please make it more interactive so that, you know, it is going to be easy for you guys only. That's about it. Because at the end of the day, whatever time that I'm spending here, I'm here for you guys, right? So please make the best use of it. So I just wanted to give you guys a chance to, you know, maybe interact so that it will enhance the understanding and make the best use of it. That's about it. Okay, so someone has a doubt here. Yes, guys, we can break now. Okay, I'm just taking up a few doubts that someone has. What was that? When will we consider stores and spares as POH? Stores and spares are always POH only, no? So they are the spare parts used for machines in the factory. So they are indirect expenses. So in the factory, so it's POH. What is the issue there? Can we follow the true statement that was answered? Okay, okay, right. Okay, guys, fine then. We'll break and we'll meet at 1:30 sharp. Thank you all. Thank you so much. Yes, let's get started. Is everyone back? You guys had your lunch? You guys had your lunch? Yes?
Yes, sir.
Okay.
So,
Okay. Everyone back? Okay, guys, just give me a second. I'm just on it. Okay, right, so let's begin. Now let's move on to the revision of the next chapter, which is overheads. Now, to give a backdrop of this chapter is slightly big as compared to the other chapters, and this forms the core of the absorption costing, right? So now in this particular revision that we are going to do, I will be touching upon the major aspects of this overheads chapter. So definitely covering the entire overheads chapter is not possible. So the major aspects of overheads chapter will definitely be covered, right? And from an examination perspective, the never miss areas, I will just recapitulate it. Clear with this, guys? So this is going to be the agenda for the chapter overheads. Now, in this chapter, broadly, these are the 5 things that we're going to discuss. One is the concept of semi-variable overheads. Then we'll be doing the concept of primary and secondary distribution. Then about the absorption costing. Then 2 relative areas called as capacity determination and machine hour rate problems. These are 2 allied areas, right? And we will also be doing a few numerical questions in this particular segment. Fine, guys. Now first, let us start this chapter off with the standalone area called as semi-variable overheads. Now the semi-variable overheads, what is it? Now if you see Costs can either be a fixed cost or a variable costs, right? As you all know, what is a fixed cost? A cost that remains constant in total. For example, and a very good example regarding this could be your factory rent. Let's say I'm paying a monthly rent of 1 lakh rupees to my landlord. This rent is not going to change depending on how many units I produce, right? So whether I produce 10,000 units or I produce 1 lakh units, now the rent as such is going to remain the same. Yes, guys, right? So this is an example of fixed cost. Now, what is an example of a variable cost? Example for variable cost would be material cost, right? So in this case of variable cost, so what do you mean by a variable cost? This cost is incurred only if I produce the next additional unit. If I don't produce an additional unit, the cost with respect to that need not be incurred. For example, let us say for me to produce every unit of a pen, I need to use some plastics that is worth 5 rupees, right? Only if I produce that one pen, I need to incur 5 rupees, right? If I produce 10,000 pens, my material cost will be 10,000 into 5. If I produce only one pen, it will be 1 into 5. Or in other words, variable cost remains constant on a per unit level, right? And it moves proportionately with respect to the volume, whereas fixed cost, no, it remains constant in total. Are you clear with this? This is the basis of cost behavior pattern. Fixed cost remains constant in total and variable cost remains constant on a per unit level. Clear with this? Now, what do you mean by a semi-variable cost? Now, there could be certain costs which are neither constant on a total level nor they are constant on a per unit level, right? These types of costs are known as semi-variable cost. Now, for all the decision making purposes, definitely cost needs to be classified as your variable and fixed component. By the way, guys, the objective of this particular chapter overheads is actually stock valuation profit computation. This chapter is not a decision making area. That's why I said this is actually a separate segment of this chapter, a unique area alone, right? In this particular area alone, we will be seeing the concept of semi-variable overheads. So it's a separate segment in this particular chapter. Once this is done, then the remaining portion of the chapter is going to be interlinked. So this is a separate segment of this particular chapter. Now, for all decision purposes, I was telling you in the earlier session, that is in the cost sheet area, that for all decision making purposes, cost needs to be classified into variable and fixed. Now, there could be some costs which are neither constant on a total level nor they are constant on a per unit level. Now, these costs are called as semi-variable costs. Now, with the semi-variable cost, I cannot do any kind of decision making. So what I need to do is this semi-variable cost needs to be necessarily segregated into the variable component and the fixed component. Are you clear with this? How do we go about with that is what we are going to discuss here. Segregating the semi-variable costs, right? So in this segment, we are going to see what are the conditions to be met, right? There's something called as high-low point. There's something called as simultaneous equation. And what will you go about, what will you do in case the capacity is given in terms of percentages, right? These are some typical areas where institute is testing. If at all this particular concept comes in, these are the areas that they are testing. Now, first, as I told you, fixed cost always remains constant on a total level. The variable cost always remains constant on a per unit level. And definitely, two activity levels should be given to segregate your semi-variable cost into your variable component and fixed component. A typical example. Now, what they are saying is, when I'm producing 5,000 units, my repairs and maintenance cost is how much? 24,000 rupees. When I'm producing 8,000 units, my repairs and maintenance cost is going to be 36,000 rupees. Now, first, tell me whether this cost is a fixed cost. Tell me whether this cost is a fixed cost. This cost is clearly not, one second. So, this cost is clearly not a fixed cost. Because it is not constant in total, right? Clear with this? Now, can I say this this cost is a variable cost? For that, I need to arrive at the per unit cost. So now look at this. At 5,000 units level, what is the per unit repairs and maintenance? 24,000 divided by 5,000, that gives me 4.8 rupees. Whereas at 8,000 units level, it is 36,000 divided by 8,000, that is going to be 4.5 rupees. Now, if you observe here, this repairs and maintenance cost is neither constant in total nor is it constant on a per unit level. Now this is a clear-cut case of a semi-variable cost. Now what am I going to do in a semi-variable cost? I need to necessarily segregate it into variable component and fixed component. Sir, how will you do that, sir? See, clearly we can understand that in repairs and maintenance, some portion is fixed, some portion is variable. So put together only this repairs and maintenance is there. Clear with this? Now, if I mix the two and all, I can't take a meaningful decision out of it. Hence, it necessarily needs to be segregated into variable and fixed component. How are we going to do that? Logically, you tell me, repairs and maintenance cost is 24,000 rupees if my production, my volume is going to be 5,000 units. If I increase the volume by 3,000 units, right? What happens? My repairs and maintenance cost increases by how much? It increases by 12,000 rupees. Correct? It increases by 12,000 rupees. From 24, it becomes 36. Right? Now, can I say that this 12,000 rupees increase is nothing but the variable component pertaining to the 3,000 units? Correct or not? Yes, this 12,000 rupees. See, overall, this repairs and maintenance has both fixed as well as variable element in it. Now, if my repairs and maintenance cost is increasing, right? Because I'm increasing my output, it is purely because of the variable component sitting inside it. Or in other words, I can say that this 12,000 rupees is nothing but the variable costs pertaining to this incremental units of 3,000. So technically, what is my variable cost per unit? 12,000 divided by 3,000. I would say that the variable cost per unit is 4 rupees. Are you clear with this? Now you take any one output level. Now at 5,000 units output level, what is my repairs and maintenance? 24,000 rupees. Correct? Right? And we know that this 24,000 rupees of repairs and maintenance has a variable component as well as a fixed component in it. So this 24,000 rupees is equal to, right? The variable component is how much? 5,000 into 4. That's going to be 20,000 plus the fixed component inside it. So now we can find out the fixed component. The fixed component is going to be 24 minus 20. 4,000 rupees. Are you clear with this? Or in other words, I can say repairs and maintenance, the variable component is 4 rupees per unit and the fixed component is 4,000 rupees in total. Are you clear with this? Now using this, I can take any kind of meaningful decisions. Are you clear with this? Now look at this. This is called as a high-low point. What is a high-low point? When they have given a semi-variable cost, necessarily they need to give two data, that is the semi-variable cost pertaining to two output level needs to be definitely given. Only then you can do it. Now what do you do here? The variable component you will find out by using this formula, delta total cost divided by delta units, or in other words, there's nothing but the change in total cost divided by change in units. If you do that, you will get the variable cost per unit of 4 rupees. Now what will you do? You go to any one output level, right? So the total cost minus the variable component gives you the fixed component. If you see here from the lower point, so 24,000 was the total cost minus of 4 into 5,000, the variable component gives you the balancing figure of fixed cost. Are you clear with this? So this is how you segregate your variable, you segregate your semi-variable cost into variable component and fixed component. And now with this, you can try to prepare the cost levels for any output. Are you clear with this, guys? Are you clear with this? So always remember, costs for all decision making purpose needs to be represented either as a fixed cost or as a variable cost. Clear with this? If there is a semi-variable cost, segregate it into fixed and variable component, and the variable cost always makes sense only if it is represented on a per unit level. Fixed cost makes sense only if it is represented in total. Are you clear with this, guys? This is called as your high-low point. Similarly, the very same sum can also be done using something called as simultaneous equation method. How will you do it? Very simple. Total cost is equal to variable cost plus fixed cost. Correct? No? Right? Because the semi-variable cost has a component of variable as well as a component of fixed in it. So you say that let the variable cost per unit be A and the fixed cost in total be B. Okay, so two variables we are taking. You frame an equation. This 24,000 rupees of the repairs and maintenance cost is nothing but 5,000 units into the variable cost A. So 5,000 A plus B. Correct. Similarly, this 36,000 rupees for the second output level is going to be 8,000 A plus B. Are you clear with this? So now you have framed two equations. Solve the equations for the A value and B value. A value is going to be your variable cost per unit and B value is going to be your fixed cost. Are you clear with this? These are different methods in which your overall semi-variable cost can be classified into variable and fixed. Sir, why are we seeing all these things in this particular chapter of overheads? Because generally the semi-variable cost and all actually fits into the category of overheads. Generally your other items, other indirect expenses will only be semi-variable in nature. Technically speaking, these are a part of your flexible budget area. These are a part of your flexible budget area. That's why I said this particular segment of discussion alone is ideally not a part of the core of overheads chapter, because whatever we are going to see from now on in this chapter, like primary distribution, secondary distribution, absorption, it has a completely different objective to achieve. Are you clear with this, guys? Fine. And in case they have given it in terms of capacity, you know, the production, the output volume can be expressed either in units or in capacity. Suppose they have given this capacity. Let's say they have given at a 30% capacity, my total cost is 23,000. At a 70% capacity, my total cost is 43,000. If they have given it like this, then using capacity levels also you can do it by taking an assumption and all. They have just said here, let 100% capacity be 100 units. In that case, a 30% capacity is going to be 30 units. A 70% capacity is going to be 70 units. Now with this, what will you do? You have two levels. You have two levels of cost. You have two output levels. So now the segregation will be the difference in my total cost divided by the difference in units. You'll get the variable cost per unit. That is what they have done here. Delta total cost divided by delta units. They have arrived at the variable cost per unit. Now you take any one output level. There you take the total cost. From that you subtract the variable component. So here they have taken, yes, the first part, 23,000, that is the total cost, minus the variable component is what? 30 units into 500, the variable component. The balancing figure is going to be your fixed cost. So now with this they can find out that the variable cost per unit is 500 rupees and the fixed cost in total is going to be 8,000 units. Are you clear? 8,000 rupees. Now if you have the data like this, now for any output level you can arrive at the repairs and maintenance cost, because now you have the variable component and the fixed component readily with you. Are you clear with this, guys? This is the concept of segregating your semi-variable cost, and that is a separate matter of discussion in this chapter. It's ideally a separate area by itself. Clear with this, guys? Right? Now park this concept aside. Now is when we are going to enter into overheads. Clear with this? Shall we get started? Shall we get started here with this particular segment of overheads, the core of overheads? Now only we are going to get started. So now the first part is a standalone discussion. It's been done now. Now is when we are going to start off with this chapter of overheads. Clear with this, guys? Shall we get started? Shall we get started? Come on, guys. Come on, use the chat box. Yes, guys, participate. The Google Meet, guys. Now turn on your cameras. Do I need to tell you, guys? Come on, guys, turn on your cameras, please. I tried my level best to do this VC as well. So please, guys, it's only for you. It's only going to benefit you. And it also gives me a motivation that yes, people are actually interactive, right? So that's the reason, that's the whole purpose of it. Okay, and don't worry, the YouTube guys, I am constantly checking the comment box, the chat box, do not worry, right? So yes, okay, fine. Great, guys. Now let's get into this chapter. Now guys, full attention. One of the core discussion is what we are going to do here. And trust me, it's not an easy thing for a faculty as well, because this is slightly a big chapter. I'm going to condense it and put it in such a way that whatever limited thing that we are learning here in this revision, that also gives you a value addition, because I don't want to just do something for the sake of it. And no, that's not the point here. You have assembled here, so you guys have given me the responsibility over your time. So please make sure that you are also making the best use of it. Now, this chapter, overheads, the second one. Right. What is this chapter all about? Now, this chapter helps you achieve the objective of stock valuation and profit computation. Stock valuation and profit computation. As I told you earlier, our subject has three objectives: stock valuation, profit computation, decision making and control. And this chapter helps you achieve the objective of stock valuation and profit computation. Sir, how, sir? We saw in the cost sheet discussion that every unit of stock is valued at full manufacturing cost, or in other words, every unit of stock is valued at direct material plus direct labor plus direct expense and your production overheads. Correct, guys? Full manufacturing cost. Your AOH and SOH are period cost, P&L items, whereas these four are your trading account items used to value every unit of stock. Clear with this, guys? So now, whenever I am actually valuing my stock, I need to know what is the per unit cost of direct material, what is the per unit cost of direct labor, what is the per unit cost of direct expense, and what is the per unit cost of POH. Now, guys, direct material, direct labor and direct expense, these are called as prime cost components. You guys know this, right? We just did it right now. Prime cost components. Now, I don't have a problem with prime cost components at all. Why? Let us say I am producing 1 unit, right? Whatever it is. For every unit of pen that I manufacture, right, I know exactly for 1 unit of pen how much amount of material is required, right, and what is the material cost per unit of that material also. Or in other words, my direct material, direct labor, direct expenses, my prime cost components are readily traceable and available on a per unit level. Agreeing with me on this or not? Agreeing with me on this or not? Yes, but the problem lies with my production overheads. Why? Production overheads by nature are indirect manufacturing costs. These are the indirect costs incurred inside the factory. I do not know on a per unit level, I do not know how much is the production overheads incurred. Correct, guys? Agreeing with me on this, right? These are items of costs that are incurred in bulk. These are items of costs that are incurred in bulk. Like, for example, an example of production overheads will be your factory rent, your repairs and maintenance, your supervisor salary, your depreciation, right, etc. There could be 20-30 line items of expense. Now, how can I trace them on a per unit level? I don't incur them on a per unit level. Are you agreeing with me on this or not? Now, in this chapter, now, overall, to achieve the objective of stock valuation and profit computation, I need to have the manufacturing cost per unit. Are you clear with this? Only if I have the manufacturing cost per unit, I know how to value every unit of my stock. So, number of units lying in my stock into this manufacturing cost per unit, I can arrive at the stock valuation and achieve the objective. Now, for me to arrive at the manufacturing cost per unit, I don't have a problem with respect to the prime cost components because they are readily available on a per unit level. The problem lies only with respect to my production overheads. So the overall objective of this chapter is to calculate the overhead cost per unit. Are you clear with this? Only if I calculate the overhead cost per unit, I will be able to arrive at the manufacturing cost per unit. Only if I know the manufacturing cost per unit, I can achieve the overall objective of stock valuation profit computation. Are you getting the chain link here? Clear with this? So the immediate objective here is to calculate the overhead cost per unit. Agreeing with me on this or not, guys? Yes, you are all able to understand this. Now, sir, what is the big problem? What is the big problem, sir? You said you have line items, so many line items. These are all indirect costs, not readily traceable on a per unit level. We also understand that, but what is the problem? You collect all the costs, take the total overheads, right? Divided by the number of units produced. You get the overhead cost per unit. No, matter solved, right? Why do you have to keep a separate chapter and make our life miserable? Guys, are you clear with this? This would be your next question. Take the total overheads, right, divided by the number of units produced, right, arrive at the overhead cost per unit. You said the objective of this chapter is to calculate the overhead cost per unit. Yes, we have found it like that. What is the big deal? Now, let me give you an example. just to tell you why this could not work out like it. Let me give you an example to tell you why this could not work out like the way you just told me. Now, let us say I'm a company called Titan. Have you all heard Titan? Right? Tata's, it is in Tata Group. Right? By the way, Titan's stock is shot up like anything. That is FM topic. Coming back here. Now, Titan is in the business of manufacturing what they are in the business of manufacturing. The famous thing that they are known for is watches, right? Not just watches, they also manufacture your eyewears, your eye gears, you know that, right? So Titan Eye Plus, they have a separate chain of stores there. So eye gears, right? And let us also say they also manufacture wallets. Example, clear with this guys, right? Now what has happened is, let us say in a same factory, using the common factory, in a single factory, what they have done, they have manufactured 10,000 watches, right? 20,000 eye gears, right? And then they have manufactured 30,000 wallets. Are you clear with this, guys? Are you clear with this? Now let us say overall in this entire year, they have incurred an overall total overheads of 6 lakh rupees. Overheads totally incurred was 6 lakh rupees. Now you tell me this 6 lakh rupees, right? If I were to follow whatever you just said, so take the total overheads divided by the total number of units. So in that case, overheads divided by number of units, overheads figure, the numerator I have 6 lakh rupees. What will be the denominator? Can I say the denominator is 10,000 plus 20,000 plus 30,000, 60,000? Absolutely not. Now you tell me this is 10,000 watches. This is 20,000 different product altogether, eye gears, and 30,000 wallets, further another different product. Now these are dissimilar items. This is like asking 4 monkeys 5 plus 5 donkeys is equal to how much, right? You can't add dissimilar items. Are you clear with this? Are you clear with this? In this case, the denominator itself is indeterminate. Now don't tell me, sir, 6 lakh rupees are apportioned in the ratio of 1:2:3. What is the basis? What is the basis? Watch could be a high value product, right? Eye gear could be a completely different product, and wallets, the cost consumption pattern itself could be different. You can't directly jump to the conclusion by saying add up everything and you just include it here. No, first of all, the denominator itself is indeterminate here. Are you clear with this? Are you clear with this? And hence this is one of the reasons, and hence it is not as simple as taking up your total overheads, dividing it by the total units, right? And then arriving at the overhead cost per unit. No, it doesn't work like that. Are you clear with this? This is the reason why we are having a separate chapter called as overheads. And in this chapter, whenever I use the word overheads, predominantly it refers to production overheads. Why? Because only the production overhead cost needs to be broken into a per unit level. This issue is not there for AOH and SOH. Why? They are anyways period cost. They are not considered for stock valuation. P&L items, it hits your cost sheet in bulk. It hits your P&L in bulk. Are you clear with this, guys? So clearly understand, the word overheads generally means POH plus AOH plus SOH. But about 95 to 98% of this chapter revolves around production overheads only. Are you clear with this? First understand this, right? So whenever in the context of this chapter I am using the word overheads, you understand that I am referring to production overheads. Clear with this, guys? Clear with this? Now first you understood the objective of this chapter, number one. Number two, why we have the separate chapter, why are we studying it separately, and why is it not directly like, taking the total numerator divided by the denominator? Yes, you guys are able to follow this? Yes, guys? Now coming to the core of discussion. Sir, now what is the solution, sir? On one side, I have what? I have some multiple line items of expenses, correct? These are some bulk expenses. And on the other side, I have multiple products, and each of these products I need to calculate the overhead cost per unit. So the ultimate objective of this chapter is what? To calculate the overhead cost per unit of watch, overhead cost per unit of eye gear, overhead cost per unit of wallet. Correct? No, I am dealing in multiple products. product wise overhead cost per unit I need to find out. Are you clear with this? Right? Sir, how are we going to bridge the gap? On one side, we have the bulk items of expenses, and on the other side, we need to arrive at the overhead cost per unit of each of the components. How are we going to do this? Using a three-step procedure. Using a three-step procedure. What are the three-step procedure? The first step is called as primary distribution. The second step is called as secondary distribution, and the third step is called as absorption. Are you clear with this? And these three steps put together is only called as absorption costing system. Are you clear with this, guys? Are you clear with this? Right? This is the basis. This is the basis and the reasoning why you are learning this particular chapter. Clear with this, guys? Right? So the three-step roundabout procedure called as absorption costing system. What are the three steps involved? First, you do something called as a primary distribution. Then you do something called as a secondary distribution, and then you do something called as absorption. At the end of this three-step process, what would have happened? Multiple line items of bulk expenditure would have got converted into overhead cost per unit of watch, overhead cost per unit of eye gear, overhead cost per unit of wallet. Are you clear with this? And the entire chapter revolves around how do you do it? And having done that, there are some further more complicated issues. What are they? These are the subject matter of discussion that we're going to see in this chapter. Clear with this, guys? This is a bird's eye view of this chapter. Shall we get started? Shall we get started? Guys, shall we get started? Yes, done. Now, let me give you an example. Let me give you an example, right? Let us take an example of this Tirupur cotton belt, right? So, for those who do not know, there is a place in Tamil Nadu called Tirupur, which is known for its, textile industry, right? You take world-class top big companies like Arrow or Alan Solly or any big companies that claim themselves to have high-quality products. At the end of the day, predominantly, if they are doing business in India, they would have been manufactured in Tirupur. So technically, you are paying more for the brand and not for the product. Coming back here, so Tirupur belt, world class. You should see how they are doing it. You will even get a low quality product and you will even get a top quality product. They have multiple ranges. You will be mind blown, right? That is the level of this textile, the depth of textile industry that we have here. Something that we all need to be proud of in this, entire the country needs to be proud of. Anyways, coming back here, let us take an example of that. Now, what happens? Now, let us say first I have the line items of expenses. So, let us say I have your factory rent. Then I have supervisor salary, right? Then I have repairs and maintenance. Then I have depreciation of plant and machinery, right? All these things I am just having, let's say, power expense. So I have multiple line items of expenses. Now, first step of this absorption costing system is what? Primary distribution. What does primary distribution say? Now, let us say this particular company, what company? The textile manufacturing industry. Let us say they have the following departments in their organization. They have the following departments in their, in their factory. Let us say they have a spinning department. Then they have a weaving department. Then they have a printing department, right? And apart from that, they also have a canteen, right? And they have stores department. Clear with this? Now if you see the spinning department, I call it as P1 for our discussion. Weaving department, I call it as P2. Printing department, I call it as P3. Canteen department, I call it as S1. And stores department, I call it as S2. Sir, what is this P series and what is this S series? I will tell you. Now, if you see, typically in a textile business, first they will take the raw cotton, they will first spin and take the thread out of it. That is the spinning department. Having taken that thread, it needs to be woven, right? Based on whatever you want, maybe a sari or maybe a shirt or maybe a pant or whatever it is. That happens here in the weaving department. And once the weaving is also done, it needs to be printed. The color dyeing that you want, the pattern that you want, that needs to be done. and that's about it. Then the final product is over. Clear with this? So these three are the departments through which every product will get passed by. Clear with this? So the departments through which the products passes by are known as production departments. That's why I'm calling this as P1, P2, P3. Are you clear with this? Are you clear with this? Now in the factory, these three are not the only departments. They also have a canteen department to provide food to all the workers working in the factory. Similarly, they have a stores department to handle all the raw material and all. Now, my production does not get routed through these two departments, but these two are the departments which support the production departments. These are called as service departments. Are you clear with this? Are you clear with this? So clearly understand, in a factory there will be production departments and service departments. Production departments are the departments through which the products will pass through, and the service departments are the departments which are meant for assisting the production departments. Are you clear with this, guys? Are you clear with this, guys? Now, what the primary distribution says is, the primary distribution method says is, first, these line items of expenses are there, no? These line items of expenses are there, no? Right? Distributed between all the departments in the factory. Distributed between all the departments in the factory. Why? Why do you have to distribute it between all the departments in the factory? Because, so this chapter says that the reason for you to incur an expense is because you are having a department. If you don't have a department, you will not be incurring any cost. Are you clear with this, guys? Hence, so what you do is, these line items of expenses are basically incurred because of the presence of department. So you need to apportion all the line items of cost to all the 5 departments. Are you clear with this, guys? The 5 departments are, in this case, there could be 4 departments, there could be 20 departments also. In our example, I've taken 5 departments. Clear with this, guys? Sir, okay, sir, but on what basis will we do? On the basis of benefits derived ratio. Meaning what? For example, factory rent, right? Let us say it's a common costs, right? Of, let's say, 1 lakh rupees. This is incurred by all the departments put together only. No, it's a common cost. What will you do? It needs to be apportioned on the basis of the floor area taken by each of these departments. Clear with this? Similarly, your supervisor's salary, use a reasonable base. Your supervisor's salary should once again be apportioned between all these 5 departments, maybe on the basis of the number of employees working below them in each department, or maybe on the basis of direct wages. Your repairs and maintenance could be on the basis of the capital value of machines deployed in each of these machines, each of these departments. Your power cost may be based on the machine hours consumed by each of these departments. Are you clear with this, guys? Or in other words, first, the primary distribution states that whatever is the line item of expenses, there could be 20-30 line item of expenses. At the end of primary distribution, each and every line item of expense should be apportioned between all the departments using a reasonable basis. Are you clear with this, guys? At the end of primary distribution, what would have happened? So 20 line items of expenses will now be reduced to just 5 line item of expenses. Are you clear with this? Right? Because now at the end of primary distribution, you will only be having P1 overheads, P2 overheads, P3 overheads, S1 overheads, and S2 overheads. And each of these overheads will be having a share of all the 20 line items based on the benefits that they have taken. Are you clear with this, guys? Now 20 line items got reduced to just 5. Are you clear with this, guys? Yes. Now at the end of primary distribution, right, now comes the second step called as secondary distribution. Now what happens in a secondary distribution is that, now, what secondary distribution says, okay, now at the end of primary distribution, you have only 5 figures, no? P1 overheads, P2 overheads, P3 overheads, S1 overheads, and S2 overheads. Now, what secondary distribution says is, look, why do I have the service departments? Why do I have the service department? To support my production departments only. So now, technically speaking, S1 and S2 departments, right, they are meant to serve only the other three, P1, P2, P3 departments. So they are saying secondary distribution asks the service departments to redistribute their share of overheads back to the production departments, right? So S1 needs to give its share of overheads fully to P1, P2, P3 and stores departments. S2 should also do the same. So that is, the secondary distribution says the service department overheads should be redistributed back to the production department. Sir, on what basis, sir? On the basis of services rendered ratio. Services rendered ratio. I will tell you what it is. For example, canteen, the services rendered will be on the basis of the number of employees sitting there. Correct? No? Right? So canteen, what does a canteen do typically? They provide food to all the staff. Are you clear with this? Right? So the canteen's cost, S1 department overhead, should be redistributed back to P1, P2, P3 on the basis of number of employees. Are you clear with this? Whereas a stores department, so it's basically this department handles all the materials and all that. So it needs to redistribute S2 department's overhead back to the production departments, maybe on the ratio of using the basis of the number of requisitions raised in a particular year, or maybe the material handled by each of the department. Some reasonable basis will be there. Are you clear with this, guys? Are you clear with this, guys? Are you clear with this? Yes. Now at the end of secondary distribution, what happens? The 5 figures will now get further reduced to just 3 figures. So now you will be having only P1 overheads, P2 overheads, P3 overheads. But guys, mind you, the total remains the same. The total remains the same. Obviously, the total will remain the same. The number of line items alone will reduce. If you add here the 20 line items, whatever is the total, that total will be equal to the total of P1 plus P2 plus P3 plus S1 plus S2. Further here also, after secondary distribution, the P1 plus P2 plus P3, it will give the same total only, because the total overheads will not change. Now the department wise share alone keeps on changing. Are you clear with this, guys? Are you clear with this? So at the end of secondary distribution, now all department overheads now gets converted only into production department overheads. Clear with this, guys? Right? Now comes the third and the most important part, called as absorption. So now what they need to do, so this is a textile industry, textile company, right? So now let's say they deal in 4 different products. They deal in menswear, right, ladies wear, kids wear, and let us say they also deal in footwear, right? Now what I need to do at the end of secondary distribution, now I have reduced down all the line items into just 3 line items. I have 3 bulk figures with me, correct? P1 overheads, P2 overheads, P3 overheads. Now this I need to convert it into overhead cost per unit of menswear, overhead cost per unit of ladies wear, overhead cost per unit of kids wear, and overhead cost per unit of footwear. Now once I do this, the objective of this chapter is done, and with this I will be able to achieve the overall objectives of stock valuation, profit computation. How? Now I got my overhead cost per unit for each of the different types of products. Readily my prime cost components are waiting for me on a per unit level, right? Just add the production overheads per unit, you will arrive at the total manufacturing cost per unit. With that you can do the stock valuation, and the entire subject is done with respect to this objective. Clear with this, guys? Now here if you see, I have 3 bulk figures. Now how am I going to convert this into the per unit level? That is the subject matter of discussion in the third phase, called as absorption. Clear with this, guys? That is slightly an intricate technique. Clear with this, guys? So overall, this is the big picture of this particular chapter. This is the big picture of this particular chapter. Now if you just go through this particular material, now you will be able to understand this, right? So now yes, the primary and secondary distribution. Okay, so let me just walk you through this. The primary distribution, this is what I told you. See, what happens here is, now there are multiple line items of expenses. There are multiple line items of expenses here, correct? There are multiple line items of expenses here. So all the line items of expenses should be apportioned between what? Should be apportioned between all the departments, production and service, correct? This is called as primary distribution, correct? So at the end of primary distribution, so many line items of expenditure gets converted into all department overheads. Clear with this, guys? Then comes your secondary distribution. What will you do? The service department overheads are redistributed back to the production department. So at the end of secondary distribution, you have what? You have only your production department overheads. Are you clear with this, guys? Are you clear with this? Is everyone able to understand this? Right now, let me take a small illustration. Let me take a small illustration here. Now, you look at this, guys. We will be doing a comprehensive question with respect to this 3-step procedure. Do not worry about it. Now, guys, one more thing I want to tell you, right? This primary distribution is fairly simple. What is primary distribution? The primary distribution is line item of expenditure need to be apportioned between all the departments using some benefit derived ratio, logical basis. Clear with this, guys? This anyone and everyone can do. What does the secondary distribution say? The secondary distribution says that the service department overheads need to be redistributed back to the production department. Clear with this? Now there are different methods of secondary distribution. There are different methods of secondary distribution. This is very, very important understanding. There are multiple methods of secondary distribution. Now, many people know that there are different methods of secondary distribution, but the problem is they do not know that there is actually a rule as to when to use which method. So, if you see secondary distribution, broadly speaking, there are three methods. The first one is called as direct redistribution method. The second one is called as step ladder method. And the third one is called as, yes, reciprocal services method. And under the reciprocal services method, there are broadly three methods here. One is called as simultaneous equation method. Then you have something called as repeated distribution method. And finally, you have something called as a trial and error method. One not so good method, but anyways, it doesn't get tested much, but anyways, it's not a very good method as well, right? Clear with this, guys? Now, there are broadly three methods I told you: direct redistribution, step ladder, and reciprocal services. And the reciprocal services can be done either using simultaneous equation, your repeated distribution, or trial and error method. Okay. Now there is a rule, right? When to use which of these three methods. Basically, these three methods under the reciprocal services method will give you the same answer. That is simultaneous equation, your repeated distribution, and trial and error. These three methods will give the same answer, right, under the reciprocal services method. Clear with this, guys? Now, sir, what are we talking about here? The service department overheads need to be reapportioned back to the production departments, right? Now, when to use which method is what we are talking about right now. Are you clear with this, guys? Are you clear with this? Now, look at this. First, let me take an example. Direct redistribution method. That is the first method. Now, direct redistribution method, when will you use it? Direct redistribution method, when will you use it? Let us say I have three production departments, P1, P2, P3, right? Then I have two service departments, S1 and S2. Clear with this, guys, right? Now, in this situation, let us say S1 is a stores department. S1 is a stores department and S2 is a repairs and maintenance department. Clear with this? Now you tell me, a stores department will provide services to the production departments, correct or not? Yes, guys. Will they provide any service to repairs and maintenance department? No, because stores generally, stores department provides services only where the material movement is there. The material movement will not be there here for S2 and all. Correct, guys? Are you clear with this? Guys? Yes. Similarly, here S2, the service department 2 is a repairs and maintenance department. S2 department also provides services to P1, P2, P3 only. S2 also will not provide any services to S1. Or in other words, wherever there is a situation where there is no give or take between the service departments, there is no give or take. in that case, I can use my direct redistribution method. Are you clear with this, guys? Are you clear with this? I'm repeating, when there is no give or take between the service departments, only then my direct redistribution method should be used. Are you clear with this, guys? Yes, you guys are able to understand this. You guys are able to understand this. Now, when do I use stepladder method? When do I use stepladder method? Let us say P1, P2, P3. I have three production departments, and S1 and S2. I have two service departments as well. Now, let us say S1 department is a stores department. S2 department is a canteen department. Now, what happens? Stores, anyways, these two departments will provide services to production department. That goes without saying, because they are service departments. They are meant to serve the production department. But what happens? Will stores department provide any service to the canteen department? No. What has the stores got to do in a canteen, right? Whereas the canteen department, will they provide service to stores department? Yes. They will provide food. They will not discriminate whether you are a production department guy or a service department guy. Whoever comes in, they will serve the food. Correct? No? Right? That's our Indian culture also, by the way. Yes. So basically here, this canteen department will definitely provide service to the stores department, but in turn, they will not take any service from the stores department. Or in other words, when there is either a give or a take, in other words, nothing but when there is a one-way traffic, only then you should be using stepladder method. Are you clear with this, guys? What are these methods? How to do it, that we will see. But first you should know when to approach which method. Are you clear with this, guys? Are you all able to understand? Right? So only when there is a one-way traffic, right? You should be even using this method called as what? You should be using this method called as stepladder method. Clear with this, guys? Done? Now let me give you another scenario, and I want you guys to answer me properly. Now let's say I have three production departments, P1, P2, P3, right? And then three service departments, S1, S2, S3, right? Now forget the production departments. For you to choose the method, you should only know the relationship between the service departments. So now let me tell you this. Let us say S1 provides services to S2, right? Let's say S2 provides services to S3, right? And let's say S3 provides services to S1. Clear with this? In this scenario, you tell me, can I use stepladder method or not? Or to put it simple, is there a one-way traffic in this question, or no more than one-way traffic? So I just want an answer from you all. Come on, guys, participate on the comment section. By the way, someone is asking if this is live. Yes. So now tell me, guys, is this a one-way traffic question or not? Is this a one-way traffic or not? Come on, guys, answer. Huh?
One-way traffic.
So now this is a one-way traffic question only. Why? Look, the relationship of the give or take should be looked at from the perspective of taking two departments at a time. Now, some students might think, sir, S1, what it is doing, it is also providing services, it is also receiving services. So now it is not a one-way traffic. No, you should not provide a service and receive a service from the same department. If you look at this, between S1 and S2, there is only a give or a take, correct? Between S2 and S3, there is only a give or a take. And between S1 and S3, once again, there is only a give or a take. Are you clear with this? That is, you take only two departments at a time and see whether there is a one-way relationship between them. If not, then you say, fine, okay, two-way traffic, the next method we will go. Are you clear with this? So the relationship should be seen between two departments at a time. Don't say as a whole, I'm giving as well as I'm taking. You can give to one department and you can take from another department. Still it is called as a one-way traffic only. Are you clear with this? In that case also, we will be using only the stepladder method. Clear with this, guys? This was a past exam question. I'll show you a question that was very, very nice. Well coined. Right? Clear with this, guys? Done? And the third one, as you all know, is going to be a two-way traffic. Means what? P1, P2, P3. Let's say S1 and S2, right? And between the service departments, there is both give and a take. Let us say S1 is a housekeeping department, S2 is a canteen department. Housekeeping department means what? They will clean the place and all that. So they will also clean the canteen. Correct? So housekeeping provides services to canteen. In turn, canteen also provides services to housekeeping department. So that is a two-way relationship, two-way traffic established here. In this case, you will be going for what? You will be going for the reciprocal services method. Clear with this, guys? And whenever you have a two-way traffic, those sums can be done either using either of the three methods, that is simultaneous equation, repeated distribution, or trial and error method. Clear with this, guys? We will be seeing what these methods are, but before that, first understand when to use these methods. Clear with this, guys? First of all, we are talking about secondary distribution. Primary distribution anyways is not a problem because that is done using some reasonable basis, and that's about it. Clear with this, guys? Clear with this? Now let's go to the question. Let's go to the illustration here. So the reapportionment method. Reapportionment stands for secondary distribution. The secondary distribution method 1, that is the direct redistribution method. What will you do? So they are saying this company has two production departments, two service departments, and they are saying department X, which is service department, provides the services to A and B in the ratio of 3:2. Similarly, department Y also provides services to A and B only in the ratio of 1:1. Means what? Between X and Y, there is no relationship, no traffic. Clear with this? Don't say one-way traffic. See, the first method is no traffic. The second method is one-way traffic. The third method is two-way traffic. Clear with this, guys? Clear with this? Yes. No traffic, fairly simple. So what will you do? So this is the overhead as per the primary distribution. So anyways, the line items of expenses have been already converted into all department overhead. So now what is the objective here? Right now, secondary distribution. So the service department overheads need to be given back to the production department. Correct, guys? So it needs to be given back to the production department at the end of the primary distribution. The service department should not have any overheads with themselves. Everything needs to be given back to the production department. Are you clear with this? So now what will I do here? This 2000 rupees of department X, service department X, will be apportioned in the ratio of 3:2. Correct, guys? So I will reduce 2000 here and add up 1200 rupees share for department A and 800 for department B. Similarly, department Y share, entire amount of 1000, is being given back to A and B in the ratio of 1:1, 500, 500. Now at the end of the secondary distribution, what happens here? Department A gets a total value of 6700 rupees. Department B gets a total value of 4300. If you add the two, how much is it coming out to? 11,000 rupees. Correct, guys? Right? Now, overall, before we started, this total would have also been the same 11,000. 5,000 plus 3,000, it is 8,000, 8,000 plus 2,000, 10,000 plus 1. So this was also 11,000 rupees. So total value will not change, but only the internal composition will keep changing. Are you clear with this, guys? Are you clear with this? So now all department overheads has further reduced to only production department overheads. Are you clear with this? First we saw it under direct method, and in direct method, when will you use it? When there is no traffic. Are you clear with this, guys? In exam, please don't write no traffic and all. This is a word that I am telling you, right? It is not officially used for ease of understanding, right? That's why I'm saying it basically talks about the relationship between the service departments. Clear with this, guys? Next, step ladder method. We will be doing a sum. Do not worry about it, right? Then comes your repeated, your reapportionment method. That is your reciprocal services method. When will you use reciprocal services method? When there is a two-way traffic. Guys, I'm yet to do one-way traffic. Do not worry, I have a very good sum. We will be doing it. Fine. So now two-way traffic, under that the first repeated distribution method, we will be seeing how it works. Now basically guys, so when will you use your two-way traffic, your repeated distribution methods and all, your reciprocal services method? When there is both a give and a take between the service departments. In this case, if you see, department X and department Y are service departments, right? Department X provides services to A, B as well as to Y. Correct? No? Guys, yes. So department X provides services to Y. Yes. Now department Y in turn, anyways, it provides services to A and B. They are production departments, right? But it also provides the services to department X. Are you clear with this? Clearly there is a two-way traffic, and hence we are going and doing the sum under the reciprocal services method. And under the reciprocal services method, the first method is what? Okay, the simultaneous equation, we will do it. Now first we are doing it under the repeated distribution method. Are you clear with this, guys? Are you clear with this? What does this repeated distribution method says? First, they are starting on with the primary distribution summary. So 5,000, 3,000, 2,000, 1,000. This is the primary distribution summary. So now what they are saying is, now simple, you keep on distributing it. So first department X, right? It has a share of how much? 2,000 rupees. Reduce this 2,000 and give it to A, B as well as Y in the ratio of the services rendered. So 5:4:10. You just distribute it between all the other three departments. So now what happened? This 2,000 got distributed between A, B and Y. Are you clear with this, guys? Are you clear with this? Now what happens? As of now, department X has a zero balance. Correct? Guys, yes. Department X has a zero balance. Now department Y has how much? 1,000 originally, plus now it got 200 rupees share from department X. Correct? No? Now I am in the secondary distribution. My objective is to make my service department cost 0 and give it back to everyone. Now what I do is, this 1,200 rupees I need to redistribute it back to A, B and X also. So once I do that, I give it to A, B and X, the ratio of 4:4:2. Now what happens? Now department X originally was 0. Now it has now got a share of how much? 240 rupees. Guys, clear with this. Clear with this. Now I was actually enjoying my position because I thought my job was over, right? 0. But now what has happened? Again, I'm getting a share from department Y. Clear with this. Now what will you do? What will you do? Once again, you redistribute it. That's why it's called as repeated distribution method. Once again, this 240 share, you apportion it on the ratio of 5:4:1. Now what happens? Y was 0 till now, it got a share of 24 rupees. Now once again redistribute this 24 in the ratio of 4:4:2. Now you do it. Now what happens? Now X gets a share of 4 rupees. Now keep on distributing it till the time the value is very, very nominal. Now if you see this 4 rupees, if I distribute it, once again the ratio of 5:4:1. Now if I further do it, it will exactly be 40% of that. Yes, this is going to be 1.6 and this will be 0.4 technically. So now what they did, instead of saying 2, 1.6 and 0.4, they took this 0.4 and added it up with the B value and they made this as 0. Are you clear with this? Or in other words, the repeated distribution needs to be done till the time when the final value becomes very negligible and it can be rounded off and given back to the production departments. Now finally what has happened, X and Y became 0 and then I achieved the objective of converting the all department overheads to just the service, the production department overheads. Are you clear with this, guys? This method is called as repeated distribution method. Are you clear with this, guys? Are you clear with this? Any issues here, guys? Any issues here? Right, now let's quickly move on to the next one. The very same sum can also be done under another good method. In my opinion, I would always suggest, if there is a two-way traffic, only follow simultaneous equation. Unless the question is specifically asking you to do it under repeated distribution, please do it only under simultaneous equation method. Now what is this? What is this? So how do you do this? Now first we will be calculating. In this, it's a 3-step procedure. Step number 1, we will frame the equation. Step number 2, we will solve the equation. And step number 3, we will be calculating the apportionment. What is it? Now, since there is both a give and a take here, now if you see, now department X, what is the department X share of overheads? Can I say department X has its own share of 2,000 rupees of overheads, right? Plus it will be getting 20% of the department Y share of overheads. Correct? No? Right? Or in other words, can I frame an equation and say X is equal to 2,000 my own share plus 0.2 of Y. Correct, guys? Clear with this? Clear with this? Right? Now department Y on the other hand, can I say is nothing but 1,000 plus it will be getting 0.1 of department X's share. Correct? No? Right? So here I will say X is equal to 2,000 plus 0.2 Y. Then what is Y? Y is equal to 1,000 plus 0.1 X. Are you clear with this? Are you clear with this? So now what we will be doing here is, so now you take any one of the equation. Let us take the equation number 2. Right? What is equation number 2? Y is equal to 1,000 plus 0.1 into X. Now instead of X, you substitute X with this value of 2000 plus 0.2y. So now if you do that, the entire equation will now be rewritten just in terms of y, that is one variable. You solve for this equation, you will arrive at the y value, and then substitute it any one of the equation, you will get the x value as well. Are you clear with this? Are you clear with this? What is this x value and y value? Wait, I will tell you now. Now what you need to do is, so the step 1 was framing the equation. The step 2 was solving the equation to arrive at the x value and y value. The step 3 is your apportionment. Now in this apportionment, what are we going to do? This is how it started, right? This is how it started. 5,000, 30,000, 2,000 and 1,000. First, from x, you reduce how much? You apportion 2,245 rupees. Sir, why will I do that, sir? Why will I do that? I have only 2000 rupees. That is the beauty of simultaneous equation method. It says, now currently you have only 2000. But later on you will once again get from y, no? That I am anticipating it well in advance, and now itself I am asking you to apportion 2245. So that tomorrow when you get 245, that will also get knocked off here itself. You need not repeatedly do it. Just one time you apportion and leave it there. Are you clear with this, guys? Are you clear with this? So now itself you apportion 2245, the x value, in the ratio of 5:4:1. Correct, guys? Clear with this, right? Now what happens? Now what happens? Y gets a share of 1000 plus 224. This was already found out by our simultaneous equation method. Now it says happily distribute the 1224 in the ratio of 4:4:2. If you do that, now x will be getting a share of exactly 245. Now overall, if you see, this gets knocked off, and finally you have only the two departments overheads. Are you clear with this, guys? Are you clear with this? Or in other words, what we did here was, under the repeated distribution method, if you see, what was the total value of x amount distributed? Once we distributed 2000, then we distributed 240 rupees, then further we distributed 4 rupees. Totally we redistributed how much? 2244. 2244. Similarly, y, how much we redistributed? 1200 plus 24. It's going to be 1224. Correct, no, guys? Right? So instead of calculating the figure by redistributing it, this directly here itself, I think this is 1000, no? Okay, yes. So here directly by framing the equation and solving, here we found it at the beginning itself. There is no point for us to repeatedly doing it. So now instead of 2244 there, because of that round off it's there, it is 2245 and 1244. This figure of how much you have to redistribute in total was found out at the beginning itself. Based on that, now the redistribution was done. Are you clear with this, guys? Are you clear with this? In simultaneous equation method, we can check answers. Yes, you can check the answers accurately. Yes, guys, are you clear with this, guys? Yes, you guys are able to understand this, right? This is about your simultaneous equation method. Are you clear with this, guys? There is another method called trial and error method, not a great method, so that's why I'm not discussing it here right now, because it's not worth the time for discussion. Clear with this, guys? Maybe if you want, you can just go through it in your study material, but beyond that, it has never been tested and it's not a very great method as well. Right, guys? Fine. That is about the discussion of primary distribution, and the secondary distribution under direct method and under the reciprocal services method. Now let us do one sum relating to the step ladder method. Shall we, guys? Yes. Now please take your question number, I think it's question number 1. Is it question number 1? Yes. No, question number 1. Just a minute. One second. Let me. Yes. Question number 1 only. Okay, guys, please don't look at the solution. Please do not look at the solution. Now, read this question. A manufacturing company has 2 production departments, P1 and P2, and 3 service departments, timekeeping, stores, and maintenance. The departmental distribution summary showed the following expenses for the month of December. So P1, P2, right? And then stores department overheads, timekeeping department overheads, and maintenance department overheads. Basically, what they have got us is they have the total primary distribution has been done, department wise overheads has been given here. Additional information they have given. Production department, okay, I think there's a mistake here. So production department is only P1, P2. Service department includes stores. Please make this correction. Only these two are production departments and these three are service departments. Okay. Now look at this. Look at this. What have they given? The number of employees in each department is given. The number of requisitions made in each department is given. The machine hours in each and every department is given. Apportion the service department expense to the production cost centers P1 and P2. Basically, what have they asked for? Secondary distribution. Have they given you which method to follow? Have they given you which method to follow? No, they have not asked you for the method. They want you to find out which method needs to be used. They want to find out which method needs to be used. A brilliant sum, right? Wherein they have not given the method directly, and also the services rendered ratio and all, that is the relationship between the three departments. They have given, cleverly they have given three service departments, right? I just asked you a question, no? S1 provides to S2, S2 provides to S3, S3 provides to S1, and I asked you guys whether it's going to be a single one-way traffic or two-way traffic and all, right? This sum is beautifully coined. It's a very small sum, but the issue here is to identify which method it comes out to, right? Now basically guys, a stores department, what does a stores department do? It will issue the raw materials. It does requisitions. Material requisitions will be honored by the stores department. Clear? So the services provided by the stores department should be, evaluated on the basis of number of requisitions. Similarly, a timekeeping department. What do you mean by a timekeeping department? They actually keep a tab of how many hours were spent by employees in which department and all. They maintain the attendance and all. So the timekeeping department, actually they provide services on the basis of the number of employees. Does it make sense? Right? And then you have a maintenance department. Maintenance department services are based on the number of machine hours. Correct guys? Yes. So now first, let us not even get into the sum. Let us not even get into the numerical problem. First, we need to find out which method of secondary distribution we need to follow. Agreeing or not? Guys, agreeing or not? Right? Now, which method we need to follow? Again, depends on the nature of traffic between the service departments. Right? I'm only bothered with the service departments. Correct? No? So, what I'm doing is, I'm taking the three departments and putting it as a matrix. Right? Timekeeping, stores, maintenance, right? Here I am keeping this as a service receiver, and timekeeping, stores and maintenance, here I am putting it as a service provider. Clear with this guys? Now you tell me, timekeeping department, first one more thing that you need to know, self-service should be ignored. What do you mean by self-service? Timekeeping department, what do? Wherever employees are there, the timekeeping department will be having a work there. Correct? No? That is, they keep a tab of their attendance. In the timekeeping department also employees are there. No? So they provide service to themselves also. No? Ignore that. If you consider that, then it will always be a loop. I will be giving a share of my own cost to myself and it will be never ending. Clear with this? So always, because our objective is what? To give away all the service department costs to the production departments. So self-service should be ignored. So timekeeping to timekeeping, stores to stores, maintenance to maintenance. First put a dash here. Are you clear with this? Clear with this guys? Now tell me, timekeeping department, do they provide services to stores department? Simple. How do you know? If there is an employee in the stores department, it means they are providing service. In the stores department, are there employees? Yes. So I am putting a tick here and saying timekeeping provides services to stores. Now timekeeping, do they provide services to maintenance department? Yes, there are some employees there also. No? Correct? So I'm putting a tick here and I'm saying yes, timekeeping provides services to maintenance also. Clear with this guys? Next, stores department. Does the stores department provide services to timekeeping? So go to the number of requisitions. In timekeeping department, there is no requisition and all, which means if there is no requisition in a particular department, the stores will play no role there. So clearly, the stores department does not provide any services to timekeeping department. Clear with this guys, right? And does the stores department provide any services to maintenance department? Yes, there are some requisitions in the maintenance department, which means they are providing it. Are you clear with this guys, right? Now let's go to the maintenance department. does the maintenance department provide, the maintenance department will be providing services only when there are machine hours. So if you see, there are no machine hours in any of the service departments. So clearly the maintenance department is not providing services to timekeeping as well as to stores. Are you clear with this? Now with this, what you can conclude, look at this. You have three departments: timekeeping, stores and maintenance, correct? Now timekeeping provides services to stores, correct? And timekeeping also provides services to maintenance, right? Stores on the other hand provides services only to maintenance, and maintenance on the other hand does not provide services to anyone. Now anywhere can you see a relationship of a two-way traffic here? Anywhere is there a two-way traffic? You take any two departments, between timekeeping and stores, only a give is there, right? Between stores and maintenance, only a give is there. Between timekeeping and maintenance, once again there's only a one-way traffic. Clear with this, guys? So between any two departments at a time, there is only a one-way traffic, and hence this is a very fit case for the step ladder method. Are you clear with this, guys? Yes. First we are proving which method needs to be used, and only then we can even enter into the method. Clear with this, guys? Hello guys, you guys are clear with this, right? You guys are clear with this? Fine. Yes, Ramya, you're understanding? Yes, Murli, everyone, Bharat, you guys are able to follow? Fine. Now comes the step ladder method. How do I do this? First, you list out all the primary distribution summary, whatever you've got, right? Now it's very simple. So timekeeping department, I need to apportion the costs on the basis of number of employees, correct? No, right? So I will do it on the basis of number of employees, ignoring my own employee. So I need to ignore self-services, correct, guys? Yes. So now I'll be doing it in the ratio of 20:15:5:10, right? So 20:15:5:10. So we are doing it in the ratio. I've changed the sequence, that's why. So now what happens here, this 4,000 gets reduced from the timekeeping department and it gets evenly apportioned between all other departments. Are you clear with this, guys? Right? Next what happens, the stores comes in. The stores departments, what they will do is, the stores department, I need to apportion on the basis of number of requisitions. So here that is going to be 12:10:3. Clear? So this 5,800 rupees, that is 5,000 plus 800, the 5,800 component gets apportioned in the ratio of 12:10:3, right? Now stores department cost has also been fully apportioned. Now I have a balance only in the maintenance department of 3,000 plus 400 plus 696. It's going to give me 4096. This amount needs to be apportioned between A and B alone, I mean P1 and P2 alone, in the ratio of 24:6. Yes, or 4:1, whatever it is. So once you do that, finally what happens, now you have only these two departments overheads, your production department overheads. Now this method is called as a step ladder method because after apportioning it, you can see the step-like sequence. Are you clear with this? This is the reason why it is called as a step ladder method. Are you clear with this, guys? Right? And that is about this particular concept of step ladder method. It can be observed that there are no reciprocal services among the service department, hence we can use step ladder method, right? While distributing overhead, distribute the overhead of that department which provides services to maximum number of other service departments and go in the descending order. If you look at this, the timekeeping department provides services to how many other departments? Two departments, stores and maintenance. The stores departments provide services to only maintenance, and the maintenance department does not provide service to any other service department, correct? So what I will do is, I will apportion it in the same order. First, I will apportion the timekeeping department's overheads, then I will apportion the stores department overheads, and then I will go and apportion the maintenance department overheads. Are you clear with this? That is the reason why timekeeping, stores and maintenance, this sequence we followed. Are you clear with this, guys? Are you able to understand, right? And that is about the entire concept of secondary distribution. Clear with this, guys? Done. So this is one interesting sum. That was once tested. I think recently it got tested sometime back. So please be very clear with the concept. Don't think that you can use any formula, any method at any given point of time. It really doesn't work that way, right? So you need to know which method needs to be picked at which point in time. Clear with this, guys? Clear with this, guys? So that is about this particular question of step ladder method. Now with this we have finished the primary distribution, right? And we have also finished the secondary distribution. Clear with this, guys, right? Now we need to move on to the third phase of this particular chapter, which is called as absorption. Now where does absorption fit into this category? Now I told you guys that let's say at the end of secondary distribution, I am left with P1 overhead, P2 overhead, P3 overhead on one side. What I need to do, I need to calculate the overhead cost per unit of menswear, kidswear, ladieswear, and the footwear. Correct, the 4 different products that I deal in. This is what I need to do. So there is a gap that needs to be bridged, right, guys? There is a gap that needs to be bridged. Now, how am I going to do that? Is what gets captured under this particular third phase of discussion called as absorption, right, guys? So now let us get started with this concept of absorption. How do we do it? Now let me give you a small example with respect to that, and once we do this example, we will be doing a comprehensive sum that covers primary distribution plus secondary distribution and absorption, all the three, right? Now let us say I have 2 production departments, P1, P2, right? Now the secondary distribution summary, I have done the secondary distribution. It says that P1 department's share is 20,000 rupees, P2 department's share is 15,000 rupees. Clear with this, guys? Done. Now what happens here? Let us say I have one more data with me. What is the data? The labor hours. The labor hours spent in department P1 is, let us say, 5,000 hours. Totally in P1 department, a total of 5,000 labor hours were clocked, right? And in P2 department, a total of 3,000 labor hours were clocked. Now I will say representatively, it cannot be exact, but representative, because these are all indirect expenses. But I need some reasonable base to actually come up with some kind of a relationship, correct? So now can I representatively say in department P1, right, for every hour spent, what is the overhead cost? To 20,000 rupees divided by 5,000 hours, can I say it is going to be rupees 4 per hour, correct? Similarly, in department P2, I will say 15,000 rupees divided by 3,000 hours, it is going to be rupees 5 per hour. Or in other words, okay, let us say the company deals in 2 products. A, right, and B. What happens? Product A, right, it passes through department P1 and P2. It takes 3 hours. It spends 3 hours in department P1 and it spends 2 hours in department P2. Similarly, I have another product B, which spends, let us say, 2 hours in department P1 and 3 hours in department P2. Are you clear with this? Guys, clear with this? Now what I will be doing is, now I have some bulk amount of expenses. Now what I did, using some reasonable base, in this case I took labor hours, I tried to establish that overhead, right, using that base quantity, and I said, okay, generally I can say that in department P1 I generally incur 4 rupees for every hour spent. Clear? In department P2 I generally incur an overhead cost of 5 rupees for every hour spent. Correct? This relationship being established is called as absorption rate. Are you clear with this? This is called as absorption rate. So what is the meaning of this 4 rupees per hour? This is not product specific, product A or product B. If you spend 1 hour in my department, I will charge you with 4 rupees of overheads. This is the meaning. Clear with this, guys? Now, product A spends how many hours in department P1? 3 hours, right? Each hour I will give it a share of 4 rupees. Similarly, product B spends 2 hours in department P1. Each hour I will give it a share of same 4 rupees only. Are you clear with this? Similarly, Similarly, product A spends how many hours in department P2? 2 hours. Each hour will be given a share of 5 rupees. Similarly, P2 spends 3 hours in your product B spends 3 hours in department P2, and each and every hour should be given a share of 5 rupees here. So now if I do this, finally what I arrive at here, so now this is going to be 3 into 4. So that's going to be 12 rupees. 2 into 5. This is going to be how much? 10 rupees. So overall, I would say the overhead cost per unit of A is going to be rupees 22. Are you clear with this, guys? Similarly, the overhead cost per unit of B, how much is it? 2 into 4, 8. 3 into 5 is going to be 15, right? Overall, it's going to be how much? Rupees 23. Are you clear with this? This way, finally, I achieved the objective of this particular chapter. So it started off with multiple line items of expenses like rents and rates, your factory rent, your supervisor's salary, your repairs and maintenance, depreciation, all these things. Primary distribution, I actually distributed all the line items of expenses to all the departments, right? And then secondary distribution, that is service department overheads, got redistributed back to the production departments. And now absorption, I picked up a base quantity, tried to bridge the gap, and finally I converted the production department overheads bulk figures into overhead cost per unit of each of the product that the company deals in. It could be 5 products or 6 products. Let's the company say it deals in A, B, C, D, E, 5 products. Each of the product, you just tell me how many hours it has spent in this department. Based on that, I can calculate the overhead cost per unit. Are you clear with this, guys? Are you clear with this, guys? This process is called as absorption, the third process. So absorption is a 2-step procedure. So what are the 2 steps involved? Step 1 is calculating the absorption rate, and step 2 is having calculated the absorption rate, I charged it on to my product. Correct? 3 into 4 I did, 2 into 5 I did. That is, that absorption rate, I multiplied it with the actual hours taken by each of the products. Correct or not? Right? This is the second particular step in this process, which is known as charging of overheads to the product. So now in your absorption, you have 2-step procedure. The third phase of this discussion, the absorption part, has 2 steps. Number 1 is calculation of absorption rate, and number 2 is charging of overheads to the products. Are you clear with this, guys? Are you clear with this? And with this, overall, this chapter's objective is getting achieved. Clear with this, guys? Yes, done. This is what they have explained here. Now 1 minute. In this case, what I did, I took labor hours. I took labor hours as the basis to calculate the absorption rate. Guys, yes. Sir, should I always use labor hours as the basis? No. There are 6 different base quantities. There are 6 different base quantities that you are allowed to take. In this case, we took labor hours. Labor hours was one such type of a base quantity. Clear with this, guys? There are 6 different types of base quantities that you can take. What are the 6 different types of base quantities that you can take? Labor hour, machine hour, then direct labor cost, direct material cost, direct labor cost, prime cost, and your production overheads. Or in other words, look, the first two are expressed in terms of hours. That is 4 rupee per hour, 5 rupee per hour. The next 3 are expressed as a percentage. That is what I will do is budget overheads, right? Let us say if it is material cost, I will say 20,000 rupees is the here. This is going to be my secondary distribution, right? And in department P1, let us say my material cost overall is 1 lakh rupees. So what I will do is, so the absorption rate will be 20,000 divided by 1 lakh. So I will say generally the department P1's overhead is going to be 20% of the material cost. Are you clear with this? Right? Because if the numerator and denominator are both in rupees, it needs to be expressed as a percentage. And finally, the last method is your production units method. Production units method means what? Directly units. Right, directly the units. Suppose they have given 20,000 rupees is the department P1's overheads, and let us say overall some 5,000 units were manufactured in this department, right? That is A, B, everything put together. Let's say all are like similar items. So now what I will do, 20,000 divided by 5,000, I will say for every unit, whether it's A or B, I will charge it with an overhead of 4 rupees per unit. Are you clear with this? Right? This way also it can be done, right? So this is the other the last method, the last type of base quantity that can be used. Sir, why only 6 types of base quantity? If you notice carefully, all these 6 line items are some way or the other some direct items. When I say direct items, these 6 items are readily available in total as well as available on a per unit level. In this example, if you see, I knew how much was the total labor hours, and I also had the labor hour on a per unit level, right? Only because the fact that this given data was available on a total level as well as on a per unit level, I could bridge the gap of converting a total bulk indirect cost into a product level. Are you clear with this, guys? That is, all these 6 types of base quantities are generally available both in total as well as on a per unit level. This helps us to bridge the gap of converting that bulk line item of production overheads into overhead cost per unit of each of the products. Are you clear with this? That is the reason why we have only the 6 types of base quantities that are allowed. So what are the 6 types of base quantity? The first 2 are ours: labor hour rate, machine hour rate, right? Then you have 3 percentages: percentage of direct material, percentage of direct labor, and add the 2 percentage of prime cost. Are you clear with this? And finally, you have production units method. There are only 6 different types of base quantities that can be used. Are you clear with this, guys? Right? And the moment you calculate the absorption rate, that's why calculation of absorption rate is what? Budgeted overhead divided by budgeted base quantity. The base quantity could be any of these 6. Are you clear with this? And the moment you find that out, that is step number 1, calculation of absorption rate. Once you find out the absorption rate, that absorption rate should be multiplied with the actual base quantity consumed. In this case, what we did, we calculated that 4 rupees was the absorption rate, multiply it with 3 hours, you will get the overhead cost of that particular department. Similarly, for department P2, it's going to be 10 rupees, add up the 2, you get the overhead cost per unit. Are you clear with this? It's a 2-step procedure. Guys, are you all able to understand? Don't think that labor hours is the only basis for apportionment. Clear with this, guys? Clear with this, guys? Under or over absorption is an advanced level. I'll come to that, but before that, we will do a numerical problem. Guys, are you all understanding till now? Are you all understanding till now? Yes, this is actually, we are touching upon every single thing, almost every single thing in this chapter, right? So now let us get going with the next numerical problem, which is, I think, question number 2. Yes, question number 2. This was a past exam 10-mark question, a very good question. So a comprehensive problem. We'll be doing it now. Just give me a minute. Right, guys. Now, Superclass Company Limited has 3 production departments, X, Y, and Z, and 2 service departments, A and B. Now, they have given the line items of expenses, rents and rate. Guys, please don't look at the solution. I humble request you, if you want to get the best learning experience, don't look at the solution. The solution is meant only for ease of discussion. We don't have much time right now, right? Since it's a revision batch, in regular batch, every single sum, every single figure, I will be doing it on, I will actually be writing it along with you guys. That's how it is. In a revision batch, we need to pick up some speed because it's a revision actually. So here, if you want, I can do it, but I don't want to waste your time. That's the main reason, right? So please don't look at the solution. If you do look at the solution, it's actually, the effect will not be there that much. Okay. So now, what are they given? Some different line items of expenses like rents and rates, lighting and electricity, indirect wages, power, depreciation, other sundry expenses and all. Line item of expenses have been given. Are you clear with this, right? What else have they given? The following are the further details. Floor space, right? Department wise, they have given X, Y, Z, A, B. What is the total floor space? 10,000 square meters, right? That 10,000 square meters, the breakup is given. Which department has taken how much area? This has been given. Why have they given this? This is the basis to apportion my rent and rate cost. Are you clear with this? Primary distribution. Guys, yes. Clear with this. Next, lighting points are given. This is the basis for apportionment of lighting and electricity. Direct wages has been given, right? So now this is the basis for apportioning your indirect wages. Why indirect wages? Indirect wages is the supervisor's salary, correct? So who will be supervised? He will be supervising the direct workers only, right? If the number of employees headcount is given, you can take it. Here, the next reasonable basis, direct wages, you use that as a base. Clear with this, guys? Done, right? Then you have power costs. You can take horsepower of machinery. Then depreciation is given. So you can use the cost of the machinery as the reasonable base, right? Then they have given some working hours. We will see what it is and all, right? Then the expenses of the service departments A and B are to be allocated as follows. They have given this. Why have they given this? Why have they given this? Hello?
Secondary distribution.
Yes, this is a secondary distribution data. Now you tell me guys, by looking at this dabba, you tell me whether this is going to be a no traffic, one-way traffic, two-way traffic. Which one needs to be followed? Come on, come on, come on. It's one-way traffic, no Priya. Priya Sharavanan. It's not a one-way traffic. Look at this. Yes, it's a two-way traffic. It is reciprocal services method. Absolutely. Now how? Because department A provides services to department B. That's why you have a 10% here. Now, in turn, department B also provides services to A. Yes, there is actually another 10% coming up here. Yes, yes, absolutely. Yes, it's going to be a reciprocal services method, two-way traffic. Which method to follow? Any of the three methods: repeated distribution, simultaneous equation, or what is the other one? Your trial and error method. But which one is suggestible? If you want to save your time in exam, that too with accuracy, better follow simultaneous equation method. Clear? Frame two equations. So three-step methodology. First, frame the equations. Number two, solve the equations. And number three, do the apportionment. And life is simple. Clear with this, guys? Fine. So first, primary distribution based on this data you need to do. Right? So the line items of expenses gets converted into what? All department overheads. Now that all department overheads further redistributed back, and now you will be getting your production department overheads. That's the end of secondary distribution, right? Now look at this. You are required to calculate the overhead absorption rate per hour in respect of the three production departments X, Y, and Z, because at the end of secondary distribution, you will just be left with X overheads, Y overheads, and Z overheads, correct? Now, what will be the total cost of an article, that is a product, with a material cost of 80, direct labor cost of 40, which passes through X, Y, and Z for 2 hours, 3 hours, and 4 hours respectively. Now, what they are saying, the company is in the business of manufacturing a particular product, right? For that product, they have given the direct material costs, they have given the direct labor cost. Sir, how did they find it? These are prime cost components readily available on a per unit level. This entire chapter of three-step big procedure of absorption is applicable only with respect to indirect manufacturing cost of overheads. So prime cost components are always waiting for us. Are you clear with this, guys? Are you clear with this, guys? Guys are able to follow this, right? So now what happens here? Now they are saying overhead, they are asking us to charge it. So now what they have said is this particular product, it passes through departments X, Y, and Z, and the time spent in each of these departments are also given. So first, what we need to do, we need to calculate the absorption rate per hour for department X, department Y, and department Z, and multiply that with the respective hours, so that now we will arrive at the overhead cost per unit of this article. Now we can add the production overhead cost also per unit. You will arrive at the total manufacturing cost. Clear with this, guys? So all the three steps are involved in this particular numerical problem. Clear with this, guys? Clear with this? So now and they have clearly given in this question, it is going to be what? The base quantity is taken as labor hours. Sir, how do you know, sir? Because that is the only data which is given in total as well as on a per unit level. Are you clear with this? Are you clear with this? Right? So now if you look at it here, they have given the working hours, no? Guys, they have given the working hours here. Are you clear with this? They have given the working hours here. So now what we will do is at the end of secondary distribution, we have the department wise overheads divided by the respective hours. You will get the absorption rate, multiply it with 2, 3, and 4 respectively for each of the department. You will get the overhead cost per unit of the product. Are you clear with this, guys? Done. Done. You guys are clear with this, right? But that is not all. That is not all. This sum has another beautiful hidden treasure. Now, this is something that many of you guys will miss. Now, if you are especially, you can't afford to miss this in case you have attended the regular lectures. So all those red ink items and all should pop up right now the moment you read this question. Anyone from the regular batch, can anyone tell me what other beautiful adjustment is hidden in this question? Very good, very good, very good, very good. Right. Now, guys, what students generally do, I will tell you. What students generally do, I'll tell you. So now in this question, what you have is primary distribution. You would not have imagined at all that this this treasure or this particular catch is being kept in the primary distribution area. We all think that how many line items of expenses are there in this question? 1, 2, 3, 4, 5, 6. So these 6 costs, what you will do, you will take a basis and you will apportion it, correct? But no, there is one 7th line item also in this particular question. Now, what is that 7th line item? If you look at this, so rents and rates, your lighting and electricity, indirect wages, power, depreciation, right? All these things are there, right? Other expenses. Now look at this, direct expenses of service department. Direct wages of service department. Now, what is this, sir? What is this? Now, before that, one more thing, I think one more doubt many of you might be having. Other expenses, why should I apportion it on the basis of direct wages? So, I will apportion it equally. Why should I apportion it on the basis of direct wages? Generally, this is based on the assumption that, globally accepted assumption, that human beings are the reason. Human beings are the reason for incurring some additional cost. Hence, if nothing is mentioned about other expense, we don't know what is other expense, right? So many other miscellaneous expense put together, you apportion it on the basis of direct wages. That is the logic here. Now, sir, direct wages of service department, why am I considering here? First of all, we are in which chapter? We are in overheads chapter. Now, if at all something enters into my primary distribution, what can enter? Only my production overhead figures, production overhead expenses can only, indirect cost can only enter into my, indirect cost only can enter into my primary distribution, correct? Sir, wages and all is a prime cost component. Why are we seeing it here? This doubt is there or not? Guys, yes? Now, this is what I'm going to clarify here. Now, look at this. In this question, beautifully, they have hidden this line item. They have hidden this line item under this category. That is, you might think that they have given direct wages in this question for the purpose of taking it as a base to apportion a major line item. No. Now, they have given in the sum that X, Y, and Z are production departments. A and B are service departments. Clear with this, guys? Now, no doubt, direct wages forms part of your prime cost component, but not all direct wages. Let me give you an example. Let us say I am in the business of manufacturing pens. Okay, I am in the business of manufacturing pens. Right now, I have P1 department, P2 department, P3 department. Apart from that, I have one more department called as canteen. Right now, they have given direct wages of canteen department, some figure is given. Direct materials of canteen department, some figure is given. Clear? Now, guys, you tell me in a canteen, that is from the perspective of a canteen, right? Direct material will be what? Tomatoes and potatoes only, right? Tomatoes and potatoes will only be direct material, guys, correct? Right? From the perspective of a canteen, the cook's wages will be a direct wages, right? There will be 3 cooks and on top of them, there will be 1 chef. The canteen will say the cook's salary is going to be direct wages. The chef's salary is going to be an indirect wages, correct? No? That is what they will say. But you logically think from the perspective of the company, whether you are paying for the cook or you are paying for the chef, everything is indirect from the perspective of the product. Will my product pass through the kitchen? Guys, will my product pass through the kitchen? No. So always remember the direct wages or indirect wages, whatever it is, the direct wages or direct materials or any direct cost of a service department is always indirect from the viewpoint of the company. Are you clear with this? So the direct is from the perspective of the respective department. Clear with this? But from the perspective of the entire company as a whole, that is still an indirect cost. Are you clear with this, guys? Hence, that is the reason why we have not taken the direct wages of X, Y, and Z production departments in this particular primary distribution table. You look at this here. We have not taken the direct wages of production department. Only the direct wages of the service department were considered because though they might call it direct from the perspective of the service department, it continues to be indirect from the perspective of the company as a whole. Are you clear with this, guys? Many students have missed this. Many students have missed this across India. So how do you know, sir, all India reach only for you? No, nothing of that sort. So after every attempt, there will be something called as examiner's comments. There, question wise, the examiners will give their expert commentary, as in they will say, for this question across the country, so much percentage of people got this answer right, or so much percentage of the people, they got it wrong. To this extent, institute gives a lot of data. It comes once in 6 months in your students magazine. The month immediately following the result, whatever the magazine that comes in, or in the month of result, whatever it is. So they generally question wise, subject wise, question wise, they give you an expert opinion on that. So you can see where the students commit a mistake. Now, when institute is actually coining all the questions and all, so what they do is this also they take into account, because they know generally where students commit a mistake, right? An attempt may be a first attempt for you, but institute has been taking, it has been conducting exams for the last 50-60 years, so they know where exactly students stand. And of course, costing, FM and all the subjects, accounts, these subjects are right from the beginning. So obviously institute has a very good track record of where students commit a mistake and all. That's the reason why I'm saying these are very, very important things. I have handpicked questions based on, the order of importance and where you guys generally make a mistake. Because if I am doing something that you guys already know, then there's no point or value addition here. Clear with this, guys? This is one very important thing. If this, if you miss to enter this into your primary distribution, then obviously this particular portion of your indirect costs will not enter into the products at all. Are you clear with this? So it will result in undercosting. So you would have incurred a cost, but you wouldn't have charged it to your customer. Look at the impact that it can have in a real life scenario. Are you clear with this, guys? This is the importance of it. Fine. So now once that is done, so what they did was they arrived at the primary distribution, right? And once primary distribution figures are there, now you need to do secondary distribution under what method? Under your reciprocal services method. We will be doing it under your simultaneous equation. So A is going to be how much? So A is going to be 9250 plus 0.1 of B. Correct, guys? Similarly, B is going to be 3150 plus 0.1 of A. Correct? So the first step was what? Under the secondary distribution, reciprocal services, the simultaneous equation method, 3-step approach. First, frame the equation. Having framed the equation, what will you now do? Solve the equations, substitute 2 in 1 or 1 in 2, you do anything. So convert the entire equation using one variable A or one variable B. If you do that, you will get the A value and you will get the B value. Clear with this, guys? Any problem here? This solving is not a major area, but the major mistake can happen in these areas that I just told you. The first one is regarding missing out on this. The second one is regarding finding out which method you need to follow and all of that, right? Now, having done this, you need to do the apportionment. So now what you do, first you apportion A. So 9662, you fully apportion it on the ratio of 2:3:4:1. That is the services rendered ratio, right? And now you have what? Now you have here B. It gets apportioned 4116. Again, it needs to be apportioned in the ratio of 4:2:3:1. Guys, can anyone tell me how much is this? It's I think there's some typo error here. Can anyone tell me how much is this? I think it's 412. Okay, I myself found out 412. Okay, right? So once you do that, ultimately your service department costs will become nil, and then you will be ending up only with your production department overheads. So now your secondary distribution is done. Guys, clear with this? Clear with this? Now finally the third step, you need to do absorption. So what will you do? Department wise, you have the secondary distribution summary, right, divided by the respective base quantity. So what is the base quantity here? Labor hours. They had given in the question, the labor hours is 4670, 3020 and 3050, right? So now we just need to put it up here, right? So now you arrive at what? You arrive at the absorption rate by using your labor hours as the base quantity. Clear with this, guys? Guys, are you all able to understand this? Are you guys able to understand this? Right? You guys are able to understand, right? Now, once this is done, we need to charge the overheads to products. Once again, in this question, they have given that every unit of product X spends 2 hours in department X, 3 hours in department Y, 4 hours in department Z, right? Department wise, we know how much is the overhead rate to be charged. You have all of that. So now you multiply it and finally you get the overhead cost per unit of this product, which is equal to 58 rupees, right? We are not done yet. Now for us, the prime cost components are waiting readily on a per unit level. 120 rupees is the prime cost per unit. To this, directly go and add this 58 rupees. Now you get the total manufacturing cost per unit, which is 178 rupees. Now with this, I can go on and achieve the objective of stock valuation and profit computation. Are you clear with this, guys? Are you clear with this, guys? Yes, you guys are able to follow?
Yes, sir.
Done, guys, right? Fine. This is the core and the most intricate discussion of this entire chapter, in fact of the entire subject itself, because overheads is a very heavy chapter. It's a big chapter as a whole, and many students fall into the trap of actually skipping this chapter. Guys, please don't do that. I don't believe, or I don't propagate skipping any chapters. But if at all you want to dilute something, maybe do it somewhere else, not in overheads, because overheads is the core chapter based on which the remaining chapters are all built on, right? Without overheads, it's not just overheads. It is called as absorption costing method. If you go to your study material, they would have written overheads hyphen absorption costing method. The entire, it's actually a technique of costing. It runs parallel to marginal costing. That is the importance of this chapter, right? It is something else. This is the backbone based on which the other chapters revolve around. Your cost accounting systems, your cost sheet, in fact, all these chapters are based on this. So ideally, in my opinion, this chapter is always a must. So do not, please do not skip this chapter or do something of that sort. Are you clear with this, guys? Done? You guys were able to follow? You guys were able to understand? You guys were able to understand this, right? Fine. Okay, guys. So now, can we just take a break? Maybe about 10 minutes, 10-20 minutes. Can we just take a break, small break, and we'll come back? What, guys? You don't want break, or you want a break? Hello, tell me something, guys. As if you anyways know I'm going to give you a break, so that's why you don't want to waste your energy. Yeah, only I should do all the wasting, is it? Okay, guys, tell me now. You want a break now? Till how long?
Yes, sir. 10 minutes or 20 minutes.
10 minutes or 20 minutes. Okay, fine. So can we meet back at 3:15? Sorry, it's already 3:50. Okay, can we meet back at 4:15? 4:15, right? I'm giving about 20 plus minutes. 20 plus minutes. Okay, right? Don't worry, we're going at a decent pace. Do not worry. So today's agenda is going to be, we need to finish this one, overheads and ABC. ABC is an extension of this. We'll be finishing it off. Not a problem. Yes, 20 minutes break. Yes, Manoj. Okay, so okay, fine, guys. So I'll be meeting you at 4:15 sharp. Okay, so we'll assemble back at 4:15, take this break, and I'm giving you this break because of two reasons. One is, yes, I've been shouting a lot, so yes, I also need a break. And number two, there is no point in making you guys stick together and sit like this for forever. Take this break and make sure that once you're coming back, you're refreshed. Okay, right? So that it needs to push you to you must be able to follow the next session as well. So make sure that this break is refreshing for you guys. Okay, right, guys? Yes, we'll meet at 4:15 sharp. Right, guys? Thank you. Okay, Surya Kumar, last 30 minutes there's a network issue. Okay, from your side, is it? Okay, can anyone tell me whether the finished, or overheads is not yet finished? Don't worry, it's still ongoing. Oh, my own voice. Last 30 minutes there's a network issue. Okay, from one second. Okay, Surya Kumar, last 30 minutes. One second, guys. I'm hearing my own voice here. Just okay, done. Sherry, yes, live started. Yes. Let's continue. So the target for the day is to finish this chapter and the next chapter. Of course, the next chapter, ABC, is just an extension of this. So don't worry, we'll do it. Okay, done. Yes, Army Lala, let's start. Guys, has everyone come? Okay, that I can't keep a tab of it. Okay, anyways, let's start. Okay. So now let's move on to the next concept in this particular chapter. Very important concept, which is treatment of under or over absorption of overheads. Now, for you to enter into this concept, you need to know one concept called as predetermined rate versus actual rate. Predetermined rate versus actual rate. What do you mean by this, sir? Now, we saw that absorption rate, overhead absorption rate is equal to overheads divided by some base quantity, and we saw that the base quantity could be any of the six, correct? So your machine hours, labor hour machine hour, percentage of direct material, direct labor cost, and your prime cost, and finally you have your production units method. So all the six methods, any one you can pick, right? So of course you can't use all the methods at a single time. Obviously only one at a time can be used. Now, let me give you an example, guys. Very important understanding. This is a conceptual explanation, right? Without this, you can't even enter into the next area called as under or over absorption. You wouldn't believe. If you know, it's very simple. 10 marks, like you can take 10 marks in both your hands. That is the importance of the concept that we are going to see right now. Now, catch up running notes. Now, let me just give you an example. Let's say budgeted overheads, right, is equal to rupees 3 lakh. The budgeted hours, right, for the purpose of our discussion, I am taking the base quantity as hours. Okay, it could be any of the six base quantities. Please understand that is equal to 20,000 hours, right? Now they have given you actual overheads is equal to rupees 30,000. Rupees 3 lakh. And the actual hours is going to be the actual hours is going to be 15,000 hours. Now the question here is, if you calculate the absorption rate, that is, if you calculate the absorption rate using the budgeted data, that is, if you take the budgeted numerator divided by the budgeted denominator, that is the budgeted overheads divided by the budgeted hours. If you do this, then that absorption rate, since it is calculated using a budgeted data, it is called as a predetermined rate. Are you clear with this? Predetermined rate is also known as standard rate, is also known as budgeted rate, and all these are alternative terms for this. Predetermined rate, budgeted rate, standard rate, these are all some alternatively interchangeably usable words. What is that? Nothing but calculation of absorption rate using the budgeted data, right? So if I use the budget data for calculating my absorption rate, how much will be my absorption rate? 3 lakh rupees upon 20,000. That gives me how much? Rupees 15 per hour. Suppose I calculate the same absorption rate using the actuals, that is the actual numerator divided by actual denominator. So now that is called as an actual rate. Actual absorption rate is going to be 3 lakh divided by 15,000 hours. That's going to be how much? 20 per hour. Guys, correct? Now, just now we did questions regarding the 3-step absorption costing system, wherein the third step was what? Absorption. Correct? Absorption involves two steps inside it. Number 1, calculating the absorption rate. Number 2, charging of overheads to the products. My question to you is, the absorption rate that we calculate, should it be a predetermined rate or should it be an actual rate? Or in other words, for the purpose of charging overheads to the products, should I use the budgeted data or should I use the actual data? This is the question that I am asking you. Should I use the budgeted data or should I use the actual data? Right? Now, while many of you might think that, sir, what question is this, sir? 3 lakh rupees is the overheads I've actually incurred. 15,000 hours is the hours that I've actually spent. Where is the question? Obviously, I need to use 20 rupees per hour. The actual rate only needs to be used because that is the actual cost that have been incurred. No, no. You need to necessarily use only the predetermined rate for the purpose of overhead calculation, or in other words, whenever I say absorption rate is always calculated on budgeted data only. Are you clear with this, guys? Are you clear with this? There are 3 reasons for this, out of which the main reason alone I will tell right now, right? Because let us not get too much into it. Generally, I make an elaborate discussion about this in my regular batch, along with numerical examples, some illustrations and all. Right now, you just understand why we use budgeted predetermined rate, that is the budgeted data. Now guys, what is the subject that we are learning? Cost and management accounting. To put it in short, costing. Now, we are not here to do a post-mortem work, right? Like accounts. Now, I'm not undermining your financial accounts. Financial accounts has its own objective. That's why these are all multiple branches of accounting only. Clear? It has its own objective. After a transaction takes place, you record it in your books and publish the results to the end user. That is the objective of your financial accounts. That is not what we do in cost accounts. In cost accounts, I need to concurrently value my stocks then and there. Whenever I say stock, please remember, stock is not closing stock. Stock is every unit produced is called as a stock. Clear with this? Or in other words, now just imagine, can anyone tell me what is the journal entry for closing stock in your financial accounts? Journal entry for closing stock in your financial accounts? No. In your financial accounts, there is no entry at all for closing stock because your stock is never valued in financial accounts. It gets valued only in cost accounts. That's why in all your numerical problems, in all your final account sum, closing stock value will be given as a separate adjustment. You plug it on the credit side of your trading account and plug it on the asset side of your balance sheet and it gets tallied. That's all. It's an adjustment item. There is no single journal entry or there is no valuation of stock under financial accounts. Stock valuation gets done only in cost accounts. Sir, how, sir? Why are we able to value your stock? Because in costing, the moment, right, a particular output, FG, comes out of my machine, I should immediately value it, right? I should immediately value it, or in other words, costing cannot wait till the end of the year. Are you clear with this? So, the moment a particular product, this pen, I'm a pen manufacturing company. Now, I have inputted material, labor, and I've incurred all the other expenses and all. The moment this pen comes out of the machine as a final product, now, I know how much amount of material has gone into it. Actuals, do I know? Yes. I know every unit of pen consumes 5 grams of plastic. Every gram of plastic is so and so rate. I know. I know how much labor hour was required. Every hour of labor, how much am I paying? Actuals is no. Your direct expense, how much am I actually incurring? That also I know. The prime cost components are known in actuals. But you tell me, is the production overhead figure available on actual the moment the product comes out of the machine? No. For me, if I were to use the actual rate, then what I should do is, the moment the product comes out of the machine, I need to accumulate it, wait for the year end, finally arrive at my overall cost, add profit and fix my selling price. Can I say, if someone comes to your shop and asks you, sir, what is the cost of one pen? Wait, sir, the year is not yet over. Let the year get over. I will get my actual data. I will accumulate everything and I will fix my selling price. Absolutely, that is nonsense. It doesn't work that way. Or in other words, the moment a product comes out of the manufacturing unit, that is the machine, I need to readily value it, because in costing, we pass entries for consumption of resources, not just for your revenue recognition and payment. No, we also pass entries for consumption of resources. We saw the flow of costs, from stores. If I'm moving the materials to my, if I'm moving the materials from stores to my factory shop, that also I pass an entry in cost accounts. This does not get captured in your financial accounts. From one hand, if you give money to the other hand, your financial account says that is an internal transaction. I will not record it. right? There has to be a concept of mutuality. Only when I deal with a third party, I will account, whereas that is not the case in costing. If you consume something, the consumption is also getting tracked here. Are you clear with this, guys? Or in other words, here, costing can't wait till the year end. Now, the moment a particular pen got manufactured, now I need to charge it with an overhead. Correct, guys? Now you tell me, will I be having the actual rate the moment it comes out of the production facility? No. So what is the rate that I will be having with me? Only the predetermined rate. Are you clear with this? Are you clear with this? Or in other words, always remember, whenever I say absorption rate means only budgeted rate or predetermined rate, because costing cannot wait till the year end. Are you clear with this, guys? Are you clear with this, guys? Yes. Now what happens here is, so finally if you see, now I can classify the overheads, as in the figures, in terms of figures, I can classify this into three. What I will say, budgeted overheads. What is my budgeted overheads? In this case, my budgeted overheads was how much? 3 lakh rupees. Correct, guys? I budgeted to incur how much? 3 lakh rupees. On the right extreme, I have my actual overheads. What was my actual overheads? Coincidentally, in this case, that is also 3 lakh rupees. Right, guys? Now, in between, I have one figure that is called as absorbed overheads. I have a figure called as absorbed overheads. Now, how do I charge my absorbed overheads? Very simple. So, now the moment a product comes out of my machine, I will charge it with how much? 15 rupees for every hour actually spent in the product. I'm repeating, I will charge rupees 15 for every hour actually spent by the product. Are you clear with this? Or in other words, the total overheads charged will be my predetermined rate into actual hours, because the moment a product comes out of the machine, I know the actual time it took. That actual data is available with me, correct? It has already come out of the product, it has already come out of the machine now. I know it took 3 hours or it took 4 hours, as the case may be. So the hour data, the base quantity consumed, this is the reason why we use the base quantity consumed, plural tense we use, because that is readily available then and there. What is not available is only my absorption rate. So here, technically speaking, the absorbed overheads is a hybrid figure. It is predetermined rate. It's been applied on the actual base quantity consumed. In this case, the absorbed overheads will be 15 rupees I charge every time for every hour actually consumed. Totally, at the end of the year, how many hours were consumed? 15,000 hours. Correct? 15,000 hours were consumed. So overall, if you see, the absorbed overhead is going to be how much? Rupees 2,25,000. Are you clear with this, guys? Are you clear with this, guys? Are you clear with this? So here, the budgeted overheads is nothing but overheads planned. Actual overheads is nothing but overheads incurred, right? And my absorbed overheads is nothing but overheads accounted. Are you clear with this? That is, this is the figure that will be appearing on my cost sheet. Are you clear with this? Because in my cost sheet, your prime cost components are actuals because they are known then and there, but your overheads figure alone is always absorbed. Don't think that it is actual. Till now, what have I done? I have not yet reached the end of the year. Till now, what have I done? Using the predetermined rate, I have applied it on every single hour that has been actually spent. That is what I keep doing. Guys, are you clear with this, guys? Are you clear with this? This is the core of absorption costing. This is the core of absorption costing. Now, what has happened? Finally, I reached the end of the year. Clear with this? Finally, I reached the end of the year. Now, what has happened? I noticed that till now, costing had accounted how much? It has accounted for an overheads figure of how much, guys? 2,25,000. But now I've reached the end of the year. Now I have the actual figures with me. Guys, yes. How much is the actual? 3 lakh rupees. So now what has happened? Now I find out that, look, I have accounted for only 2,25,000. But the actual figure is what? 3 lakh rupees. Now this needs to be, the difference between the two now needs to be rectified. No? See, no matter what, I should bring my actuals into the books. That is for there for sure. But why I was forced to use a predetermined rate because costing can't wait till the year end and the actual rate is not known then and there. Are you clear with this? That was the only reason I used my predetermined rate. Guys, clear with this, guys? Clear with this? So now what we do here is I take my predetermined rate, multiply it with the actual base quantity consumed. I keep on doing it. At the end of the year, I find out that, okay, absorbed overheads is 2,25,000. Means what? Costing has accounted only to the extent of 2,25,000. But at the end of the year, now I find out the actual to be how much? 3 lakh rupees. So now you tell me the difference between this 75,000 rupees is there, no? Guys, correct? This 75,000 rupees, I call it as under absorption. Are you clear with this? Are you clear with this? Means what? This is under accounted. I am yet to account for this 75,000 rupees of expense. So now guys, equally there is a chance for a situation of over absorption happening. Right? The absorbed overheads could have been 3,50,000. In that case, 3,50,000 minus 3 lakh, 50,000 rupees would have been my over absorption. Are you clear with this? I now need to go and bring down my cost. Are you clear with this, guys? In this case of under absorption, I need to introduce fresh cost because as of now, I've accounted only for 2,25,000 rupees. So now what has happened? I should have accounted for 3 lakh. So now at the end of the year, I am passing the rectification entry. So that rectification treatment is only called as concept of under or over absorption. Guys, are you clear with this? Now, all this concept of under or over absorption, why do we have? Because we are forced to use something called as a predetermined rate. Had I taken the actual rate, my absorbed and actual figures would have been the same, no? Correct, guys? This is happening purely because of the predetermined rate. Even the hours are actuals here. The rate alone is actually a budgeted rate. So purely because of the use of predetermined rate, which I'm forced to use. Because of this only, there happens to be a difference between the overhead accounted and the overhead incurred, which needs to now be bridged by using a concept called as under or over absorption. Are you clear with this, guys? Are you clear with this, guys? Done? You guys are able to understand this? You guys are able to understand this, right? This is the concept of under or over absorption. So for our explanation purpose, I will take under absorption and explain. Similarly, you understand that that is the case with over absorption. Now, what do we do with this? What do we do with this? This particular under or over absorption. How do we deal with this? 75,000 rupees is there, right? It now needs to be accounted, no? Guys, yes, clear with this? Now, if you see, what would have happened is, now, basically your production overheads, is it a trading account item or a P&L account item? It is a trading account item. That is, or in other words, it's a manufacturing cost, product cost, correct or not? Yes, guys. So technically what has happened till now, if you see in my trading account, there is nothing called as trading account in costing, but to make you understand, I'm saying till now, costing has recorded only for 2,25,000 rupees. Correct, guys? With respect to production overheads. Now you have a trading and P&L account. Now comes a question. Should this 75,000 rupees of under or over absorption, should it be treated as a product cost or should I treat it as a period cost? Now the next question is, should this be treated as a product cost or should it be treated as a period cost? Right? If you're saying you're treating it as a product cost, basically, or in other words, should it be taken to my trading account or should it be taken to my P&L account? This is the question, right? Now, globally, what they say is, take it as a period cost, meaning what? Hit the 75,000, take it to the P&L and close it off. Life is simple, right? Now, if I take it as a product cost, what will happen? There will be a huge impact. Now, guys, I would have already valued my stocks and all, right? By taking only 2,25,000 as my product cost. Now, once again, if I'm taking this 75,000 to my trading account, what happens? Now, the stock valuation will also change. Correct? Are you clear with this? If I take this as a period cost, that's very simple. Only my profit will reduce. But if I take it as my product cost, my stocks and all will change. Once again, I need to rework. Are you clear with this? Sir, what should we do, sir? Now, this is where in India, what we follow is wait. Don't jump to a conclusion. 75,000 rupees in this case is an under absorption, right? So what our Indian, the cost accounting standards and all say is, now do not jump into a conclusion. Do not jump into a conclusion. First, this 75,000 rupees is there. This is an under absorption. See why this 75,000 rupees of under absorption is there. Why this 75,000 rupees of under absorption is there. Classify it into two, right? So let us say out of this 75,000, right, 5,000 rupees difference was due to genuine price level changes, inflation, sir. Sir, originally I prepared this predetermined rate. I arrived at 15 rupees per hour by taking into account that overall, sir, my factory rent and all will be so much, right? Genuinely because of inflation, there to the extent of 5,000 rupees, there was a deviation. Balance 70,000 rupees, I'm just giving you an example, was due to inefficiencies of the company's side. Are you clear with this? So I'm repeating, there was a 75,000 rupees of difference, that is your under absorption. Now they have found out that out of this 5,000 rupees is due to normal reasons, is due to normal price level changes, and 70,000 rupees is due to abnormal reasons. This abnormal reasons could be what? Your inefficiencies and so on. Are you clear with this? Maybe our staff took more time, or they were actually not that efficient, they took more leaves, or there were strikes, so many other things. Clear with this, guys? Now what they are saying, under or over absorption to the extent attributable to normal price level changes should be treated as a product cost. Should be treated as a product cost. Are you clear with this? And the under or over absorption to the extent attributable to all other reasons, your abnormal reasons, inefficiencies, should be treated as a period cost. Are you clear with this? When I say period cost, directly take it to your costing P&L account and make it fully expire in the current year. Are you clear with this, guys? Are you clear with this? Are you all able to understand this? You guys are able to understand this? Now comes the major problem. Now comes the major problem regarding the product cost. Sir, now I am freshly introducing this 5,000 rupees as my product cost. Wouldn't there be a problem? Now my stock valuation, everything will change. Yes, it will change. Now to put things in a much better manner, let us go back to that flow of cost which we saw in the cost sheet area, right, where I told you all the costs are debited here. Now, as of now, the production overhead figure that I would have debited here was how much? 2,25,000 absorbed figure. Correct, guys? Guys, are you all able to follow this? Guys, are you all able to follow this? This is a very intricate discussion, right? Generally, this alone I take about 2-3 sessions in the regular lecture. So please be careful. Please be attentive here. I am condensing it because it's a revision batch, right? Now look at this. Look at this. So as of now, by the end of the year, I noticed that till now I have accounted for only 2,25,000 rupees here. Now they are asking me to further account for this 5,000, that is treat it as a product cost. This 70,000 anyways will go to my P&L account. That's not a problem. They are saying, sir, now you should also treat this 5,000 rupees as what? As your product cost only. Now, what is the issue here? What is the issue here? Now, already throughout this, during the course of the period, what I would have done, so all these things will be there, right? Your overall cost is there. So a portion of it is your cost of production, a portion of it is your closing WIP, right? And then in your FG ledger, what you have, this cost of production would have gone. There you have some opening FG also, right? Opening FG plus cost of production, that's your total goods available for sale. Out of this, partly some units would be sold, partly some units remains unsold. Clear with this? Or in other words, if you see, technically speaking, I would have valued my closing WIP, right? Then this cost of production represented by way of COGS and closing FG. Or in other words, these three figures would have been valued only by considering 2,25,000 as my production overheads. But at the end of the year, now they are saying, no, this 5,000 should also be treated as a product cost. Now what will happen? Now to the extent of this 5,000 rupees, I need to now once again redistribute it between these three parties. Because now if I add a cost here, ultimately these three are the ones who gets affected. Are you clear with this, guys? Are you clear with this? Guys, are you all able to understand this? right? So what happens here is your under or over absorption to the extent attributable to price level changes, which is now treated as a product cost, will impact your three different accounts, or in other words, will impact three different people. Who are these three people? Your units sold represented in your cost of goods sold, your units unsold represented in your closing FG, and your incomplete units. Are you clear with this? Why this happens? Because till now I considered my POH as only 2,25,000. Now suddenly they are asking me this to consider this 5,000 rupees also. When are they asking me to do this? At the end of the year. By then I would have already valued all my stocks and finished off, because costing can't wait till the year end. Now at the end of the year they are saying this 5,000 rupees is genuinely because of the price level changes. Go and change it. Now I need to give its impact on these three ledgers. Are you clear with this, guys? Are you clear with this? And how will I do that? How will I do that? Very simple. So now here, if you see, this 5,000 rupees is the under absorption to be treated as a product cost. No, guys, correct? Right? Now I am just putting it up here. Right? This product cost that we saw in our example was how much? 5,000 rupees. Right? It needs to be distributed between how many people? Three people. Who are they? Units sold represented by way of COGS. Right? Units unsold represented by way of FG, and your closing WIP, that is incomplete units. Now let us say they have given 4,000 units of 4,000 units were sold, right? 750 units were unsold, and let us say 250 units were incomplete, equivalent units. This data is given. Now what you will do, you will apportion this 5,000 rupees, the extra amount of this under or over absorption attributable to your normal reasons, will now need to be given to these three people in the ratio of the units that are available. Are you clear with this, guys? Are you clear with this? How do I do that? Now you can directly do it. No, that is 5,000 distributed in the ratio of 4,000 is to 750 is to 250. You can directly do it, guys. Correct, guys, correct. But wait, Institute has introduced one concept called as supplementary rate. Sir, difficult or nothing. What you need to do is add the 3. How much is it? 5,000 units. Correct? Hello, guys. Guys. Yes, Ramya, Priya, Murli. Yes, you guys are following. Yes. So now what they are saying is add the 3 total units. How many units are there? 5,000 units are there. They are saying first calculate something called as supplementary rate. Supplementary rate is how much? So your under absorption to be treated as a product cost, that is 5,000 rupees, divided by the total number of units, 5,000 units. So every unit should get a share of how much? 1 rupee. Are you clear with this? Now multiply this 1 rupee with each and every respective volume. So now you will get COGS should be increased by 4,000 rupees. Your closing FG should be increased by 750 rupees, and your WAP should be increased by 250 rupees. Now what has happened? The respective ledgers have also taken the impact, and now we can finally close our books. Are you clear with this, guys? Are you clear with this? Always remember, with respect to under or over absorption, first you compare what? How do you arrive at under or over absorption? Absorbed overheads gets compared with actual overheads. Correct? Now the under or over absorption could be there. How would you treat? First, find out the reasons. Normal reasons, abnormal reasons. Abnormal reasons, directly take it to your P&L. Normal reasons, wait. What you need to do is, you need to distribute it between 3 parties. Units sold, units unsold, and your incomplete units. That is COGS, closing FG, and closing WAP. And how will you do it? Based on the units that are lying in the respective areas. That directly you can do, but Institute wants you to do it using something called a supplementary rate. Nothing great here. Instead of directly apportioning it, you in between call something as a rate and apportion it. Are you clear with this, guys? Are you clear with this, guys? Right? And once this is being done, finally this entire adjustment of under or over absorption will be over. Are you clear with this? Are you clear with this, guys? Yes. Now what we will do is, now we will take one numerical example in this regard. Now it was a past 10 mark past exam 10 mark question. I think in 2 consecutive attempts the same question, or I think a similar question, was tested back to back. That is the importance of this concept, because this is the heart piece or the core of absorption costing. So this is something that is a never miss, right? Fine, guys. So now let's go and do this. Let's go and do this here. Please take question number 3. Yeah, please take question number 3. Now, look at this. Look at this. In a manufacturing unit, overhead was recovered at a predetermined rate of 20 rupees per labor hour. Right? So, the predetermined rate means what? Budgeted overheads divided by budgeted base quantity. Now, the total factory overheads paid and the labor hours actually worked were 45 lakh rupees and 2 lakh labor hours respectively. During this period, 30,000 units were sold. At the end of the period, 500 units were held in stock while there was no opening stock of FG. Similarly, though there were no stock of uncompleted units at the beginning of the period, the end of the period there were 10,000 uncompleted units which may be reckoned as 50% complete. Means what? 10,000 units 50% complete is equivalent to 5,000 units 100% complete. Are you clear with this? So clearly you can say that units sold, how many units got sold, guys? 30,000 units. Units unsold, that is my FG stock, how much is it? It is going to be 5,000 units, right? And my closing WIP, how much is it? 10,000 into 50%, another 5,000 units. Why do I need all these things? To the extent of normal price level changes, it needs to be apportioned between these three using supplementary rate. Clear with this, guys? Next, the accountant was able to obtain the following other information. The actual factory overhead included the following items. Now, what have they said? So, 1,25,000 rupees paid to workers for a strike period under an award. 25,000 rupees was some penalty. 40,000 rupees obsolete stores now written off. 10,000 rupees paid towards consumables relating to prior periods now paid after a settlement of a dispute. 2 lakh rupees of factory overhead for the period was still payable and not yet accounted in the books. On analyzing the reasons, it was found that 60% of the unabsorbed overheads were due to defective planning and the rest was attributable to an increase in the overhead cost. How would unabsorbed overheads be treated in cost accounts? Past exam 2-3 times it has come as a 10-mark question. This is a core of absorption costing, because though it might look as if it's just an under or over absorption, for you to know this, you need to know the concept of your predetermined rate versus actual rate. Are you clear with this, guys? Now, first, can anyone tell me what is the total overheads actually incurred? Guys, come on, look at the question. Tell me, what is the overheads actually incurred? How much was the overheads actually incurred?
5 lakhs.
How much was it?
45.
45. Okay, I'm sorry. 1 second. Yeah. Even the Google, even the YouTube guys, come on, tell me, how much is the overheads actually incurred? Guys, YouTube folks as well. Come on. Yes, everyone. 45 lakhs, 45 lakhs, 45 lakhs, 45 lakhs, 45 lakhs. Okay. And now don't ever tell me that CA exams are difficult. It is just that you have ignored it. Read the question carefully, guys, and tell me where you've gone wrong. Read the question carefully and tell me where you've gone wrong. There is no point in saying that exams are difficult. See, most of the things we are not observing carefully. Read the question carefully. This is like a 11th standard error that you have made. 11th standard mistake that you have made. Yes, 2 lakh not yet accounted, now got accounted. Look at this, guys. Total factory overhead paid alone was 45 lakhs. And at the end, they have given 2 lakh overheads was still payable. We are not following cash system and all, right? Actual overheads incurred is how much? 45 plus 2, 47. Are you clear with this? It is 47 lakhs. The first step itself, if you make a mistake, it is like operation success, patient dead only. You would have done the correct answer for a wrong figure, no point. It's called as a chain error. They will not give you marks for this. They will not, for a 10-mark question, they will not give you beyond 1 mark. Most of the times, he will strike you and even reduce 2 marks from the previous question. Right, guys, come on, guys. This is not fair. This is not fair. Now, don't take me wrong. Don't take me wrong for saying this, but please be careful. It is okay to commit a mistake here. Doing it in the exam hall, 6 months is no joke, right? So please be extra careful. When you're reading the question, this means everything for you. This should be your world. Clear with this, guys? Fine. So first we started off with 45 plus 2. First of all, the overheads actually incurred is 47, right? Now from this, remove all these figures. Anyways, they are all some abnormal items. They are anyways going to be taken to your costing P&L only. They are ideally not a part of your routine overheads that you generally incur. Clear with this, guys? So remove it off. Remove it off. So minus 125, 25, 40, 10. Remove off all these things. So net production overheads actually incurred is only 45 lakhs. Clear with this? What am I going to do with these figures? These figures, they have by mistake included in production overheads. They are not production overheads basically. They are all some extraordinary items, like so abnormal items. So anyways, they should have been taken to your P&L account, but by mistake they have included in your production overheads. So now you subtract it. Technically speaking, 45 lakhs is going to be your net production overheads actually incurred. Clear with this? Oh, now some students will come and say, sir, this only we were saying and all. Right? I didn't ask for that. I just asked for the pro overheads actually incurred. Coincidentally here, this sum total and this sum total is matching. So this, you don't match along with that. Okay. So okay. That's why you were saying, Anil and all, now you're saying 45 lakhs still because of this only, Okay, and I should believe also. Okay, fine guys. Jokes apart, but yes, if you meant this honestly, then it's fine. But please be clear, don't make this silly mistakes and all. It is going to cost you an attempt, like 6 months is no joke. Anyways, guys, coming back here. So this is going to be my net production overheads actually incurred, correct? But what is the overheads absorbed? What is the overheads absorbed? So what is the overhead absorbed, guys? So the overhead absorbed is going to be, yes, they have given us a predetermined rate of 20 rupees, right? Multiply it with the labor hours actually spent. So 20 into 2 lakh, I'm going to get an absorbed overheads of how much? 40 lakh rupees. So overall, I know that 5 lakh rupees is an under absorbed overheads. I now need to come and account for it. Are you clear with this? Any problem here? No. How am I going to deal with this 5 lakhs? Now they have clearly said that 60% of that is going to be because of your, on analyzing the reasons, it was found that 60% was due to defective planning. You tell me this was unavoidable. This was avoidable only. Due to your inefficiencies, you have incurred extra. So what they are saying is 60% of 5 lakhs is going to be 3 lakh. This is going to be due to inefficiency. And now the product cost, the balance 2 lakh rupees is due to genuine price level changes. So to the extent of 2 lakhs, I will treat it as a product cost. And to the extent of 3 lakhs, I'm going to treat it as a period cost. Are you clear with this, guys? Any problem here? Now, period cost, I don't have a problem. Take it to your costing P&L and knock it off. But this 2 lakh now needs to be introduced as a product cost. Now what happens? This 3 lakh needs to be shared upon those 3 people. Are you clear with this? This is the reason why I started off cost sheet itself with the flow of cost. Now you are able to understand. If I introduce it here, right, this guy takes an impact. So technically this guy enters here and he is represented by these 2 figures. So at the end, these 3 are the people who take the impact. So I now need to apportion between these 3 guys who were originally valued by considering a POH of only the absorbed figure. Now I need to introduce this figure extra also. That is my under absorption to the extent of normal reasons. Clear with this, guys? Are you all able to understand? Yes. Are you all able to understand? Right? You are looking at me as if you have muted, you have turned off the sound, and as if you're looking at some gymnastics that I'm doing here right now. Guys, you're actually understanding, right? Yes. Okay, fine. Right. Okay, guys, fine. So now what you now need to do is, so now we've got units sold, units unsold, and our incomplete units, 30,000, 5,000 and 5,000. So we can just add it up here, 35 and 5, you have a total of 40,000. So first we need to calculate what the supplementary rate. Remember, the supplementary rate calculation is there only for the under absorption attributable to the normal reasons. That is the one that is treated as a product cost. So take this 2 lakh, that is under absorption, treated as a product cost, divided by the total units of 40,000. You get 5 rupees is the under absorption share that you need to give for every unit. So multiply it with the respective units. So now what happens? The value of FG, the value of COGS, and the value of closing WIP gets increased by 1,50,000 to 25,000 and 25,000 respectively. This way, the 2 lakh rupees that I now accounted for has been given to these 3 people properly. Are you clear with this, guys? Are you clear with this, guys? Yes, you guys are able to understand this? So technically speaking, now how do you account for this is that overall you have an under absorption of how much? 5 lakh rupees, right? So this under absorption of 5 lakh rupees, out of this what has happened? Now cost of goods sold, I have given it a share of how much? 1,50,000. FG, I have given it a share of how much? 25,000. WIP, I have given it a share of how much? 25,000, and the period cost component of 3 lakh, that anyways I take it to my costing P&L, 3 lakh rupees. Are you clear with this? So now I pass the rectification entry and finally I can close my books. Are you clear with this, guys? Are you clear with this, guys? Yes, you guys are able to understand, and because of this reason, basically guys, you may some of you might be wondering, sir, this should be cost of goods sold, no? Why is it cost of sales? Because ultimately your cost of goods sold, right, plus AOH plus SOH, anyways it needs to enter into your cost of sales only, right? So that's why if you see, we will be seeing it in cost accounting systems chapter. Now your cost of there is no ledger called as cost of goods sold. If you want, you can keep, but anyways you will receive it from the FG and give it to cost of sales, so it will be a via media ledger. So directly they take it to the cost of sales ledger only, because it becomes an expired cost. Clear with this, guys? So now what happens is, because of this adjustment, now what happens is, my profit comes down to the extent of 3 lakhs and 1,50,000. See, this 1,50,000 is my manufacturing costs getting expired. My manufacturing cost expires to the extent of cost of goods sold, I told you, right? This cost of goods sold gets knocked off against my current year revenue, right? This 3 lakh anyways is a period cost, that also gets knocked off against my current year revenue, guys, correct? So 1,50,000 plus 3 lakh, 4,50,000 rupees gets adjusted against my current year revenue, right? So my profit comes down further by 4,50,000, and to the extent of this 25,000, it remains unexpired. It escapes to the next year. Are you clear with this, guys? Are you clear with this? Because these are valued in the stocks. Clear with this, guys? Clear with this, guys? This is how you need to understand the concept of under or over absorption. Clear with this? Is everyone able to understand this, right? A very, very intricate discussion and a very technical discussion. Institute loves this area. Whether you love it or not, Institute loves this so much. So we are forced, you don't have any other option. So we should also love what the Institute loves only. Okay, clear with this? Yes, guys, done. You guys are able to follow this. Mark this as a very important question. Anyways, for that matter, whatever we do in the revision batch is all important, because I've taken only the most important areas here, but this is super important to, to make it more understandable for you. Clear, guys? Done. So that's about this particular segment as well. Now there are a few more allied concepts, small concepts. The major part of this particular chapter is over, right? So this is what it is. Maybe you can just go through it when you have free time, right? Because I've explained every single thing here. We have also done a numerical problem and we're done with this. Now there's something called as departmental overhead and blanket overhead rate. So now what is it? I will just tell you. Now guys, there is one more thing. Let us say a factory has two departments, P1, P2. Let us say the overheads is 20,000 rupees in department P1. Okay. And in department P2, the overheads is going to be 15,000 rupees. And let's say the labor hours in department P1 is 5,000 hours, and in department P2 it's 3,000 hours, right? Now there are two ways in which you can calculate the absorption rate. Now one I told you, based on the data you use, budget, actuals. Now forget that. That is one aspect. Another aspect is something called as blanket rate versus departmental rate. What is it? Now two options are there. Option one, I can calculate the absorption rate department wise. I can calculate the absorption rate department wise. Now let us say I am in the business of manufacturing two products, A and B. Product A takes 3 hours in department P1 and let's say 2 hours in department P2. Now product B takes 2 hours in department P1 and 3 hours in department P2. Okay. Now there are two ways in which I can apply the concepts of absorption costing here. One, what I can do is I can use something called as a blanket rate. Blanket rate means what? Now don't tell me how many departments are there and all in the company. First, what you do, total it up. That is, I will only calculate one absorption rate for the entire factory. Blanket, right? Add these two up. In the factory, what is the total overheads? 20 plus 15, 35,000 rupees is the overheads, right? And what is the total labor hours? 5,000 plus 3,000, it's going to be 8,000 labor hours. Correct, guys? Now, if you are using a blanket rate, now what I do is in a blanket rate system, I calculate a single absorption rate for the entire factory. So if I use this, the overhead rate will be 35,000 divided by 8,000. So I will say it is rupees 35,000 divided by 8,000 hours. So per hour, I will charge it with how much? 4.375 per hour. Yes, I will charge it with 4.375 per hour. Now, sir, how will I charge it the products? Product A, product B. Sir, product A spends 3 hours in department P1, 2 hours in department P2. No, I am not bothered about all that. In the factory, totally it spends how many hours? 5 hours. That's all I'm bothered about. Give it a share of 5 hours. Each hour give it a share of 4.375. So it will come out to rupees 21.875. Well, thanks for the figure. Yes, 21.875. Now, how about B? B, sir, it spends 2 hours in P1, 3 hours in P2. Now, again, I don't need the breakup. Tell me the factory as a whole, how many hours it spends? 5 hours. So here again, it's going to be 5 hours into 4.375. It also gets a share of 21.875 rupees. Are you clear with this? Now, if you calculate a single absorption rate for the entire factory as a whole, this is called as a blanket overhead rate system. Are you clear with this? Now, the other one is called as what? Departmental rate system. What is it? The one that we have been doing till now. So we saw that P1, P2 is there. So department wise overhead, I have 20,000 rupees in P1, 15,000 rupees in P2, right? And then the labor hours are also given as 5,000 hours and 3,000 hours, right? So now what do? I calculate the absorption rate department wise, and I say for every hour spent in department P1, so the products should be given a share of how much? 4 rupees per hour. Whereas for department P2, it's going to be how much? It's going to be 5 rupees per hour. Clear with this? So now I calculate the absorption rate department wise, not on a total basis. Clear with this? Now what happens is product A, I know that it passes through both the departments P1, P2. In P1, it spends how many hours? 3 hours. In P2, it spends how many hours? 2 hours. So 3 hours in the rate of into 4, 2 hours into 5. So here I will be getting 12. Here I will be getting rupees 10. And if I add up the two, so every unit of A gets a share of rupees how much? 22 rupees. Right? Whereas for B, if you see, B also passes through P1 and P2. So it takes how many hours in P1? It takes 2 hours in P1 and it takes 3 hours in P2. Right? Every hour of P1 is charged with 4. Every hour of P2 is charged with 5. So here it's going to be rupees 8. Here is going to be rupees 15. If you add up the two, it gets a share of 23 rupees. Clear with this, guys? Now, which one of the two methods is better? Obviously, hands down, departmental overhead rate system. Why? Because one of the reasons is, look, technically speaking, department P2 is a costlier department. Department P1 is a cheaper department. Now, if you see, product B spends more time in a costlier department, lesser time in a cheap department. So it is fair that I should give it slightly more amount of overheads. Correct? No. Whereas overall, both the products spends 5 hours in a factory. No doubt. But the breakup also is important. Guys, correct? The product B spends more time in a costlier department. Obviously, its share of overheads is fair only if I give more. Are you clear with this? So, the first reason why I'm saying a departmental rate is better is because a product might spend more time in a costlier department and lesser time in a cheap department. Now, all these things will be conveniently ignored if I follow a blanket rate. Are you clear with this, guys? That is number one. Number two, now look at this. If I use a blanket rate, what I will be doing? I will say total overheads divided by total base quantity. Correct? No? If I use a departmental rate, I have the flexibility to choose different base quantities for different departments. For example, department P1 is a machining department. I will use machine hours as the base. Department P2 is an assembly department. Here I will use labor hours as the base. So if I am following departmental rate, I have the flexibility to choose the base quantity department wise based on the factor that actually drives the cost in that department. Whereas if I use this particular blanket rate, I don't have such flexibility. For the entire factory, I have to necessarily use only one rate. Are you clear with this? So the second reason why departmental rate is better than my blanket rate is because of the flexibility to choose different base quantities in every single department. Are you clear with this, guys? Are you clear with this? Are you clear with this, guys? Yes. There is a third reason also. The third reason is, see, it is not necessary for a product to pass through all the departments. Agreeing with me or not? Agreeing with me or not? Let's say there are 3 departments, right? It is not necessary that all the products should pass through all the departments, correct? If I follow a blanket rate system, I am forcefully giving all the departments' overhead costs to all the products, even though some products might not have passed through certain departments. Are you clear with this? So because of all these reasons, it is clearly evident that my departmental rate is better than my blanket overhead rate. Are you clear with this, guys? Are you all able to understand this? Are you all able to understand this? Yes. Now, the next chapter that we are going to see, ABC, yes, that will say that even departmental rate is bad, right? A better way of apportioning overheads to the product is an activity based costing system. Are you clear with this? So technically the next chapter we are going to see, ABC, is an extension of overheads only, but it is a modern way of apportioning overheads to the products. Are you clear with this? Are you clear with this? So I will be giving the same example. I will be giving the same example of departmental rate versus blanket rate. From there, so now we saw why departmental rate was better than the blanket rate. Now there we'll be seeing how activity based costing is better than the departmental rate also, because departmental rate also has some limitations. What that is what we'll be seeing. Are you clear with this, guys? So this is the next chapter is an extension of the present chapter. Are you clear with this, guys? Right? That is what they have mentioned here for departmental rate versus blanket rate. Clear with this, guys? Yes, fine. And that is about this area. Now this there is something called as capacity levels. That is your maximum capacity, practical capacity, normal capacity, actual capacity and all. You just quickly go through it once, not much of a value addition. There is one more important area that we are going to do right now, which is called as machine hour rate problems. Machine hour rate problem. Now, what is this particular concept of machine hour rate? So, yes, we are going to do this particular segment right now, and with this we will be finishing this chapter. Now, sir, what is this machine hour rate problems? Why are you keeping it separately? Now, guys, you all know that. Now we have 6 different base quantities for charging overheads, or in other words, for calculating the absorption rate. One of the base quantities is your machine hour. Correct? No? Yes. So what do you mean by a machine hour rate? Simple. Overheads divided by machine hours. Correct? No? I will represent the overhead per machine hour. That is called, it is one of the 6 different types of base quantity. That's all. So why are we keeping it separately and studying it here, and why are you calling it as machine hour rate problems and all? I will tell you, this one small technical thing alone is there, but beyond that, not much of complexities. We are done with all the technique, very deep and very complicated areas are already done. This is just, a slight extension of what we have seen before. Now, what happens? Now, generally we know that your manufacturing costs are of 2 types. One is your prime cost components, the other one is your production overheads. Your prime cost components are readily available on a per unit level, whereas the production overheads is not available on a per unit level, but we convert it to a per unit level by using a 3-step procedure called as absorption costing system. That is what we have been seeing till now. Correct, guys? Yes. Basically, your prime cost components will have what? Direct material and direct labor and all. Guys, correct? Hello? Yes. Now, in some industries which are heavily technology driven, highly mechanized industries, they will consider direct labor also as a part of production overheads. They will consider direct labor also as a part of production overheads. Sir, do not worry, it's a standalone area. It will be given in the question when they are considering it, right? Now, sir, what is it, sir? Can you give us an example? Yes. Now, let us say a company is in the business of manufacturing wooden doors. Manufacturing wooden doors, right? Now, there are two ways of manufacturing wooden doors. One, you hire a carpenter. You hire a carpenter. What he does, so he will bring a log of wood. In that, he will be doing all the workings and all, right? You will ask for a design on the door. So all these things he will be actually spending his time, right? And he will be doing. Correct, guys? Another way of manufacturing the same wooden door is, you take the help of a machine. What you can do is, if you're not aware of this, what these guys generally do, some big manufacturer dealers of all these wooden doors and all, they have a system in which they enter the design of the door. The door's design will be there, right? Like this, I want maybe some small hole here, maybe whatever it is, right? All these things they will mention. The design will be done. One click of a button, parallelly 100 doors will be, the machines will start working on 100 doors parallelly. Are you clear with this? Guys, are you clear with this? One click of a button, or it might take 2-3 hours, but parallelly 100 machines will be on and 100 doors will be manufactured of the same design. Are you clear with this, guys? Now, all these 100 machines are operated by a guy called machine operator. Machine operator. Who is a machine operator? The person, the staff who operates the machine. Now, you tell me, guys, if I am hiring a carpenter and manufacturing a machine, I'm manufacturing a door, in this case, it makes sense to consider the carpenter's wages as a prime cost and take it as direct labor. Now you tell me, this machine operator, though he puts his hands on the job and he works, but I can't establish a direct relationship between the time he takes and the number of units that gets produced. Now what this guy will do, he will turn on the machine, he will go for a walk around the factory, right? He will find one nice sweet spot, he will just sleep there. After half an hour, 1 hour, he will come back, turn off the machine. Correct? Now you tell me, is his time spent directly related, does it directly relate to the production or the number of units of your doors manufactured? No. In this kind of setup, it makes sense to consider the machine operator's salary as a part of your production overheads. Are you clear with this? Though he's an assembly line worker, but his time spent and the number of units produced are not proportionate, because this is an industry which is heavily mechanized and tech driven. Are you clear with this? In this case, it makes sense to consider even the prime cost component, which we generally do, that is the labor, the machine operator's wages, should also be considered as a part of production overheads. Are you clear with this? So in this case, what we do is, so the production overheads will include what? It will include the machine operator's salary, right, divided by the machine hours. That's all. This one inclusion in the numerator, that is all is there. Beyond that, nothing great is here. For this only I gave this example. Clear with this, guys? Beyond that, nothing is there. Clear with this, guys? Yes. So now, shall we just go and do a numerical problem? Again, a repeated exam question, right? Let's do. And with that, we'll be signing off in this chapter. So the last one, question number 4. Yes. Now, guys, read the question carefully. Read the question carefully. Again, a danger area. Okay, this is a danger area, so please be careful. Okay, a machine shop has 8 identical drilling machines manned by 6 operators. The machines cannot be worked without an operator wholly engaged on it. The original cost of all these 8 machines work out to 8 lakh rupees. These particulars are furnished for a period of 6 months. Normal available hours per month is 208. Absenteeism without pay is going to be 18 hours, right? Then the leave with pay is going to be 20 hours. The normal idle time, unavoidable hours, is going to be 10 hours. Then Your average rate of wages per day is of 8 hours is going to be 20 rupees. The production bonus estimated on wages 15%. Value of power consumed 8050 rupees. Supervision and indirect labor 3300. Lighting and electricity 1200 rupees. Repairs and maintenance including consumables 3% in the value of machines. Then your insurance is 40,000, depreciation 10%, sundry works expenses 12,000, general management expenses allocated 54,530. You are required to work out a comprehensive machine hour rate for the machine shop. Right? This is the question. This is the question. What do you mean by comprehensive machine hour rate? That is, take the total in the numerator. You should also consider the machine operator's salary. That should also be considered apart from your production overheads divided by the total machine hours. Right? Now first. Now guys, in this question, first we need to calculate what? The total machine hours. What is the total machine hours? Have they given anything about the machine hours here? Can anyone answer? Can anyone answer? So what is the total machine hours given here? Have they given any data about the machine hours? Guys, please answer. What, you guys took a strategic time out? Please answer, no? Hello? Okay. Now look at this. In this question, yeah, someone wants to answer. Yes, tell me please. Yeah, go on. Okay, so now look at this. In this question, what they've given is the machines cannot be worked without an operator wholly engaged on it, right? Which means what? The effective number of labor hours, the effective number of the machine operator's hours is going to be equal to what? It is going to be equal to the machine hours. Clear with this, right? Now what they are saying, there are 8 identical machines, right? They are manned by 6 operators, which means this figure of 8 is irrelevant. Why? Because only the time taken by the operator is going to be the total machine hours. Correct? There are only 6 operators here. So this amount, this figure of 8 is absolutely irrelevant for this particular question. Now what you do is, the normal time available per month is 208. From that absenteeism without pay 18 hours. Then leave with the pay is going to be 20 hours. Normal idle time unavoidable is 10 hours. Now what we need to do here is, look at this here. First, normal available time. One more very important thing that many students miss out is, this is all for a period of 6 months, right? So for a period of 6 months fully. Now first, what is the normal time available? 208 hours is the time available per operator. Guys, clear with this? Hello, clear with this? So now basically what happens here is, I have 208 hours per month. Like that I have 6 months. Like that I have 6 operators. So the total time available for 6 operators for 6 months put together is going to be how much? 7,488. Are you clear with this? Next, what they are saying here, read this carefully. Absenteeism without pay hours is 18 hours. Be very clear. Here they are not saying this is 18 hours per month. Clear? The first data they have mentioned it as per month. Here they didn't mention it as per month. Means what? This is 18 hours for 6 months put together. Are you clear with this? So now what you need to do, 18 hours, right, for 6 months put together only, but that is for one operator. So multiply with 6 operators. Overall, the absenteeism hours is going to be how much? 108 hours. So I am going to pay them. I am going to pay the operators for how many hours? 7380 hours. Are you clear with this? This hours is required to calculate the overall machine operator salary. Are you clear with this, guys? Now further they are saying something. What are they saying? So there is a leave with the pay. 20 hours overall for a period of 6 months. Every staff takes a leave of 20 hours put together. And normal time unavoidable, normal idle time unavoidable is another 10 hours. So for these hours, the machines are not going to work. Correct? No? So what I will do, I will reduce that 20 into 6, 120, 10 into 6, 60. So the effective working hours is 7,200. Means what? the machines are running effectively for 7,200 hours, but however, I will pay the operators for how many hours? 7,380 hours. Why? Because this is a leave with pay and a normal idle time. It is unavoidable. Means what? Your lunch break and all. I can't say I won't pay you for the lunch break and all that, right? Because if they are coming to work, obviously some normal idle time needs to be given. Clear with this, guys? Then why are we reducing it? Because whether it's normal or abnormal, whatever it is, anyways, we are, if they are not available, near the machine is not going to run. So effectively, the denominator, the total machine hours is going to be only for 7,200 hours. However, in the numerator, one of the components is my machine operator salary. For that, I need to consider 7,380 hours. Are you clear with this, guys? Are you clear with this? Look at this. As the machines cannot be worked without an operator wholly engaged on them, therefore, the hours for which the 6 operators are available for 6 months are the hours for which the machines can be used. Hence, the 7,200 hours represent the effective working hours of machines. Are you clear with this, guys? You guys are able to follow this? Yes?
Yes, sir.
Right? Yes, Priyanka, that's right. And yes, Vaishnavi, yes, labor hour is equal to machine hour. Yes, you guys are right. Clear with this, guys? Done. Now, what have they given here? Now, with this, we calculated what? We calculated the denominator also, and we also calculated the overall hours for which I need to pay him. Then, one more thing they have given here. Yes. Look at this. So now I need to calculate what is the total machine operator's salary. So now how do I do that? Now look at this. They have said the average rate of wages per day of 8 hours is going to be 20 rupees. That is 20 rupees is the wage that I pay for 8 hours put together. Apart from that, there is a production bonus and all. Okay, right? So now the machine operator's salary, how will we compute this? Okay, it's taken as 800 upon 8. Just a minute. I think there is some issue with the question here. 1 second. What has happened? I don't think it's 20 then. It has to be 800. Okay, please guys, just change this figure. It's not 20. It's 800. Please change this figure. It is 800. Per day of 8 hours, they are paid 800 rupees. There is one small issue in the question. Please correct it to 800 rupees. Okay. So the average rate of wages per day of 8 hours is going to be, yes, 800 rupees. So they are getting paid 800 rupees for working 8 hours. Effectively, the hourly rate that they get is how much? 100 rupees. So that is what they have found out here. Effectively, it's going to be 100 rupees. Clear with this? And for a period of 6 months, I'm going to pay them for a total of 7,380 hours. 7,380 hours into 100. Overall, my machine operator's wages is going to be how much? 7,38,000 rupees. Are you clear with this? This is for a period of 6 months. So now what we do here, we just go and plug this figure here. Operator's salary is going to be 7,38,000 plus a production bonus of 15% on the 7,38,000. That's going to give you 1,10,700. Right? Apart from that, the other costs that we have here, value of power consumed. Right? The figure is, I think guys, all these are multiplied by 10. I'm sorry, some typo error is here. So please add one zeros. It's 8,500, 33,000 and 12,000. Please add one zeros here, guys. There was some issue in the printing. So please, typing, please add one zeros here. So now it's going to be the power consumed is 8,500. Supervision and indirect labor 33,000. Lighting and electricity was how much? 12,000 rupees. Yes. Now, another common area where students commit a mistake. Now guys, look at this. Repairs and maintenance including consumables was 3% on the value of machines. What was the value of machines? Guys, what was the value of machines? 8 lakh rupees. Correct? Hello. Guys, answer please. It's 8 lakhs into 0.03. That's going to give you 24,000. Now you will think that 24,000 rupees should be the cost considered here. No. See what they have given. These are furnished for a period of 6 months. What is furnished for the period of 6 months? Only up to this dabba they have given it for a period of 6 months. So all these data are assumed to be given per annum, which means you need to now convert it into a 6-month figure. So basically what you need to do is here, if you see repairs and maintenance, 3% on 8 lakh into 1 by 2, that is 6 by 12. you get 12,000 rupees here. Similarly, insurance, this is 40,000 for 1 year, for 6 months it's going to be 20,000. Depreciation, 10% on 8 lakh into 1 by 2, that's 40,000. Similarly, sundry works expenses, 12,000 into half, that's 6,000. And general management expenses apportioned here, 54,530 into half, 1 by 2, that's going to be 27,265. You add up everything, you get the denominator, you get the numerator, the total cost that needs to be apportioned, right? So the total cost divided by the machine hours. What is the machine hours? The machine hours, we got it as 7,200. You divide the two, now you get the comprehensive machine hour rate of 149.93, which means what? Every time a product passes through the machines, for every hour spent, I will be charging it with an overhead of 149.93. And what was special in this question? Here, we are also considering the machine operator's salary, which till now we were seeing it as a part of prime cost component. It has now been included as a part of your production overheads. Are you clear with this, guys? And that is about this particular chapter. Are you clear with this, guys? Are you clear with this? And overall, if you see right now, this is, it has taken us about 3 hours just to revise this chapter, right? But again, I'm telling you, there are certain other areas as well in this chapter. I'm not saying I'm covering everything, but in a revision batch, whatever is the best possible in the limited time, all the important areas we have definitely covered. So no doubt about that at all. Clear with this, guys? So with this entire chapter is over, and yes, that's about this. We have covered the semi-variable overheads, primary, secondary distribution, absorption, costing, the capacity determination, and yes, the machine hour rate problems. Clear with this, guys? And with this particular chapter of overheads is also over, right? Done. Less. Okay, so now shall we move on to the next one? Shall we move on to the next one? Or you want a 5-minute break?
No.
What, guys? You want a 5-minute break, or shall we?
Yes, sir.
Shall we proceed forward?
3 minutes.
You want a break of 5 minutes? 5 means 5. Huh? Okay. Don't worry. I think ABC is slightly small, so one problem. No props. We can finish it. I think just about a couple of sums there. That's about it. Yes, all of that. I think it can be finished off in half an hour to 45 minutes. So don't worry. We will be winding up. My max 6:30. I told you up to 6, but 6:30 max. So don't worry about it, guys. What you guys are? Yes. We will take a break. Don't worry. Yes, 5 minutes. We will take a break. Don't worry. But I just want to know, guys, you are all able to follow. Are you guys able to follow it properly? Yes. Is it being effective? Please use the chat box, or if you guys are participating on Google Meet, you can just unmute yourself and tell me.
Effective, sir.
Yes. Okay.
Effective.
Yes. Okay. Good. I'm happy to see that students are still sticking out till the end, because generally it starts off and it becomes like this. The number of students come down. But anyways, good, guys. You guys are very, very dedicated. That's what I keep telling you all. You guys are really dedicated. It's all your hard work will definitely pay off. Don't ever think that this is something, I'm doing something, I don't know whether I'll pass and all. Don't have that fear. You just keep doing what you're doing. That's all. One day you'll get there, and the day is not too far off also. Okay. Yes, so we will start ABC in the next 5-10 minutes. I think some students were also asking whether ABC has started or not, so maybe you can also inform them if they are your friends or someone like that. Okay, so we'll be starting off. We'll definitely finish off ABC as well today. No need to worry. So we have the top order chapters, right? Tomorrow we'll again be doing the next 2 chapters, like marginal costing, process costing. Marginal is pretty huge. That's why I've just kept 2 chapters tomorrow, marginal and process. So it was much requested. So I think these 5 chapters, a cost sheet anyways was there. I think these 4 chapters were much requested. Your overheads, ABC, marginal costing, and process costing. Anyway, standard costing was all there before itself on YouTube. So mainly I wanted to cover these chapters, that too from an examination perspective. So I hope you guys are finding it useful. Okay, fine guys, we'll meet in the next 5 minutes, maybe at around 5:40. Yeah, 5:45. Take 10 minutes, not a problem. 5:45. Yes, max by 6:30 we will try to wind up. Okay, do not worry about it. Okay, so see you all at 5:45. Yeah, 5:45. At times it has even come for 20 marks. So that's huge, very huge. So let's see how it goes. Guys, ready? Shall we get started? How about the YouTube folks? How many people is there on YouTube? Guys are ready? Shall we start? Sir, if you don't mind, for tomorrow also, can you start the class at 10 a.m. only? Oh, that's not quite possible because I thought starting early will make sure that our class will also end early so that you will have time for practice or for preparation. So if I start in the mid of a day, or I mean like I start late, then it means that before the class and after the class your preparation time will be broken. So I didn't want that. That was the reason why I'm planning for an 8 a.m. class every day. So Chandrakala Nandish. So that's the only reason why I'm planning for an 8 a.m. class. Okay, now yeah, let's start. Now guys, let us start with the next chapter called as activity based costing. Now this chapter ABC is nothing more than an extension of the previous chapter overheads. That is all about it, right? That is all about it. So this chapter ABC, as I just said, is an extension of overheads, right? Now in this chapter, what we are going to do here, chapter 3, your ABC, this chapter, the objective of this chapter is to calculate the overhead cost per unit. Overhead cost per unit. Sir, you said this was the objective of the previous chapter also, that is overheads. This chapter also, once again you are saying the overhead, the objective of ABC is to calculate the overhead cost per unit. Why do we need two chapters doing the same objective? Now let me tell you this. Now in the previous chapter, overheads, absorption costing system, that is traditional, it's called as a traditional costing system, right? ABC is basically your modern way of dealing with overheads. It's a modern costing system. In overheads, what we did, first we had items of overheads, correct? We have multiple line items of overheads. Now what we did, first we did a primary distribution, that is we distributed the overheads to all departments, P1, P2, P3, S1, S2 and all we did, right? Then what we did, this production, the service department overheads were redistributed back to the production departments. That was actually done under the secondary distribution. At the end of secondary distribution, you had only P1, P2, P3 and all, right? And finally, we did something called as absorption and we calculated the overhead cost per unit of A, B, C, D, etc. the products. Clear with this? This is what we did. This is what we did. Correct, guys? Now, this chapter ABC says the starting point for this chapter is also line items of overheads. The destination of this chapter is also to calculate the overhead cost per unit of every product that the company is manufacturing. What this chapter says is, we are agreeing with the starting point, we are agreeing with your ending point, but we do not accept the journey that you are doing, that is your primary distribution, secondary distribution. This journey has a huge flaw in it. It has a huge flaw in it. What is it? Is what we are going to study here in ABC. Clear with this, guys? Not much of any discussions, any intricate discussions like under absorption, over absorption. No, the route alone, how it should be different is what we are going to learn here in ABC. Clear with this, guys? Now, first in our traditional costing, the previous chapter overheads, what we saw was there are line items of expenses like your factory rent, right? You had your factory rent, your supervisor's salary, you had your repairs and maintenance, you had your depreciation, and so on. It just went on. Now what we did, we apportioned each of these line items to all the department cost, all the departments. Correct, guys? Now why did we do that? Because we did it because we said overheads was telling us that, look, the reason why you are incurring the cost is because you have these departments, right? So apportion all your cost to each of these departments. So now because you are incurring these costs for the departments only. Are you clear with this? This was the logic given by what? Given by overheads. Now this is where your ABC clearly disagrees. It says, look, you are not incurring overheads, or you are not incurring these expenses because you are having the department. You are incurring overheads because of the activities happening inside every department. I'm repeating. ABC says the presence of this department, P1, okay, then it means you are going to incur some expense. No. P2, expense. No. The presence of the department is not the reason for you to incur expense. There are activities that are getting done in under every single department. It is the activity because of which the cost is being incurred. Or in other words, ABC says, because you have activities, right, it results in consumption of resources, and consumption of resources results in incurrence of costs, and hence apportioning the cost to the departments by giving a justification that the presence of department is the reason why I'm incurring the cost is absolutely incorrect, right? Ultimately, we are also going to find out only the overhead cost per unit, but the manner in which we are going to do, we are not going to route it through departments. Instead, we are going to route it through activities. That is what ABC is saying. Are you clear with this, guys? Are you clear with this, guys? Right. Now, what does ABC say? What does ABC say? Now, look at this. Look at this. We saw one previous example, right? Wherein we saw the concept of your blanket overhead rate versus departmental rate. Guys, yes, you guys remember this, right? Now, there we saw clearly that a departmental rate is much superior and better than a blanket overhead rate. Why? One of the reasons we saw was, right, if I am using a departmental rate, I have the flexibility to choose the base quantity which is more relevant for that department. Correct, guys? Guys, please reciprocate. Yes, you guys are following here, right? In other words, here, if P1 is a machining department, it makes more sense to apportion the P1 department cost using machine hours, right? If P2 is actually a labor department, an assembly department, it makes more sense to apportion P2 department overheads using labor hours. Clear with this, guys, right? So we saw that our departmental rate is much better than your blanket rate. Now ABC says even that departmental rate is also not correct. Why? Let me give you an example. Now what happens is, let us say I have a factory. So let us say we are using departmental overheads only, right? Let us say there is one department P1, there is one department P2, there is one department P3, right? Now P1, let us say, is a machining department. Okay. Now what happens? Let us say the machining department's overhead cost was 1 lakh rupees. I'm just talking about this single department, right? Blanket rate anyways is bad. No, we saw in overhead chapter the departmental rate is better. But ABC is further saying, wait, departmental rate is also not correct. Why? If you are using departmental rate, what will you do? This 1 lakh rupees, right? You will divide it by the machine hours spent in this department, arrive at the machine hour rate, use that as an absorption rate. Correct? Yes. Now they are saying, wait, don't blindly go based on department, further dig deep into this. Now in this P1 machining department, there are actually 3 activities happening. Okay. One activity, the first activity is called as machine running activity. Then you have one more activity called as setup activity. Then you have something called as inspection activity, right? Now they have found out that yes, in department P1 there are actually 3 activities that are happening, and the machine running activity, right, is actually incurring a cost of 60,000 rupees. The setup activity is actually incurring a cost of 15,000 rupees, and the inspection activity is incurring a cost of 25,000 rupees. Or in other words, the breakup of this 1 lakh is further broken down into activity wise. Are you clear with this, guys? Now, if you see, it will all make sense. Now, what has happened? Departmental rate was actually absorbing the entire 1 lakh rupees by taking machine hours as the base quantity. But technically speaking, if it is now broken down into multiple activities level, now you can see that only 60,000 rupees is driven by machine hours. Correct? Only 60,000 rupees is driven by machine hours. Setup activity cost of 15,000 rupees is driven by some other cost driver. Maybe that could be the number of setups. What do you mean by a setup activity? Let us say I'm starting a class. I'm doing a class here right now. Okay, right? Now, the moment I start a class, right, I need, before the start of the class, I need the setup to be done. The camera should be turned on, the light should be turned on, and all these recordings and all these streamings, everything should be done. Correct? Now, let us say that I am going to take a class for 2 hours, right? Let us say I'm going to take a class for 2 hours, right? On day 1. On day 2, let us say I'm going to take a class for 8 hours. Now you tell me whether I'm taking a class for 2 hours or I'm going to take a class for 8 hours, the setup cost or the setup activity will remain the same. Correct, guys? Or in other words, this setup cost or the setup activity cost is not driven by the number of hours, it is driven by the number of times I do the setup activity. Clear? So this 15,000 rupees is driven by a completely different cost driver. Are you clear with this? And this inspection, it has nothing to do with my machine hours. This inspection activity maybe is driven by the number of inspections carried out. Are you clear with this? So technically speaking, what activity based costing says is, look, even your departmental rate is wrong. It says if the name of the department is machining department, absorb everything based on machine hours. No, further break it down into activity level, activity wise find out what is the factor that drives the cost, keep that as the base quantity to arrive at your absorption rate. Are you clear with this, guys? Are you clear with this? That's why here we don't actually use departments as the basis for actually apportioning the cost. We further break it down into activity, and activity wise we find out the factor that drives the cost, right? And now it makes more sense because now the manner of apportionment will be much more meaningful. Are you clear with this, guys? Are you clear with this? This is exactly what ABC says. So what they are saying is, first list out the activities, right, and find out the activity wise cost, right? That activity wise cost is called as a cost pool. Pool means what? Collecting things together. It's called a pool. Clear with this? So activity cost pool means the activity, that particular activity's amount, cost amount that you're incurring. Clear with this? Then find out the cost driver, that is nothing but your base quantity, right? And arrive at your cost driver rate. This is nothing but the absorption rate that we saw there. Are you clear with this? Now, if you do it like this, it is going to be a much more meaningful manner of apportioning your indirect cost to the products. Are you clear with this, guys? This is all ABC says. That's about it. ABC chapter is over. That's all. Now, let us go and do the numerical problems. You will see it by yourself. Clear with this, guys? And of course, the terminologies alone will be slightly different. There, whatever we call as department, here these guys call it as activity. There, what we call as base quantity, here it's being called as cost driver quantity. There, what we call as absorption rate, here it's called as a cost driver rate. There, what was called as a departmental overhead, here we call it as a cost pool. That is the particular activity's cost amount. Are you clear with this? These are some basic differences, but for that everything else is the same, and this is going to be a very structured and an easy chapter of all. Are you clear with this, guys? Every attempt they are testing for about 10 marks. ABC and overheads put together, short 10 marks, At times I've even seen 15-20 marks coming for these two chapters put together. So this is going to be a huge coverage, right? This is all about it. Sir, that's all, sir. Why is it why people say it's difficult? After finishing overheads, now if you see this, it is going to be easy because the base for this chapter is actually overheads. The flaws of overheads chapter are getting fixed under this particular chapter. Clear with this, guys? So now let's move on. Let's move on directly to a numerical problem. Look at this illustration. KD Limited is following an ABC costing system. The budget overheads, the cost drivers and the volumes are as follows. Now look at this. Instead of departments, they have mentioned the activities, right? Material procurement activity, your material handling activity, your maintenance activity, setup activity, quality control, right? They have listed the activities. Each of the activity, how much is the cost incurred? That amount is called as cost pool. Learn the terminologies, right? The cost pool is given. Now they've also given the cost driver. What do you mean by a cost driver? The factor that drives that particular activity's cost. This is nothing but the base quantity. So material procurement activity is driven by what? Number of orders. Clear with this. Material handling driven by the number of movement. Maintenance hours. Setup, number of setups. Quality control, number of inspection. Clear with this. Now they have also given the cost driver quantity. This is nothing but the base quantity. The values are given. Totally in this particular year, 1200 orders were there, 1240 movements were there. So 17550 maintenance hours, 1450 setups and 1820 inspections were there. Clear with this, guys? These are all given. The company has produced a batch of 7600 units. Its material cost was 24,62,000 and wages were 4,68,500. Right? The prime cost components are given. Usage activities of the said batch are as follows. So now this is all these cost drivers are for a year. Now what have they said here? One particular batch, they have given the data. So material orders were 56, 84 material movements were done, 1420 maintenance hours, 60 setups and 18 inspections. You are required to calculate the cost driver rates and calculate the total and the unit cost of the particular batch. Now guys, very simple. Now it's a 3-step procedure, rather I would say a 2-step procedure in ABC. First, you need to calculate the cost driver rate. This is similar to what? Absorption rate. Now what will you do here? List out the activities, right? Now what is going to be your total activity wise cost pool? You take that divided by the total cost drivers for the year. You take it. Now you will arrive at the cost driver rate. Cost driver rate will be what? In this case, for every order, the material procurement cost is 1535. Material handling activity, per movement, the cost is so much. Maintenance, per maintenance hour, it is so much. Per setup, the setup cost is so much. Per inspection, the quality control cost is so much. Like this, you will arrive at the respective cost driver rates. Are you clear with this? Now what will you do? So they have given us that, look at this, for a particular batch, the batch size is how much? For a particular batch with a batch size of 7600 units, they have given the material cost and the wages cost. So now look at this, the material and the wages cost are given. And I think the batch size is 7600. Okay, 7600 units of a particular batch. So now material labor, this is given. Overheads, how will you calculate? This batch has consumed 56 orders, 84 movements, 1420 maintenance hours, 60 setup hours and 18 inspections. So what you need to do is take the respective cost driver quantity consumed and multiply it with the respective cost driver rate we just found out here. You marry the figures. That's about it. That is nothing but absorption rate into base quantity consumed. Here you call it as cost driver rate into cost driver quantity consumed. You just do it. So now what you will get is, you will get the product wise total for this batch. What is the total cost divided by the number of units? You will be arriving at the total cost per unit. Are you clear with this, guys? Anyways, this is the objective of this chapter also. Are you clear with this? The only difference is what? Instead of using departments as the base, here we used what? Activities as the base. Are you clear with this? Now there are a few lines of differences between your traditional overhead costing system, I'm calling it as TCS, traditional costing system, and ABC. There under the traditional costing system, what was called as departments, here it's called as activities. There what was called as departmental overheads, here is called as activity cost pool. Then what was called as absorption rate is here called as cost driver rate, and what was called there as base quantity here is called as cost driver quantity. This is all the difference between your traditional costing system overheads chapter and ABC, but for that everything else is the same. Guys, are you clear with this, guys? Are you clear with this? But it's equally important. It's equally important, no doubt it's important, because generally ABC sums will be big, solution will be simple. Why is it big? Because they need to necessarily give you a lot of data. Clear with this, guys? Done? Right? Now let's do one numerical problem here. That's about the chapter actually. That's about the chapter. Now let's do a numerical problem here. ABC Limited manufactures two types of machinery, equipment Y and equipment Z, and applies or absorbs the overheads on the basis of direct labor hour. Presently, they are using the traditional costing system. They are taking the direct labor hour as the base quantity. The budgeted overheads and the direct labor hours for the month of December are 12,42,500 and 20,000 hours respectively, right? So with this, you can calculate the predetermined rate. This is as per the traditional system. The information about the company's products is given as follows. So equipment Y and equipment Z, the budgeted volume is given, the number of units of Y and Z produced, the direct material cost is given per unit, right? The direct labor costs. So every unit of Y takes 3 hours to complete, and every hour of Y is going to take what? And every hour is being paid at the rate of 150. So it's going to be 450 rupees. And every hour, every unit of Z takes 4 hours, and every hour is paid at an hourly rate of 150. So 4 into 150, 600 rupees is the labor cost per unit of Z. Now, ABC's limited overhead of 12,42,500. What is this figure? The total overheads that we had. Now they are breaking it. It's been identified with three major activities: order processing 2,10,000, machine processing 8,75,000, product inspection 157,500. Now they have broken it down into multiple activities. These activities are driven by the number of orders processed. That is, your orders processing is going to be driven by the number of orders processed, your machine processing based on your machine hours, and your product inspection on the basis of inspection hours. The data are given below. Total number of orders processed 600. Out of that, 350 were the orders processed for Y, and 250 were the orders processed for Z. Similarly, machine hours work total is given, and product wise breakup is also given. Inspection hours total is given, product wise breakup is also given. Right now, required number 1, assuming the use of direct labor hours to absorb or apply the overheads to production, compute the unit manufacturing cost of equipment Y and Z if the budgeted manufacturing volume is attained. Now, using the traditional costing system, you calculate the absorption rate and all, charge it to the product, and arrive at the total cost of the product. This is what they have asked for. Now, that's pretty much simple. We know that the direct material cost is given, direct labor cost is given. Now, how do you arrive at the overhead rate? Very simple. So in the traditional system, it's going to be budgeted overheads divided by budgeted hours, 12,42,500 divided by 20,000 hours. So how much is that going to be? That is going to be 62.125 rupees per hour. This is the absorption rate. Correct, guys? Right? Now, we know that, yes, product Y, that is equipment Y, took 3 hours and equipment Z took 4 hours, right? So we just need to multiply it here. So equipment Y took 3 hours. So it's going to be 3 into 62.125, and equipment Z took 4 hours. 4 into 62.125. So product wise, what is the overhead cost? 3 into 62.125, that gives you 186.38 rounded off. And similarly here, it's 4 into 62.125, that gives you how much? Roughly, I think they have retained the decimals here. It comes out to 248.5. Now, it's pretty much simple. What they have done, they have taken an absorption rate, maybe in this case even a blanket rate they have taken, and charge it off the products. Are you clear with this, guys? So with this, you've got what? The equipment Y and equipment Z's total cost, you have arrived at it. Clear with this, guys? Clear with this, guys? Now, this is based on what? This is based on your traditional costing system. Next, suppose now they are using this ABC system. Now, what will happen here under the ABC system? Look at this. Under the ABC system, the total overheads is now broken up into 3 different activities. So now we have the activity cost pool, and the activity wise we know what is the total activity cost driver consumed. So you divide the two, you can arrive at the cost driver rate. So now I told you guys that the activity based costing system, that's a two-step approach that we need to follow here. So first you break it down into activity. This overhead cost ideally is called as cost pool. So now I have the activity wise how much is the cost, right? And what is the activity wise cost driver quantity? 600, 50,000, 15,000. I have this here. These are given in the questions, 600, 50,000 and 15,000. So whatever is the cost driver that drives the respective cost, that drives the respective activity that I need to take, and I have arrived at the cost driver rate here. So it's going to be 350 rupees per order processed. This is going to be 17.5 per machine process. And here it's going to be 10.5 rupees per inspection hour. Are you clear with this? So now that I've got the cost driver rate, what will I do now? Now under the ABC system, anyways, my direct material, direct labor, the prime cost components and all will not change whether I follow traditional costing or my ABC, because the traditional costing, overhead costing and your ABC deals only with the overhead component. They don't deal with the prime cost component. Now in this case, what happens here is, so now first you have the three products here. You have the three activities: order processing, machine processing and inspection here. Now look at this. So now what do you do here? First, you just have to marry the figures. With respect to order processing, the cost driver rate is how much? 350 rupees. 350 rupees. Now, I have 350 orders for Y and 250 orders for Z. So here it's going to be, right, 350 orders into 350 rupees. That gives you how much? 1,22,500. 250 orders into 350 rupees, that gives me 87,500. That is the cost driver rate multiplied with the cost driver quantity consumed for the respective product. If I do automatically, I will be getting what? I will be getting my respective share of the overheads for the respective products. Similarly, machine processing activity, if you see, what is the cost driver rate? 17.5 rupees. So I have the 17.5 rupees here. Multiply it with the respective machine hours taken by the products. Each of the products took how much? 23,000 and 27,000 respectively. So you just need to multiply it here. So 23,000 and 27,000. So this is going to be 23,000 hours into 17.5. This is going to be 27,000 hours into 17.5. Are you clear with this? This is going to be the respective calculation. Are you clear with this, guys? Are you all clear with this? Similarly, for inspection, per inspection hour, it's going to be 10.5. And how many inspection hours we spend for the respective products? 4,000 and 11,000 respectively. So it's going to be 10.5 rupees into 4,000, 10.5 rupees into 11,000. I'll get these figures. So now we've got what? The overhead cost for each of these two products as well. So now what do we do? Divided by respectively by the number of units, you will get the total cost on a per unit level. You will get the total cost on a per unit level. As simple as that. Guys, this is not a very intricate or a difficult calculation and all. Basically everything is the same. Instead of calling it as an absorption rate, I call it as a cost driver rate. Instead of calling it as a base quantity, I call it as a cost driver quantity, and I just charge it off to my products. Are you all clear with this, guys? Don't think that this is something else. This is very, very simple. The issue only is here you need to understand why we are doing ABC. Once you know that, it is going to be a cakewalk, and as simple as that. Clear with this? Done, guys? Are you all done? Are you all able to understand this? Right? What is the next part of the question? ABC Limited's selling price are heavily based on costs. By using the direct labor hours as an application base, calculate the amount of cost distortion that is under or over costed for each of the equipment. Now what they are saying. Now look at this. If I follow the traditional costing system, what is the cost per unit? For Y it is 936.38. For Z it is 1298.5. Whereas if I follow the correct ABC system, the per unit cost is changing, correct? So now what we need to do is look at this. If I am following the traditional costing system, this will be the respective cost per unit. If I am following the ABC system, this will be the respective cost per unit. Ideally speaking, which is correct? ABC is correct, but currently the company is following what? Direct labor hour as the basis of apportioning your indirect cost. So now ideally every unit should have been costed at 976.8, but they are wrongly costing it at just 936.38. What has happened? The cost distortion is the product Y is being undercosted to the extent of 40.42 rupees. Are you clear with this? Similarly, for equipment Z, presently they are valuing it, or they are costing it at 1298.5, but ideally speaking it should have been valued at 1266.16. The difference is what? They are overvaluing it by 32.34. Are you clear with this? Both undervaluing and overvaluing, that is both undercosting as well as overcosting, are bad. You need to use the right methodology of costing. So look at this, the low volume product Y is undercosted and the high volume product Z is overcosted using the direct labor hours for absorption, overhead absorption. See, a wrong methodology of absorbing your overheads will lead to a wrong selling price fixation, which will result in a huge failure of the business itself. Now, honestly, guys, this is the reason why many startups fail. What they do is, the moment they see little amount of money, they spend a lot in a lavish office and all that, without knowing that all these office are overheads. It needs to be properly apportioned. It needs to enter into the product properly and unitized properly. Based on that, the selling price needs to be fixed. They don't even know that the market is ready to pay that much. If they take all these costs and add it onto the product, now what will happen? The market will not be ready to pay, because your price will be more. The competitors will be fixing a price which is nominal. Right now, no one will come and buy it from you. Your business will crash. This is the reason ABC is actually a game changer in the industry, because for every activity it is showing you the driver. Right now, if you want to reduce the particular activity cost, you can just go and reduce the cost driver. That's all. Clear with this? So there is a direct relationship between the cost driver and the cost pool. If you want to reduce a particular activity cost, go and control your cost driver. Are you clear with this, guys? Are you clear with this? So for example, right, in your real day life, you can use ABC and all. For example, if you are a student who is attending a face-to-face lecture, right, your cost driver will be number of lectures held, not the number of hours. Because you will say, sir, every day if you keep totally, let us say I'm planning for a 100-hour session. Example, I'm telling you, if I every day keep a 2-hour session, so I will be conducting the class 50 times. Correct? Which means you need to come and go for 50 times. Your cost is driven by the number of visits or the number of lectures. Correct? If you are a face-to-face student, because every time you come and go, you will be incurring transportation costs. Correct? That you only need to bear. Yes, guys. Whereas if you are an online student, you will not be bothered about the number of lectures. You will only be bothered about the hours. Why? Because 100 hours you are watching a lecture, right? Accordingly, you need to be incurring some electricity cost, obviously some basic light, or you'll be using a system for that, some electricity cost that is driven by the duration, not by the number of lectures. Clear with this? So for you, the cost driver, you will be driven by the number of hours, the duration. Whereas a person who is attending a face-to-face, he will not be bothered much about the duration. He will only be bothered about the number of lectures. He will say, sir, this 100 hours, sir, you finish off in 10 days. 10 days per day, 10 hours you take, finish off. He will be happy. Are you clear with this? Are you clear with this, guys? Even in real life, you can use ABC in order to control your cost. Simple. You just list out all the costs that you are incurring, right? Break it down into activities. Obviously, you will know for this activity, this is the cost driver. You will be able to easily find out based on that. If you want to reduce your overall monthly expense, what you need to do is put an activity-based costing budget, right? And then you just try to reduce your activity cost drivers, the factors that drive the cost. Automatically, your cost, at least to some extent, can be controlled, or at least you will know where you're spending your money. Clear with this, guys? That is about this particular question. And there's one more question which is quite unique. I just wanted to share this with you as well because it's there in the study material. MST Limited has collected the following data for its 2 activities. It calculates the activity cost driver rates based on the cost driver capacity. Now look at this: power and quality inspections. Power and quality inspections. These are the 2 activities. They are driven by kilowatt hour and number of inspections respectively. So this is not kilowatt hours. This is cost driver quantity. So there are 50,000 kilowatt hours budgeted and 10,000 inspections budgeted, and the cost pool is 2 lakh and 3 lakh respectively. The company makes 3 products, M, S and T. For the year ended 31st of March, the following consumption of cost drivers were reported. Now what they have done, product wise, they have given the total kilowatt hours consumed and the total quality inspections done. Are you clear with this? Now compute the costs allocated to each of the product from each of the activity. Now first, what will you do? You will calculate the cost driver rate. How will you find out the cost driver rate? The respective cost pool divided by the cost driver quantity, the budgeted cost driver quantity. See, the concepts of your absorption costing remains the same. Here also you can work only on your budgeted data, because costing can't wait till the year end. So here also it is budgeted cost pool divided by budgeted cost driver quantity only. Are you clear with this? So here what we will do, we will arrive at the respective cost driver rate, multiply that with the actual cost driver quantity consumed. You will be able to apportion your overheads to the products. Now look at this here. Now you have the respective products M, S and T. Okay, fine. First, the cost driver rate is 2 lakhs divided by 50,000. This is 4 rupees per kilowatt hour. Quality inspection is 3 lakh divided by 10,000, 30 rupees per inspection. This is nothing but the data that they have given on the top, the first dabba. So 2 lakh divided by 50,000 and 3 lakh divided by 10,000. You arrive at the cost driver rate. What will you do now? Multiply it with the respective cost driver quantities consumed. Clear with this, guys? So now what will we do here? With respect to the power activity, right? So product M consumed 10,000 kilowatt of hours, product S consumed 20,000 and product T consumed 15,000. Multiply it with 4 rupees, because for every kilowatt hour consumed, the overhead charge is going to be 4 rupees. So you will get a share of 40,000, 80,000, 60,000. So at the end of the year, if you see actual overhead charge is how much? It's going to be 1,80,000 rupees. Similarly for QC, the quality control, how much is that going to be? 30 rupees per inspection. Now product wise, they have given us that 3,500 rupees, 3,500 inspections were carried out for product M, 2,500 for S and 3,000 for T. Multiply the respective inspections with the 30 rupee of cost driver rate. You will arrive at the product wise share of quality inspection cost. If you add up, you get the overheads absorbed to the extent of 2,70,000 using the concept of ABC. Clear with this, guys? This is what they've asked in the first part of the question. Number 2, calculate the cost of unused capacity. This is nothing but your under or over absorption using ABC. Now what I had budgeted a cost of 2 lakh rupees for power, but what I had actually absorbed using ABC, I absorbed only 1,80,000. Guys, correct? Yes. So here the difference between the two is going to be what? 20,000 rupees. This is nothing but the unused capacity or unabsorbed overheads. Clear with this? Similarly for the quality inspection, I was planning to incur how much? 3 lakh, but I actually ended up consuming only or absorbing only 2,70,000. So here again there is an unused capacity to the extent of 30,000 rupees. Add the two, the total value of unused capacity is going to be 50,000 rupees. Are you clear with this, guys? Are you clear with this? Right? This chapter is, that's all. It's very simple. It's an extended arm of your overheads chapter. Do not see this as a separate chapter. That's what I would suggest. And this chapter is in fact much more logical and it's much more practical as compared to your overhead chapter. Clear with this, guys? Are you all able to follow this? Any issues here? Right? That is all about this concept of activity based costing, right? And with this, we have also completed this chapter. Remember one thing, there is a two-step process in your ABC, all the sums. The first step is calculating your cost driver rate. The second one is charging your overheads to the respective products. So the terminologies alone are different, but for that, everything else is going to be the same. So that's what I said. Even in this chapter, the objective is to calculate the overhead cost per unit, right? It is same as the previous chapter of overheads. The only difference is the journey that it takes. There we did it based on departments. Here we are doing it based on activities. Are you clear with this, guys? With this, we have completed this particular chapter called as ABC as well. Right, guys? Done. So now we are done for the day. So I think it's I hope it was useful as of now. I think we have done about 6.5 hours effectively, much more than that. I think the total time of recording is coming up to around 8.5 hours today. That's huge. Anyways, right, guys, done. You guys found it useful? Yes, right, guys? Perfect. So now tomorrow we will be doing the two chapters, the next two important chapters, your marginal costing and your process costing, two very important chapters. Now marginal costing and all, I generally take about 30 hours in my regular lectures. Now I'm going to condense it and I'm going to do it. Definitely there will be a value addition for sure. Now please take running notes, participate. That's when it's going to be much beneficial for you, right? I am not going to get anything out of this. It's all for you. Clear with this? Try to make the maximum use of it. Clear with this, guys? Clear with this? So with this, I'm concluding today's session. I will see you all tomorrow with the two heavyweight chapters, marginal costing and process costing. If some of your friends, they are planning to attend marginal costing and process costing, please tell them that it's going to be happening tomorrow. Clear with this, guys? Fine. So thank you all so much and have a great day ahead. I can't say. Whatever is left out of the day, you have a great time ahead. Thank you, guys. Thank you so much. Okay, thank you, Anil. Thank you, Gokila. Yes, Shaila, Fatima, thank you. Smurti, Vaishnavi, thank you. Thank you, guys. Thank you so much. Thank you. Yes, Aishwarya. Thank you. Looks like I'm taking a roll call here. Okay. Done, guys. Okay. Thank you all. Thank you so much. Bye-bye.